a life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up.
Very good morning. You're watching India Market Open and it's setting out to be an exciting week, folks. Will he, won't he? To what extent will he? Trump and tariffs, I think, is what is going to move things globally.
Absolutely. And I think there's so much uncertainty at this point that that's just being absorbed. And there's so much actually sideways movement in the global markets. The Indian equity markets is a standout.
Yeah.
And we haven't been able to say that very often this year.
Yeah,
absolutely. I mean, the best week in over 4 years is what we hit in terms of Friday's session,
for the
right?
Nifty 50.
Absolutely. And with this, if you see, clearly this is the first time in 2025 where Nifty bulls have taken over the lead throughout the week. So there is that positive momentum, and as Tamanna was mentioning, whether Trump will or will he not. I mean, reciprocal tariffs is the key from here on. But in spite of that, you have Asian markets, Tam, which are, trading in the positive.
Yeah, and I think the sense also coming in that from the Indian perspective, it won't be too bad. So let's pull up the implied open before I get to the global setup, nearly 100 points up. And so that is looking positive. We'll get you a breakdown of what is going to be the tariff impact, if at all, and on how many companies. But the global setup was also halfway decent, I would say. Friday's trade ended in the green. A volatile session though. Dow was barely 30 points up. All eyes are now on the announcements of tariffs, so as the April 2nd deadline looms. So that becomes important. Dow futures, though, about 0.5% up. Treasury yields ticked higher ahead of a data-heavy week. The 10-year was at 4.25%. Key data that we'll expect this week from the US, and which is going to be crucial for the US markets, includes home sales, GDP, inflation. The PCE data will come in at the end of this week, so all of that becomes important. Brent has been staying, crude has been staying on the higher side. Brent above the $72 mark as Iran sanctions have added pressure. Crude has come off a bit in the last few hours. Asian markets opened lower ahead of the reciprocal tariff threat, but seem to be recovering. A bit of a mix there as far as Asian markets are concerned. But India on its own beat right now, and I think that's what's becoming very, very important heading into this week because of the March series, I suppose. Will the recovery sustain? All of those questions becoming crucial more than anything else. But before we head there, let's just take you through what Donald Trump is saying. Now, this is the latest, and it gives you the perfect picture of the confusion that he plans to impose tariffs, but he says he can always change his mind.
Well, people are coming to me and talking about tariffs, and a lot of people are asking me if they could have exceptions. And once you do that for one, you have to do that for all. So, I mean, generally, I did something interestingly during 2 weeks ago. I gave the American car companies a break because it would have been unfair if I didn't. And everybody said, oh, he changed his mind on tariffs. I didn't change my mind. I helped our, sort of big three, big four. I helped some of the American companies. And instead of taking it properly, they said, oh, he changed it. I don't change, but the word flexibility is an important word. Sometimes there's flexibility, so there'll be flexibility. But basically, it's reciprocal.
Okay, So I didn't change my mind. I helped them out, and it's reciprocal. So sometime between now and April 2nd, we'll have to wait and see. But very quickly, what you need to expect for the week. You're heading into an expiry week for the March series. The big question is, will the recovery sustain? And of course, Hiral and Alex will weigh in on it. The Nifty, of course, registered its best weekly gain. The index is now between 23,400 and 23,500 resistance zone. So that becomes an important band to look at. FIIs were net buyers. We had a fantastic FII figure in Friday's trade, but most of those inflows were due to passive inflows. So that needs to be remembered as well. Stocks that were previously oversold are now seeing fresh buying interest. Over 80% of the market continues to trade below the 200 DMA versus 86% last week. And a decisive move above the resistance zone could trigger a rally towards, dare we say it, 23,800. After last week, it seems like it might just be possible.
Yeah, the best week in 4 years, as Hiral pointed out, as you pointed out. But let's talk a bit, instead of focusing only on what happened on Friday, I thought let's look back at the week, because it's been a fantastic week. Of course, on Friday, you had a buy figure for foreign institutional investors, the largest in this year, to the extent of 7,470 crore rupees. But look at what they did through the week, right? So you had Friday, which was a buy figure, Thursday, which was also a buy figure, Monday they sold, and cumulatively for the week as a whole, you had a buy number of 5,819 crore rupees, which is the first time since December of 2024 that you're seeing a weekly inflow for foreign institutional investors. Look at what the Nifty 50 did and why it's the best trading week for the Nifty 50 in 4 years, 4.3% higher. The Nifty Next 50 gaining even more than that, 6.6%, and the broader markets really caught fire over the course of this the weekend. You had the mid-cap index gaining about 7.3%, 8.1% for the small-cap index as well. The global context here is important to pay attention to, and what we were referring to at the start. The Indian equity market standing alone here. The MSCI World Equity Index snapped a 4-week losing streak but gained only about 0.7% or thereabouts. You had the S&P 500, which rose about 0.5% or so, and the Nasdaq gained just about 0.2%. European stocks had their best week in 5 weeks, meanwhile, gaining as much as 1%, but not even close to that over 4% gain for the Nifty 50. What happened on Friday? The Nifty 50 gained about 0.7%, ended at 23,350. It is still less than 10% above its 52-week low, but just there, just about 9.7 odd percent above its 52-week low. ICICI Bank, Kotak Bank, HDFC Bank, Reliance Industries, Bharti Airtel, very large companies saw very strong delivery buying. So that's perhaps where foreign institutions deployed funds over the course of Friday's session. Broader markets outperformed yet again. The Nifty mid-cap index gaining about 1.3%, and the small-cap index going home with gains of about 2.1%. Important to note, foreign institution buying usually reflects in the Nifty Bank, and that gained about 1%, led by ICICI Bank, Kotak Mahindra Bank. All the major indices except for metal gained. Media, oil and gas, energy, PSU banks all outperformed.
Absolutely. And with this, to add from what Tamanna and you've said, Friday session, why it was important is because the handover that we got from the global markets was really subdued. And in spite of that subdued handover, we did not see any selling pressure. So that's a positive coming in for our markets as well. But overall, what's happening currently is where the dips are being bought into with no major selling happening at higher levels. The valuations, if you talk about Nifty as well as individual stocks, we are much cheaper as compared to the last 4 months as well. So that is what is making the markets pretty attractive. Now the key question again comes up over here is that is the recovery sustainable, or is it that the markets are actually witnessing another bull trap? I'm sure everyone's hoping for the first part, wherein the recovery should be sustainable from here on. But from there on, the Bank Nifty, which is now nearing the 51,000 mark. Now, if it crosses 51,000, then it will push Bank Nifty as well back into the positive territory. So this is going to be a crucial number that we should be watching out for. Analysts are recommending buy on dips, and they're saying that do not chase momentum and remain pretty much selective. And the expectation that the recent market downturn has bottomed out is what they are sitting on. secondly, the FI buying is what is coming in as a support as well for the Indian markets. Now, apart from this, you have the tariff anxiety, which probably could cap some bit of an upside in the global markets. And till the 2nd of April, you could see some bit of muted moves, but this is going to be an event we should be watching out for. Experts are also divided on the trajectory because some are believing that the market probably already reached a bottom on the 4th of March, and that was the time when Nifty ended at levels of around 22,082. So that's one aspect that we should be watching out for. And from there, the stocks have become attractive after the recent correction. Now, what is the street watching out for? A couple of things. The upcoming earnings season for Q4 and FY25 as a whole will be watched out for, which will probably start by mid-April. You have no major domestic economic events that are scheduled this week as well. Plus, you have the March expiry and the FI activity that the street will be looking at. And as we mentioned, April 2nd is the day for Indian markets and global markets as well. But clearly, valuations are better right now for the markets. There could be some bit of froth, and hence they are saying buy on dips and be selective.
All right, but let's get a global view. Cameron Brand, Director of Research at EPFR, joins in. Cameron, good morning to you from where we're sitting. Great to speak with you. And I suppose you could help us solve the question that everyone's asking. Are we seeing FIIs reverse their trend on India after over 6 months, or is this just a one-off, more passive flows than anything else? What's your sense?
My sense is certainly that the mutual funds we track have been thinking that India is starting to get back into attractive valuation territory. What we have been seeing in recent weeks is that investors, certainly the ones that we track through the mutual fund and ETF flows, finally appear to have learned some caution. So while the news from India is positive, what we haven't seen in recent weeks is a particularly strong reaction either way. As you know, China announced a new round of stimulus initiatives, and while flows to dedicated China funds turned positive, they certainly didn't sort of turn spectacularly positive. Indonesia had considerable market turmoil in the other direction this past week. And while flows into dedicated Indonesia funds slowed, they were still faintly positive. So, the general tone, certainly of the flows we track, is sort of prove it. India was getting a bit more positive attention, and average allocations among the diversified GEM funds we track for India is actually at a record high, or was coming into March. But I think the market will sort of need to prove itself for certainly the mutual fund floodgates to really open.
Cameron, morning. Again,
morning.
From where we are. But the point that you make is well taken. But I'm just wondering, in a week that is going to be important on the data front from the US perspective, what else needs to happen, and what would happen, in your opinion, on the 2nd of April that would be negative and that would be par for the course?
I'm hard pressed to give you an answer there. To be honest, there's less attention on the data over here. It's been so topsy-turvy. And in the universe that I pay attention to, the real focus is what's going on in Europe. That's the hot story at the moment. Investors are certainly willing to take on alternative cues, but it would take quite a bit to completely convince people that the U.S. story has rolled over. And in fact, towards the end of this recent week, there was another leg up in terms of flows into U.S. equity funds. U.S. bond funds continue to attract money. So investors, certainly towards the U.S., will take some convincing, I think, to really shift out of U.S. assets.
Cameron, morning. This is Hiral on the side. So, okay, two aspects over here where we are talking about that Trump is actually dubbing the April 2nd tariff deadline as a liberation day. And it's obviously hard to ignore the downside risks because you're talking about a worst case scenario of 25% blanket tariffs if they materialize. Now, with all of this said and done, and the way FIs have acted on India in terms of the numbers that we saw last week, do you think India is then becoming an attractive bet versus the US?
I certainly think the pieces are in place. I mean, valuations have corrected after a very lengthy run up in the market, which was certainly chased by the money we track. India is historically regarded as a good play when global trade runs rough because of the larger than usual component that domestic demand plays in your economic story. It's hard to be certain about anything in this current environment, but certainly if the tariffs really come down on April 2nd and we get what might be arguably called the worst case scenario, then I think India is in as good a position as any market.
I think that's the big takeaway. Thank you so much, Cameron, for speaking with us. Always a pleasure. If tariffs do come in on April 2nd, I'm going to just recap that. India is in as good a position as any market, says Cameron Brandt, a very respected voice, especially when it comes to us trying to analyze FII flows here from India. So on that front, we're looking fairly positive. On the F&O Qs as well, things looking good this week, Puneet, as we head into monthly expiry.
Definitely, and you guys have highlighted some key points in your trade setup as well, but the Nifty's moved to its 6-week high, and it's with a 4.2% move over the last week, and this is the biggest weekly gain for the Nifty 50 since roughly February of 2021. So a very positive move coming in. We've also seen that this has been consistent with the decline that we've seen specifically in the VIX as well to a 24-week low. So definitely all indicators going towards the bullish side. Apart from that, the key resistance level going forward, the three levels will be 23,398 to watch out for. That can be taken out today. It will be important to maintain that level while also looking at 23,462 as the other level to watch out for in the future as well. Now, when you look at the some of the key stocks, because we've seen, of course, the open interest being down, but the Nifty Bank is at a very interesting juncture at the high of about 50,600, which was the resistant level before this move started a couple of weeks ago. And the next move, of course, will be 51,000 and maintaining that going forward as well. We've seen the highest open interest for the call option side at roughly about 24,000 odd levels, and the maximum interest on the put option side has been at the 23,000 level, which is with seeing the big candle there in red as well. In terms of stocks, specifically on the open interest gainer side, we have seen some long build up in Torrent Power as well as Poonawalla FinCorp, while some short build up in stocks like Sona BLW, which is potentially a tariff impactor. In terms of open interest losers, we have seen short coverings across a bunch of stocks, and we've seen stocks like Manappuram Finance, which was in focus last week after Bain acquired a significant stake. ICICI Bank also seen a lot of short coverings, and we have the note from Citi as well. So it's essentially a very strong session. If you can also pull up the implied open as well going forward, 95 points seen at the Nifty specifically, and it'll be key to watch out for if we can maintain the 23,462 odd levels in session, just a tad bit below the GIFT Nifty opening levels.
Thanks, Puneet, for that. This morning, Tamanna, Hiral, each one of us has made the point, the best Nifty 50 performance weekly over the course of 4 years. You almost had to double check the data. I'm pretty sure everybody in the newsroom also did at the end of the week. Is it really the case? And that really has been the mood so far.
Yeah, but from lows.
Yeah.
From lows, the best performance because of where
which
the
is
base
why,
started.
Which is why.
Also, the other, a big thing to note is that you have completed 5 years. March 23rd was where the 5 years was
the COVID-19 pandemic.
of the COVID-19 lows. So that's the more. Also, the interesting thing to look at, and what a time that was.
7,700.
700, yes.
7,700 and Nifty 50.
I think we have those graphics in our system.
And the kind of returns people have made from COVID to now, spectacular, specifically in terms of the broader markets, right?
Yeah.
I mean, that's where people have made their money.
Yeah.
The only reason that I brought up the COVID-19 lows is because, there you go, at markets since COVID. Is because at that time things looked so bleak for people personally, emotionally, financially, but we can only talk about the metrics that you see on your screen. And those who stuck their neck out and showed, that bravery, today are really looking at this little dip that we had for 6 months and saying, so what? So that's the only
evident.
context.
That's evident in the chart, right? What is that blip at the end out there, right? You're talking about 200% over the course of 5 years when it doesn't happen. At least on the Nifty 50, it hasn't happened so consistently, right?
Yeah. So that's interesting to remember. 5 years since, I don't know, it doesn't seem like 5 years. It seems like it went by. 5 years since the COVID-19 lows on the markets, and then of course lockdown, and the rest is history. But we made it back. Look at the market cap addition. In that time, RIL, HDFC Bank, Bharti Airtel, ICICI Bank, TCS, these are the largest market cap additions, which were the blue chips. It was the blue chips at the end of it. You also have the worst performers that we've got. And a lot of this is pain point in the last couple of years. Rajesh Exports, Yes Bank, Whirlpool, India are some of those, poor performers. PVR, Inox, I mean, one can imagine if there's a fundamental shift in something that brings your business dynamics to a close, it's COVID-19 for a PVR, and the top gainers there. 253 times on a Lloyd's metal, it's astonishing.
But just to add to that, I think there was a NCLT, IBC proceedings in terms of Lloyd's in this course of 5 years. So that's the reason why you're seeing these kind of returns that are coming in for that count overall. So, I mean, it hit, I think, absolute bottom, right? Yeah. So 253 times, that's
from
the reason.
Base. From the base looks great. Yeah. So yes, there will be individual stories, but I think moral of the story, the only point driving home is that when the going gets tough, if you hold your horses.
And for the mutual fund investor as well, right? If you were simply to invest in an SIP of the Nifty 50 or the Nifty Next 50, even better, right? You would get 15% plus compounded XIRR, which is internal rate of return, over the course of the last 5 years, comfortably. Which is the great story.
Okay, so hold in there, and that's on both ways, even when you're going down and you're going up. All right, stocks today. First one I'm talking about is IndusInd Bank, because so much news flow has continued. This is a thumbs down. So now a couple of things have happened, and let me start with the story that the street is going to watch today. On Friday, you had a Reuters report which cited 4 sources and said that the Reserve Bank of India has asked for the top 2, the VP as well as the CEO, to step down. Now, IndusInd Bank has come and refuted those reports. They've said there's no such thing. What NDTV Profit has learned is that the board will need to come up with replacements for the Chief Executive Officer, Sumant Katpalia, by October. So the lender spokesperson, however, has denied the media reports that the RBI has asked them to step down and end the tenure of the bank's CEO and deputy CEO. Deputy CEO earlier, saying that's factually incorrect. Now, among all of this, expect another thumbs down on IndusInd Bank, because you will be seeing a management move quickly, and the next relief possibly will come if there is someone on the helm of IndusInd Bank that is a name that the street likes. So, which is why watch out for that one. The second one is also a thumbs down. I'm talking about DAM Capital Advisors. The company has received an administrative warning and deficiency letter from SEBI. SEBI has advised it to be vigilant for certain operational related matters of institutional broking operations. So this is a stock which has been buzzing. I don't know if you can quickly pull up how it's done since IPO, but DAM has been in focus. The whole space has been in focus as well. So, which is why watch out for DAM Capital Advisors. Apart from this, anything to do with capital markets has been pretty decent, but since listing, DAM is about 18% down. Alembic, though, is a thumbs up. I do have a thumbs up on my list, and I'm sure these guys have many more thumbs ups to go. But Alembic is the one on my list. The US FDA has inspected a facility of theirs at Karakhadi. The inspection has been completed without any Form 483 observations. So that's important. Not a clean chit, but it's a relief definitely for them. It was conducted from 17th March to 21st March. So at a time when pharma, auto, and some metal counters will be in focus because of tariffs looming, at least some good news for Alembic.
Yeah, and what a move on Friday, 14%.
Yeah.
and it was, the interesting thing is, it was one of a basket of stocks that reacted like that, right? It was not just this one entity. But let's talk about, so in the absence of a lot of corporate updates, I have picked a few brokerage notes that have come through. One on ICICI Bank, and by the way, this is a stock that has done incredibly well last week. It has gained over 7%, and on Friday as well, it was one of the top gainers on the benchmark Nifty 50. Citi is maintaining a buy with a target price of 1600. The target price implies an upside of 19% from this point. What are they saying? They're seeing a positive net interest margin bias in the fourth quarter, and the implications of an increase in the net interest margin on the downside will be to the extent of 20 to 25 basis points from a 50 basis point hike in FY26. That's the next financial year. Unsecured stress is stabilizing, and the chunky corporate recovery is set to aid credit cost. They're saying that they see a gradual credit cost normalization in the next financial year. The loan growth is expected to be sustained. And this is an important point. Unsecured lending is set to gather pace. This is important from the perspective of a bank, a private sector bank, very large one, that has over half of its book that is in the retail space. The second one is Macquarie on NTPC. It has maintained and outperformed with a target price of 475. That implies a significant upside of as much as 35%. What are they saying? They say that it remains a compelling play on India's power demand potential, and the pickup in power demand continues to bode well for sentiment. It has upgraded NTPC's thermal pipeline, and it says that the upgrade to NTPC's thermal pipeline cannot be fully ruled out. And they're also saying that the clarity on the next long-term driver, which is nuclear, should emerge over the course of the next 6 months. The last stock is Ajanta Pharma, and this is an initiation of coverage by Axis Cap on the company. It's initiated with an ad and a target price of 3,050. It says that the strong India business will further drive momentum with the addition of 2 more therapies. Asia and Africa branded business is also lending consistency to this company. The US market is steady but unspectacular. It is a debt-free balance sheet, which is also attractive, and the strong free cash flow generation as well as ROCE is set to continue. The revenue, EBITDA and PAT growth is seen as at 11%, 14% and 16% over the course of the next 3 financial years, culminating in FY28.
I mean, these are interesting names to watch out for. Even the real estate space, which has actually been a downer this time around, right? 2025, we've started on a weak note. Now, there is some bit of positive momentum that's picking up there, because if you look at a Godrej Properties, you pull up that one on the screens, and now they've actually acquired a 10-acre land in Bangalore, and they're saying they're eyeing a revenue potential of almost 2,500 odd crores. The stock ended with gains of nearly 1.5% to 2% at the day's highs on Friday. Now, the proposed development will have a sizable area of almost around 1.5 million square feet and will offer homes in various configurations catering to different segments of home buyers. So that's going to be one of the positives that you should be watching out for. And clearly, Godrej Properties, as we know, overall is a Bombay-based company, and they've started making their footprints in the Bangalore market. I think the last project that they delivered in Bangalore was back then in 2021. So this is coming after some bit of a time period. So this is going to be a market that Godrej Properties will watch out for. So that's a thumbs up on that one. The second one on my list, which is again a thumbs up, is NCC. Now, clearly NCC, they've won an order worth 1,480 crores, and this is from Bihar Medical Services. This is again for a redevelopment project, which is a redevelopment of a college. Construction is expected to be done in the next 42 months. And if you talk about their order book, as on the 31st of December, it stood at around 55,500 odd crores. Why I like an NCC right now is because even last week, they got another 2,130 crore construction order in Amravati capital city project. And this was to build roads, drains, water supply, sewage, utility ducts for powers and ICT, as well as other facilities in Amravati. So just in a span of a week, they've bagged orders worth around 3,500 to 4,000 odd crores. So there could be positive momentum on a NCC. And the last one is a REC. Now, CLSA has come out with a report on REC, and they've maintained a high conviction outperform. They have a target price of 525. The stock's trading now at 528, so 100 rupees upside that could be seen on this counter. The tenure of the current CMD of REC has ended, and the additional charge has been given to CMD of PFC here. What they are saying is that the historical records show that the most top hires at REC have been external appointments who do 2 to 5 year tenures, and the outlook on the stock and expectations of financial performance remains intact. Any risk from a change in management should be more operational or short term. So they do not see any risks coming in here. In addition to that, you have a REC wherein they have board will be mulling a fundraising plan on the 26th of March. So the stock will be in focus, and the stock will be trading ex-dividend as well on the same day. So lots happening in and around the company. And overall, if you see in terms of the third quarter, a 23% up move is what we saw in terms of their profitability. So the performance has been stable. A lot of brokerages have been turning positive in terms of PFC as well as REC. And any pain on the back of the management rejig could be short term. 100 rupees upside is what CLSA is pointing out to.
All right. And there's more stocks, of course.
No, but I just wanted to add two bits on Godrej Properties Bangalore foray. Is that with the amount of job cuts in the IT sector and the very, very rapid adoption of AI, which is ensuring that there are more people on the bench or not all of them getting brought on, real estate prices in Bangalore and rental, especially in Bangalore, are coming down quite rapidly. So as exciting as it is as a market, there are already a lot of places there. Godrej now getting in there. That would be the only sort of fly in the ointment I would point out.
Oversaturation.
Yeah, and that whole market, the demand could collapse only because that whole market is pushed by IT jobs, and those seem to be in a bit of a funk right now.
I think the question over here from what Tamara is pointing out too is the timing of their re-entering Bangalore, because 2021 was their last project, which they delivered successfully. So the timing versus at the price that they've got the land and the price that they will have to sell. These three parameters are going to be very crucial for them.
Yeah, and obviously what level of the market that they're looking at, because luxury, ultra luxury in any case does incredibly
So Alex,
well.
what's beautiful over here is that they're looking at across segments. So they're not going to concentrate on only luxury or ultra luxury. They're going to look at probably affordable housing in one part of it. There could be
a very large plot of land.
It's a large plot, right? So they are planning to cater to 2 to 3 segments. So probably that could come in as a savior. That could be the strategy.
Yeah, let's see. Well, another set of stocks in focus are gas companies as well. And Swamit is standing by to talk to us about proposed regulatory changes for transmission tariff calculation norms. Swamit, the companies have also gone to the regulator and said that please help us out with this. Set it up for us.
Well, as gas stocks would remain in focus given the fact that PNGRB has initiated this consultation process to amend the existing pipeline tariff. Now, do remember this is a consultation process, so there will be an open house, and most likely this open house will conclude by April, and as per CLSA, the new norms or the new tariff regulations could be formalized by the quarter ending June 2025. And as per CLSA, they're expecting stocks like IGL to benefit given the fact that their operational cost could be lower post the implementation of the new tariffs, and also to some extent Mahanagar Gas could benefit because some cost benefit could come in for Mahanagar Gas as well. They are also saying that this would lead to higher pipeline tariffs for GSPL and GAIL from the current tariffs that they are incurring, and at the margin this could lead to a small hike in cost for other gas users, which are the industrial gas users. So that could be marginally negative for Gujarat Gas because that company generates most of its income from selling gas to industries. Now, as per Morgan Stanley, this proposed regulatory changes could increase the gas penetration in the country. Currently it's at around 6%, and India is aiming to increase this to around 15%, and this regulation could lead to that number going forward. As per Morgan Stanley, they are saying that this regulations are positive for transporters and upstream producers, and this will lead to normalizing returns for city gas distribution companies and for Petronet as well. They're saying that GAIL, Oil India, Reliance Industries stands to benefit the most, followed by GSPL, and they're saying that there are 4 proposed changes that could lead to higher pipeline tariffs, and hence it is most beneficial coming in for GAIL and GSPL. Now GSPL had recently also seen a cut in their pipeline tariffs, so if this new norms get implemented, then the tariffs could be on the higher side, and hence GSPL also stands to benefit. Lastly, Morgan Stanley says that they believe that the proposed changes are part of the regulatory efforts to implement the One Nation, One Grid, One Tariff framework that were proposed by the government multiple times. In fact, post this proposal that has come in by PNGRB, Citi has also come out with its note on GAIL and GSPL, where they have initiated a 90-day tactical buy on both the stocks, and they are positive on both the stocks on potential higher tariffs that could come in. Citi has a buy rating on GAIL with a target price of 265, while on GSPL they have a buy rating with a target price of 370.
Thanks, Sumit, for laying that out for us. Certainly keep an eye on these couple of stocks. Of course, they've moved quite sharply in trade last week itself. Let's bring on our guest today. We've got Kush Bora, who's joining us in studio. Kush Bora of kushbora.com, of course, and also Neerav Ashar, who's of Latin Manhala, joining us this morning. Good morning to the both of you. Kush, I'll come to you first. We saw a stellar gain last week. The question is, where do we go from here? At least at this juncture for the benchmark Nifty 50, the indications are for a positive start. But I know that at the start of last week, you were a little cautious, and you sounded out a note of caution as well. And you said, don't go whole hog into this move upwards. Have you changed your view at all, or are you still cautious?
So first of all, I would wish good morning. But if you're a Mumbai Indians fan, this is just morning as usual, right? When have we ever won the opening game of an IPL tournament, right? And that story continues. I don't know how many of you cricket fans here, but then, I don't think we should be spending time on that opening match for the Mumbai Indians. But that said, this is an odd year, and Mumbai Indians have that record of winning the IPL trophy every odd year, right? Maybe I think 2023 was an exception, right? But other than that, there is hope. So I don't
know anyone who does this odd year, even year. Acha, you've not made a connection between Mumbai Indians and the markets yet.
I was going to.
We're just waiting for that. I think now, right? Is this an odd year now for the markets?
Sometimes things are as they are.
Okay.
I just wanted to start off on that note where for the next 2 months you've got an evening pastime. If you're an investor, you've got morning pastime, NDTV Profit,
yes.
8 to 9, 8 to 3:30, 4. But then from 7:30 onwards,
it's a serious business.
Oh, super,
serious business.
Including the auctions now, right?
I was talking about the IPL.
No, I mean even the auctions, even the IPL auctions are being telecast, and some money to be made there as well for the broadcasters. So that. But to answer your question very specifically, yes, I'm still a little cautious on the market. A lot of data points will start, pointing towards very positive moves in the coming days as well. For example, I was listening to you where the FIIs have come back and how banks have obviously benefited because of that. The last week was a stellar move, and I think everyone on the panel and then some more have spoken about how stellar a week it has been in the last 4 years or so, right? What's also happened is that the falling trendline resistance, for the fall that started from September has also been taken out. So a lot of positives here. However, also one more thing to add is that the FII long positioning has gone from 15% in the late Feb series up until 32% now. However, there are a couple of points to be noted here, which is if you look at it from a monthly standpoint, we've had 5 candles of decline. And then this is the first one, which is a green candle, right? The high of February was around 23,800. Where also the 200-day moving average resides. So until that level is taken out, you might want to be a little cautious. In the near term, the PCR is again close to 1.15, 1.2, but it's hovering around that level, so that's okay. But the hourly charts are showing that you've gone into deep overbought territories. So the risk-reward ratio from here on for long positions will not be favorable. 23,500, 23,600 zones have seen call congestion. So while I do suggest that if you have a position, continue riding on to that. But any fresh position should only be considered on declines.
Okay. Follow up to that, because you have a few key benchmark heavyweights that have not necessarily participated as much as certain others. On Friday, you saw ICICI Bank. HDFC Bank had a very small move. Reliance Industries, in the larger scheme of things, has not moved as much, right? So what happens to the underlying there, especially in the context of foreign institutions perhaps coming back to the fold?
So again, one very interesting point and one very interesting observation is that the typical two favorite sectors for FIIs are IT and banking. Nice. But as we discussed last week, I think on Friday, is when I mentioned that in mid-March, up until mid-March, FIIs have sold the heaviest in the IT space, close to 7,000 crores, right? So if they're selling IT, what are they buying? They're buying banks, and hence you're seeing that extended strong move on Bank Nifty. While the likes of HDFC Bank haven't really moved as much, the fact that they are holding ground and gaining some is also very, very important for something like a Bank Nifty to move higher, where ICICI and HDFC put together contribute to 55% of the weightage. So I think that is where you would see some sort of a stability more than a further up move. So here too, the 200-day moving average resistance around the 51,000 mark will start acting up. I do believe that the momentum is strong, but the risk reward ratio from here on for a fresh trade is not really as favorable. So here too, a buy on dips would be a more prudent strategy, if you're looking to create fresh long positions.
Right. So buy on dips, I'll come back to you in terms of at what levels one should be buying. But let's also welcome in Nirav Asher from Latin Manharlal Securities. Nirav, as Kush was mentioning right now, clearly what we are seeing right now is that the dips are bought into with no major selling that's happening at higher levels from a technical perspective. Now, if you have to look at valuations, markets are much cheaper as compared to where we were 4 months ago. What would you have to say? Is this recovery sustainable, or it's just another bull trap?
Well, good morning and thank you for the invite. As far as valuations are concerned, I think if one were to look at the Nifty 50 companies, in FY24 we had an EPS of roughly around 970 to 975. It was projected to grow at around 12.5% for FY25. It has not grown at that extent, and I think for the 9-month period we've seen a growth of around 4%. So I think we are at best at around 1020, 1025. If we were to take into account a growth of another 5% for the next financial year, we end up at 1070, 1075 EPS for the Nifty 50 companies. Now, it all depends on what kind of earnings growth we are able to deliver. I'm just making an assumption of around 5%. It could be 10% as well. But it will all depend on how the economic recovery plays out, how the IT sector is able to recover, how the banking sector is able to give a fillip to growth, etc. And then, of course, we have the multiples. Typically, the multiples tend to range between 18 and 22 times. So I think if we were to assign a multiple of 22 based on a very, very positive scenario, then I think we could end up with a Nifty target of close to 23,650. And if we were on the other side, then I think we could end up at around 20,500, taking into account a multiple of 19 times. So I think it will all depend on how the news flow plays out, what kind of global factors come into play, how the domestic factors play out in the market. At the same time, I think it's very important to remember some data points. We're just doing some analysis, and we have the Nifty 50 companies where the promoter holdings is at a 22-year low. At the same time, we have Nifty 50 companies where the FPI, foreign portfolio investor holding, is at a 13-year low. So I think these are all some data points which we need to take into account at any point of time before doing our analysis. But having said that, I think at this point of time, we are seeing a good momentum in the market. Liquidity is again beginning to play out. But the same story is playing out. The same.
Nirav, what are you buying today?
I think we would be positive. I think we would be positive on the hotel space.
Okay.
We would like to look at the NBFC space and the gold loan companies in particular.
Two favorites there?
I think we would like to, Bajaj Finance is looking quite good. In the hotel space, I think Indian Hotels is looking quite good. And in the NBFC, of course, we like Manappuram.
Okay, interesting take on Manappuram, because a bit of a contra view in brokerage notes today, saying that we're not quite sure what the world's going to look like in Manappuram. Had already seen. Look at that spike. The week's also been fantastic, 7.5%.
Because there's expected to be
because
a couple of quarters and where they use the word a lot, kitchen sinking last week. Whenever there's a new management that comes through, there's a cleaning up process. There usually is a period of transition and pain. So for the short term may not look
depends
very
on
good.
how bad the kitchen sink was in the first place. So if you
how messy was it?
And how messy it was, how happy you are that someone's coming to clean it up. So I suppose taking that further. But Kush, let's get your picks. It's all about picks this morning. It's an exciting market, guys. It's an exciting market. People want to know what to buy. The appetite is back. What do you munch on?
So while the view on index is positive but slightly cautious, I mean the stock specific action has been through the roof, right? So still going with 2 longs and has to be one financial stock. So Shriram Finance, after a bit of a breather on Thursday, did well on Friday. Again, the volume action is fairly decent on this one, so you could still consider it as a buy for targets of 685, 695, 665 thereabouts being your stop loss. The second one is from the cash segment, which is Nava. The stock has seen a very good price action, but also the volume action is complementing. There is also the golden crossover coming up of the 20 and the 50-day moving average. So this move could continue up until 490, 503 kind of levels. 455 is where you place that stop loss.
Okay, top picks over there coming in from Kush. Quick word from Sony as well. Sony, very good morning. Sony Patnaik, JM Financial Services joining in. Let's get your index calls first.
Hi, good morning, everyone. Thank you for having me on the show. I think GIFT Nifty is already implying that, we'll open somewhere around the 23,500. Could be a bit of a resistance anywhere in the range between the 23,500 to 23,600, but very important to remember that this is the final expiry week of March series and rollovers will take over. So I see the range for this last week somewhere between 23,250 to 23,600. Not much of a correction. Could be some minor profit booking, but then again the structure remains a strong buy on dips. It seems that we may close comfortably above 23,000 for March series, and then the rollovers can take over for April series. I think that buy on dip structure will continue even in the next subsequent series, and stock specific action looks quite strong. Bank Nifty is something that is looking comparatively better. I think Bank Nifty can head towards a 51,500 odd levels in this week itself. It has held a very strong support towards 50,500 closing, but then I see that if it continues to hold above a 50,000 mark, it can head towards a 51,500 levels for this week.
Right, so Sony, then what would you be buying at this hour when you're saying it's going to be stock specific action that will take center stage?
So the first buy comes in CDSL, which has closed very comfortably above a 1210 mark. It is a very strong option chain breakout on a closing basis. Technically also it has closed above its 20-day exponential moving average. So one can buy CDSL towards 1215, 1210, that range, keeping a stop loss of 1180 and a target of 1260 can be seen. The second buy comes in from the IT space. Interestingly, I've seen Coforge give a very strong close above its 200-day exponential moving average. Also, it has given a good option chain breakout above the 7650 mark. So Coforge, if it's able to take out a 7750, 7760 resistance intraday today, one can buy in those levels, keeping a positional stop loss of 7600 and a target towards 8000 plus levels can be seen.
All right, so those are Sony's picks. Couple of them, CDSL as well as Coforge, to watch out for in trade today. Now, we've already discussed quite a few stocks, but let's bring you the profit watch list, things that you should watch out for in trade today. The first, of course, we've already spoken about. Godrej Properties has acquired a 10-acre parcel of land in Bengaluru, and there are a variety of projects that they will likely launch in this space. It's a very large land parcel, so watch out for it in trade today. NCC has gotten an order worth 1,480 crore rupees, and this is also a thumbs up. You have Power Mech, which is one order is worth 579 crore rupees. REC, you have a brokerage note here. CLSA sees a 22% upside in the stock. Ajanta Pharma, Axis Cap has initiated with an ad rating. The domestic business is what they're looking at very closely. NTPC, Macquarie is seeing a 35% upside for this particular stock and says that the next thing to watch out for would effectively be the nuclear update, if at all. Precision Wires has entered the copper waste recycling in Gujarat. This is also a positive development. MSTC has gotten a 2-year e-auction service contract from Coal India, and Alembic Pharma, Gujarat's Karakhadi API facility, has cleared the US FDA inspection, and quite a few pharmaceutical companies reacting positively to an all-clear chit from the US FDA.
I suppose so. Now, all right, JP Morgan has released a note detailing the impact of reciprocal taxes on India, which sectors will benefit, which sectors will feel the brunt. And, you just spoke about Alembic. So, pharma is definitely one of them. Mihika is giving us all the details. Mihika, pharma, auto and metals in focus.
Yeah, we have 3 sectors in focus that, are, in the limelight amid the reciprocal tariffs. For auto, JP Morgan says there'll be an indirect impact on the demand. For metal, there's negligible impact on earnings because of our export exposure to the US. And for pharma, the uncertainty regarding tariffs still looms. Let me start with the auto pack first. Well, the US tariffs will have an indirect demand impact, and that's the biggest worry as per the brokerage. However, the reciprocal tariffs should not materially impact the attractiveness of Indian auto component exports. In terms of, when you go company-wise, you have Samvardhana, Motherson, and 18 to 20% constituent of revenue coming from the US, but the company does have local presence, and the tariffs risk mainly come from Mexico and potentially the EU market for Samvardhana. But the company has back-end supply chain linkages from Mexico and Canada, and some of its OEM customers do export end products from the EU into the US. For Apollo Tires, if I had to speak, there's negligible exposure to the US, and Bharat Forge and Sona BLW, well, 40% of their revenues do come from the US, and revenues could be impacted because of exports from India itself. Now, moving on to the metal pack, well, on the steel space, the impact on the earnings is negligible. This is because the US comprises only of 2.5% of our total steel exports to the world, and the rise in US hot rolled coil prices, which is basically US steel prices, stand marginally positive for something like a JSW Steel. From the aluminium space, well, aluminium exports to the US do stand higher at 9.7%. Hindalco's exports in the US are negligible because they already have presence as in the form of Novelis, which is a neutral to positive impact. But for Nalco, who is the largest exporter of aluminium India, that company may have to redirect its exports to other regions. Lastly, when you talk about the impact on pharma, the tariff uncertainty continues to loom. JP Morgan does prefer hospitals and domestic focused stocks. The India generics packs is at the risk because, however, US does have a higher US import dependence, so there are talks on how the tariffs may not be in focus for the companies, but the API and CDMOs are relatively placed in a more stronger position. And JP Morgan also believes that a 10% tariff would be met by less resistance than something like a 25% tariff or anything higher. But there are limiting mitigating factors. Not all the companies have a manufacturing presence in the US, and it's not very easy or viable to shift a plant. In terms of stocks, well, Zydus, Lupin, and Dr. Reddy's have the highest exposure in terms of the US. So that's why JP Morgan is recommending investors to position themselves in domestic focused names like a Mankind Pharma as well as an Abbott India. And they're also mentioning some hospital names like Max Healthcare, Fortis, Apollo Hospitals, as well as a Rainbow.
All right, thank you. That was a comprehensive piece there, Mihika. Nirav, I want to come back to you. You were talking just broadly about tariffs, and April 2nd is D-Day, reciprocal tariffs. Now, the thing is, India is widely not expected to be as impacted, but President Trump, in every conversation on reciprocal tariffs, doesn't fail to talk about India. So, in terms of impact stocks and sectors, do you see a major, maybe negative mood if some reciprocal tariffs do come into place in that week?
Well, it's quite possible that there might be a slight disappointment because on the basis of whatever cues we had received in the past. And I think, as you rightly pointed out, some sectors in the auto ancillary space or the pharma space where the generics are likely to get impacted, I think they are going to be in for some kind of disappointment. Chemical makers are likely to face some disappointment. But I think it is likely to be something which is very, very transitory and likely to settle down after a brief period.
Right. So that's a fundamental view coming in there. Soni, let me take a whole host of stocks which could see an impact. Now, if you see names like Bharat Forge or Sona BLW, all of them have been under pressure in 2025, down to the range of almost around 15 to 20%. Now, taking the date of 2nd April into consideration, what are charts indicating? Are you seeing further selling pressure, or the charts tell you that, yes, this could be probably a phase of consolidation?
So, for Bharat Forge, the charts do indicate at something different. Rather, it has taken out the strong resistance of 1120. It's sustaining above it. So there could be some intraday negative impact, maybe some, move towards 1150, 1140 odd range. But then if overall the monthly expiry happens anywhere above the 1120 mark, positionally the stock can head towards the 1300 level in the subsequent series. So it's very important to watch out for these levels. Immediate resistance still stands towards the 1200, 1210 mark. It needs to take out that resistance for any upside move. Talking about the Sona BLW, then I think that stock also is looking on similar chart lines. There is a resistance towards a 520 odd level. So if that level is taken out, then the next resistance towards 580 levels can be seen on a positional basis. Very interesting because it's holding on to the 500 mark. So I think risk reward ratio, it could be favorable, but then wait for the 520 resistance to be taken out for any upside move.
Okay, so Sona BLW in focus, and you're going to see some of those tariff impacts. The other impact that you're going to see possibly today is on IndusInd Bank. Now, so much happening. What we are learning is that IndusInd Bank's board will need to come up with replacements for CEO Sumant Kathapalia by October at least. The bank board will submit the new names by September. My colleague Vishwanath joins in with more details. So, Vishy, it's been an eventful weekend for IndusInd Bank. First, with that Reuters report that claimed that they were asked to step down. The bank comes in and refutes that, saying there's no such directive that they have received. What are we learning?
So, Tamanna, what we come to understand from our sources is that the Reserve Bank of India's messaging in this entire thing has been clear. So, they gave a one-year extension to Sumant Kathapalia. This was the second truncated term that was given to Sumant Kathapalia. The messaging is clear that we need a new CEO at the bank. That is what our sources are telling us, that the RBI's messaging. Remember that when I say messaging, I'm saying that this is not written in black and white, but indicated in no uncertain terms that this change needs to happen. And that's why the board has about 6 to 7 months to finalize potential successors. They need to send 3 names to the RBI. So the RBI has some time before Sumant Kathapalia's term ends in March to decide who will actually take over from him. And of course, once a new CEO is appointed, the old CEO has to step down. That's part and parcel of this entire process. What the RBI is also waiting for is clarity on the entire accountability exercise in this process. Remember that on the 20th of March, the board of IndusInd Bank had said that we are appointing another external agency to come in, look at the gaps in the balance sheet, look at who is responsible for these issues because of which the bank has to take a financial hit in Q4, and then assign the accountability to the right person. Once the board receives the report of this external agency, they will adopt the report at the board level and then send it to the RBI. And the RBI then takes a call on what action they need to take. Of course, this process is going to take some time, at least a few weeks before it gets concluded. But the RBI's first concern is to fix the balance sheet issues. Second, to ensure that a proper succession process is in place at IndusInd Bank. And then assign the blame to whoever is responsible for this gap.
Vishy, thanks so much for getting us those latest updates. Of course, another stock that you should watch out for in trade today. We'll get you the fundamental view as to what you should do if you're holding. But after this very quick break, do stay tuned. Viewers, please take a note. Motilal Financial Services 11th Ideation Conference kicks off today, and you can catch that exclusively on NDTV Profit. All of that action from the SMID space and much, much more. We will also be speaking exclusively to market veteran Ramdev Agrawal today at 10:30 a.m., so you should look out for that interview. Conversations will be lined up over the course of the day, of course, but that is going to be a highlight of the morning. Do stay tuned. Lots more coming up, starting with pre-open.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of
Welcome back. You're watching India Market Open. It's a positive uptick at the start of the trading week, building on gains possibly from last week. Let's see where that settles in the pre-open session. In the meanwhile, let me go across to Nirav Ashar, because we were speaking about IndusInd Bank. We got you exclusive details of the fact that the RBI has likely nudged the bank to find a replacement for Mr. Katpalia, the Chief Executive Officer, by October. Nirav, the question really is twofold. One, there seem to have been buying towards the end of last week. Maybe bargain hunters are out there. What should prospective bargain hunters be aware of? Because the market does not like uncertainty, and that is the definition of what IndusInd Bank is going through right now. And the second is, if you've held on, you've seen substantial erosion of capital, do you bite the bullet now and sell?
Well, at this point of time, I think all those people who want to buy should enter in only with a long-term horizon, because there's a lot of uncertainty in the near term which we see. One is regarding the discrepancies in the derivatives transactions, plus this RBI action, plus they have ordered a forensic audit also, plus the increase in the unsecured loans. So there's a lot of uncertainty with respect to the operations, but at the same time, we've seen the management, the promoters hinting that they would be ready to infuse capital if and when it is required. So I think that could be a positive sign. It's a bank which is well established. It has got operations, and it has been performing consistently well. But I think this is definitely not good news at this point of time. And I think all those people who want to enter should enter in with a minimum horizon of 1 year.
Also, as Neeraj, all those people who want to exit, those who want to enter, fine, but those who want to exit and are hoping for some relief there, is this a time to exit or hold on, considering that in another 6 months you are going to see some management change? That's a done deal, right? Because the current MD CEO only has a 1 year extension, and as per RBI rules, anyway, 6 months ahead of that you have to start giving the name. So there is going to be new management. There might be a positive take there. Is it a hold on kind of a scenario?
No, I think it's better to exit. If someone does not have that kind of a horizon, then it's better to exit immediately, because there are better options available at compelling valuations at this point of time.
Okay. All right, let's see what's buzzing this morning. RailTel in action this morning. IndusInd Bank actually 3% up in the pre-open session, but it's just been about a couple of minutes. Bajaj Finance is buzzing. I mean, actually, if you look at Bajaj Finance, Poonawalla Finance, Oracle Fin, the NBFC space is seeing a bit of action today. I want to look at what's happening with Godrej Properties and DLF as well. Whether we're seeing some kind of movement on that end. Godrej Properties about 0.5% up. The Bangalore foray is in focus. DLF about 3% up. So that's been in focus as well. But even a Muthoot Finance coming up on my screen. Let's look at Manappuram very quickly and see if some of that excitement about Bain's entry is holding. Maybe it is. Just the first ticks that we're seeing, and perhaps we'll see, this will of course settle Kush, but NBFCs, if you had to pick within NBFCs, would it be the good old Bajaj Finance? That was one of the stocks that Nirav also spoke about right at the start of the show.
For sure, as we've seen, right, the stock is at multi-year resistance and breaking above those. So these trends typically tend to stay on for some time. So 9,000 is pretty much there, practically speaking. But you're looking at 9,200, 9350 kind of moves on. Perhaps even if what the opening is suggesting, 9,200 might be hit at open itself. But let that settle. So 9,200, 9350 are the targets to look at on the upside. If you have a position, continue to hold. If you don't, you could still enter around those 9,000 mark, around that 9,000 mark. Shriram Finance is the other one. I wouldn't really be too excited about something like a Poonawalla. Once bitten, twice shy, has a tendency of moving up and then disappointing for a long period of time. So perhaps a bit of caution on that. But other than that, yeah, I mean, take your pick. Shriram Finance, Bajaj Finance, some of these stocks could continue to gain momentum from here on as well.
Right. So that's with regards to the NBFC space. But let's actually, it's 9:05, so it's time for the big brokerage call of the day. You have Macquarie, which has maintained an outperform on NTPC. They have a target price of 475. Mahima joins in with the details. Mahima, what is the brokerage betting big on?
Right. So as you rightly mentioned, it is Macquarie has maintained outperform with the target price of 475 for something like an NTPC. What they're saying is that overall, the compelling play on India's power demand potential remains, positive for NTPC. The assured ROE on thermal assets exposed to a steady medium-term regulatory regime is also overall positive for the company. Pickup in power demand continues to bode well overall for the sentiment. It is the overall upgrades to NTPC's thermal pipeline cannot be fully ruled out, and the clarity on next long-term driver, that is nuclear power, should emerge over the next 6 months is something that Macquarie is expecting. Now, lastly, they are also saying that NTPC is a part of their India Diviner Series Tactical 6. So they've added this particular counter to their India Diviner Series Tactical as well. So this is the overall picture and the reasons as to why Macquarie is bullish on NTPC.
All right, so that's a view on NTPC. By the way, this was on my list as well, and I think that the stock is reacting positive at the start. Soni, I'm coming to you specifically on Shriram Finance, because Kush has mentioned this. He's more positive on this as compared to some other players in the NBFC space, but I'm wondering what you think. 1 month, 16+% gains for Shriram Finance. Would you book money if you got in a little early, or is there potential for significant upside from this point?
Alex, I think there is certainly potential upside for towards the 750 odd mark on a positional basis if you see. However, if there's any chance to enter at slight dips somewhere towards 650 to 620, that range again, so it would be ideal, and risk reward ratio would be far more favorable. 600 seems to be a very strong support on a positional basis. Hold on to the longs, maybe trail your stop losses above your cost price or somewhere towards 600 odd mark. Hold on to the levels, and a positional target towards 750 plus levels can be seen.
Okay, any of the realty stocks that you like, Sony? We talked about Godrej Properties, DLF as well after its analyst meet is buzzing. But if you look at the macro techs of the world, any of the realty stocks right now ripe for an up move in a week that could definitely be an interesting one?
I think all the realty stocks are doing pretty strong in the past 4-5 days. DLF especially, which is just about crossing the 50-day EMA today, and any move above a 720 can see it potentially going towards a 760 to 780 odd level. So I think that stock is quite lucrative from current levels, and just giving that breakout on intraday basis, so one can actually look for a positional buy trade in DLF with a stop loss of 670.
Right, so that's with regards to where real estate names are concerned. But one other aspect that we need to look at is the pharma pack. Clearly, a lot of news flow that's come in. We have SMS Pharma, where USFDA had inspected the Hyderabad facility. A Form 483 was issued for that one. Apart from that, you're looking at Ajanta Pharma also that is in focus in today's day of trade. Nirav, coming to you, how are you looking at the pharma pack? Plus, we've already spoken about the kind of impact that reciprocal tariffs could have. But do you think this is a good time to look at these counters from a valuation perspective? And if yes, which ones would they be?
Well, yes, it's time to be very selective in the pharma space. But if one were to look at stocks which have a strong potential to grow, I think one Divi's Lab is looking quite good. They have just part expansion has just begun at this point of time, and within the next 6 months we'll have the next phase of expansion which kicks in. So I think Divi's is looking quite good. The second is Dr. Reddy's Labs. From a valuation perspective, it is looking quite good. Trades at very attractive price to earnings multiples, taking into account the growth prospects. And the third we like is Piramal Pharma, which has a strong potential to grow in the next 4 to 5 years. So these are some of the stocks which we like in the pharma space.
Okay. Any interesting ideas, Kush? Look at the pre-open. We're just about settling, right? So any interesting ideas that emerge based on the initial reaction? Because in some counters, because of the kind of run that you saw towards the end of that week, you're seeing a little bit of a cool off. But the question is, do we see momentum continue in a few, and do you be wary of that?
So the opening is a bit soft on Cascades Tech right now as per the pre-opening. But if you look at the move on Friday, very exciting. The stock actually closed at the high point of the day. Volume also very close or slightly above the 20-day moving average. Some consolidation had taken place on Wednesday and Thursday. So I think this move could well continue on Cascades. Has actually gained a lot of ground over the last month or so. So keep this one on your radar.
Okay. Sony, anything standing out to you? And you can go into the broader market as well, because there seems to be positive bias today across the board, even in the broader end of the market. So anything looking attractive to you?
So Alex, it would be Chamal Fertilizer, very strong opening, at least what the gap up is suggesting. And, if provided that it holds above this 600 mark on the gap up opening, there's a possibility that the stock is giving a very strong breakout as well on monthly, weekly charts. So the positional target can go up to 640, but intraday towards 620 mark can be seen.
Okay, I'm wondering if IT is going to be an interesting story today, simply because of how beaten down IT stocks have been through the week and have not really participated fully. Yes, there was a recovery on Friday, but have not participated fully yet in the up move. All things considered, Kush, Nifty, IT looking interesting today, and any specifics there? An emphasis, Coforge is what you would look at, maybe?
So can't rule out the hangover. It's just that the momentum that's there in the market is also, lifting all boats, and IT is certainly the last boat to be lifted, right, with the kind of cracks that we've seen. So some stocks that are looking interesting, I wouldn't actually go for the big names like TCS and Infosys just yet. A lot of pressure. Consolidation is healthy, but that's all you're seeing right now. So momentum's missing. So something like an FSL, a First Source Limited, we've had the stock on our radar for a while now. Even this had taken a beating, but if you see the rise over the last 4 sessions from those 275 odd levels back to those 315 levels, that's a healthy sign. So the 200-day moving average resistance comes at 320. If the opening is above that and then it sustains, then you couldn't, then you wouldn't rule out further move to 335 levels also. So FSL is something that I have on my radar, but still the caution on IT stocks remains.
Yeah, and I suppose that makes sense because it's all about banks and BFSI today again. Soni, I'm going to come back to you on Bajaj Finance. I asked Kush's view, and the reason, just look at where it's closed after the pre-open session. So we already saw that up move of, Rajiv Jain, very much part of Bajaj Finance. Everyone heaved a sigh of relief. We saw that up move already in Friday's trade. But from the pre-open session, it seems like that momentum may continue. What would be your take, Soni?
I think it will continue. Technically also looks quite strong. The stock has a good support of 8,800 on a closing basis. If it holds up to that level, then perhaps, it can even cross the 9,200 mark, head towards 9,400. There's no signs of any profit booking or exhaustion or a reversal, trend reversal as of now. So I think continue to be a buy on dip structure. So hold on with the 8,800 stop loss.
All right, so it's looking like a good picture, at least at the start. Let's see how it opens, just about a minute and a half away. But 49 gainers at this point, of course, just at the close of the pre-open, a lot of that could change very dramatically. Reliance Industries is looking strong at the start and contributing quite a bit at this point to the up move for the Nifty 50. Quick comment, Kush, opportunity here, would it finally play catch up?
A very high probability of that happening. And on an immediate basis, you're looking at targets of 1290. Once that is taken out, a 1320 as well. That's because consolidation has taken place. But in the last week, you've seen good, volume action also, come in Reliance. So not a bad idea to play for momentum, but about 1.5%, 2% kind of gains on this one. Stop loss at 1255.
Okay. And in the banking space, we've spoken about ICICI Bank consistently, but would you hold off, Soni? Very quick answer, 50 seconds left. Would you hold off on making fresh positions? The stock is looking strong at the start today as well.
I think yes, maybe look for a dip towards 1320 to reinitiate any longs, and somebody who would have already bought it from the 1210 odd levels, it's a very strong gain. So one can book profits and wait for the profit booking and then again reinitiate it on declines.
Okay, top call, Soni, before we hit that opening rate.
So I'll continue with CDSL, which also looks strong opening. So I think I'll continue with that with the 1260 odd target.
Okay, Kush, what about you? What would be your top call?
Yeah, I'd go with Nava, the stock that we discussed as one of the opening picks. 495.03 target, 465, 455. That zone remains as a stop loss.
Okay, CDSL, Nava, a lot of ideas to work on today. You have ideas across the board. Whether it comes to BFSI, might be the story of this morning, and pretty decent start. You're looking, poised for the 23,500 mark as well. You're opening 0.5% up. Will we hold on? Really is the question. You have enough momentum flowing through, and yes, tariffs are looming, but the sense now that passive flows are back, FIIs are back. The FII figure on Friday is an important one. I think you've hit the 23,500 mark on open, if I'm not mistaken, and then maybe come back a bit on the Nifty. So watch out for that. The Bank Nifty could be the story of the morning as well, about 0.5% up right now. I'm going to pull up the heat map before we get to Alex on the broader markets and what's happening there. Larsen and Toubro in focus this morning. So is Power Grid, NTPC. A lot of infra plays that we're seeing right on top. Kotak Mahindra Bank looking decent. As well. Look at the gap though. What I'm liking on the screen is that it's largely green, and at the lower end you have, even if you have an Ultratech, it's not even 0.25 percentage points down. So a tight range over there, but a very good screen this morning. You have an Adani and also in the top row coming in Bajaj Finance in focus, but Larsen & Toubro might just be the hero of this morning along with a power grid. The broader market's also looking fairly good, Alex.
Very good. In fact, once again, they're outperforming the benchmark, Tamanna, and gains holding at this juncture, 0.9% for the mid-cap index. So we'll also pull up the small-cap index to look at where that is. So more gains here. And if we can, I want to pull up the Nifty Next 50 as well, because this is an index to watch out for in the large-cap space. We don't talk about it enough, in my opinion. It is gaining quite considerably. In fact, if I'm not mistaken, also beating the benchmark Nifty 50. But let's talk about the sectoral indices as well. There you go, 1.2% here for the Nifty Next 50. Let's pull up the sectoral heat map just to show you what is moving in trade today. Realty up and about in trade, gaining about 2% or so. You have energy as a pack that's doing reasonably well. Defense is doing okay. Nifty oil and gas, we spoke about a few of those gas counters that you should put out on your radar. You have infra that's doing well. It's green across the screen, and even the FMCG index is gaining about 0.25%. So no red at this juncture. And I would hazard a guess to say that the market breadth favors the advances very, very heavily this morning. Let's take a look at some of the individual names that you should keep on your radar, and we'll get into the list. Godrej Properties, it's set to acquire or has acquired 10 acres of land in Bengaluru. The stock is up about 2% or thereabouts. Prospects are looking interesting. We did point out that you should watch that carefully, and in fact IT might be a key signal for you there. NCC has won an order and it's up and about in trade today. A couple of these counters reacting very strongly to order wins. NCC and Power Mech both up and about in trade. Power Mech especially gaining about 6% in trade today. REC, here CLSA has an upside potential of as much as 22%, and quite a few of the reactions to the brokerage notes have come through. REC gaining about 2%. Ajanta Pharma also on the back of an Axis Cap initiation with a buy, gaining about 0.8%. NTPC holding on to gains up about 2% or so. Precision Wires has entered a copper waste recycling business in Gujarat. It's up and about as well, 3% higher at this juncture. MSTC has gotten a 2-year e-auction service contract from Coal India, and let's see how that is doing. Let's pull that up if we can. And in the meanwhile, let's also talk about Alembic Pharma, right? So MSTC up and about. Alembic Pharma, by the way, this is on the back of gains that were made last week as well. Remember, it ended with gains of about 14%. The stock has reacted positively today as well on account of the fact that it has completed the inspection of the US FDA without observations.
Okay, let's take a look at what else is buzzing today, and pretty much it's an exciting morning. 23,500 has been reclaimed and reclaimed decisively this morning. So the lead over there, I think, and we should pull up all the sectoral indices right now. The lead will be across the broader markets as well, and with Nifty Bank Nifty nearly 0.75% up. So that's where all the action is right now. You know, I'm just going to get a first call from Kush. The kind of opening that we've seen above 23,500, staying above 23,500, what is the day looking like for you? This is a good time to review your calls for the day. And is this a buy at 23,500?
For the Nifty, no. I mean, nothing has changed from, the last 30 minutes to now. I mean, even though the opening is strong.
The opening has changed. Nothing has changed except new data coming in.
No, I would have expected resistance around the 23,500, 23,600 mark anyway.
Not,
and there.
Yeah, but it's not showing right now. I mean, for the next few minutes looking pretty bold. So you're saying, hang on.
Oh, absolutely. If I was saying the risk reward ratio is not favorable at 23,350, it's most certainly not favorable at 23,500. Okay. So I would still wait on. I mean, if you have a position, continue with the trailing stop loss, that's not an issue. But yeah, you have to wait for a dip for any kind of a fresh buy. Again, don't chase momentum. It's not a very healthy sign, because you might just end up being trapped. To put it very simply. Yeah, absolutely.
So, but Kush, on a closing basis, right? If you have to see sustainability, what should that level be on Nifty and Bank Nifty that one should be watching out for?
Do you mean to enter afresh? Or
Yes, to enter afresh.
That's a very good question. I would look at levels of closer to 23,200, 23,150 because the put base has now actually bumped up and has come to 23,000, 23,100 thereabouts. So closer to the support zone is where you want to buy on the Nifty. When it comes to Bank Nifty, that has come up now to 49,500, 50,000 odd levels. So maybe a dip closer to those support zones is where you consider fresh buying. Momentum there for sure, so you hold on, but with a trailing stop loss. Fresh buying not really suggested. As far as stocks go, one very interesting name, and I want to caveat that with the fact that one, we've mentioned this on our advisory as well. Two, this is a relatively low volume stock. I generally don't discuss low volume stocks, but this stock has seen pretty good institutional activity as well, which is Kalyani Steels. The stock has had a phenomenal run right up until November to early December last year, but then just fallen off the cliff, practically half. But it's now starting to form a base, come up. Last quarter you saw some institutional activity also in this one. So this is a long-term bet for targets of about 900 and higher, with a stop loss around the 750 mark. But as I said, the volumes are thin, so just be a little cautious if you're planning to invest. You might want to just stagger your buying rather than jump all in.
Okay, so cautiousness is important this morning, but we've been talking about banks. I was so excited to ask the question, my tongue got tied. Nirav, we've been speaking about banks, gains of about 0.9%, and we're at 3-month highs for the Nifty Bank, but we haven't spoken about PSU banks, because if we're talking about the valuation metrics, ultimately there's always been attractiveness in the PSU banking space, and we've not spoken about the likes of SBI, something even like maybe a PNB or a BOB. Is there an opportunity at this juncture to deploy fresh?
Well, definitely, valuations are looking quite attractive as far as the PSU banks are concerned, and there is also a possibility of a good dividend yield going forward. So I think the frontline banks, some of the smart performers, I think State Bank of India or Bank of Baroda or Canara Bank, or Union Bank, they definitely warrant attention.
A few of the banking names. One stock that Tamanna was also just mentioning right now was a Finolex Pipes. Now that stock is seeing gains of 8.5%. No major news flow that's coming in on this one. Sony, what are you making of this? Do you see buying opportunity further after a 7% upside on a Finolex?
I don't track the stock, but then on charts, it seems to have crossed its 10 and 20-day exponential moving average. It looks decent. In fact, the next level of resistance is towards its 50 exponential moving average, which is towards 195. If it holds on to the 180 support on a closing basis today, positionally, it may test towards 195 odd levels.
Right, so that's Finolex Industries. 3 other stocks which are in the limelight right now is a KFin Tech, which is seeing a strong move. You have Nuvama, CAMS, CDSL and BSE, which become absolutely important to watch out for as well, because once the markets move, these are the ones which are in focus. Nirav, any view in terms of stocks which are related to the capital markets, because CDSL is on Sony's top list right now, but from a fundamental perspective, where would your bets be?
Well, that's true. Once the markets start moving, some of these stocks definitely start buzzing. In fact, all of them start buzzing in trade. But I think some of these stocks are portfolio stocks. So we like BSE, CDSL, Nuvama in that order.
Okay. I'm going to ask this, right, Kush, because at the start of last week, there were cautionary signals that were being sent out by some of your peers. And they were saying, even midweek, when you saw significant moves for the benchmark and for the broader markets, this is a sucker's rally, be wary. Is that something that continues to be the case, or do you disagree?
Well,
those are the words that they used.
Yeah, and that's why the pause, and that's why the hitch before answering that. Sucker's rally is too big a word right now. The reason I am cautious is because the momentum is now stretched. Correct. Now, the suckers rally would be when we give up all of these gains, look at the lows around the 20,000 mark and fall below those, right? That would make it a suckers rally. Are there indications for that? A very low probability, but you can't completely deny that. what's very clear is that in the very near term, and by that we mean daily basis, couple of days time frame, the index is definitely overheated. So do you go out and buy? No. Hence, so I wouldn't subscribe to the suckers rally theory yet, but also the fact that yes, I mean there is momentum. If you want to play it, you go out and play. But
what is the RSI indicating?
That's the problem, Alex. If you look at the daily charts or the daily setup for most of these technical indicators, they will point north. But if it were as simple as just looking at the data, I mean, everyone would perhaps do it, right? And that is why some insights, and you have to dig further deep into the data. What RSI is indicating, RSI is currently at 65. Now you would say above 60, above 50, 55 levels, you've got this good momentum going. The index is also showing that price action, right? So for most of the data points, if I were to plot 10 data points, 7 of them would indicate positivity. And that's why you just have people going out and buying, right? It's not as easy.
Because the RSI has bounced from 40 or sub 40 levels.
Absolutely. Above 50, which is a neutral zone, I actually consider it 55, 60. Above that, the momentum picks up. We're seeing that in the market, right? But then you break it down. You look at the hourly charts, right? RSI is above 80, 83. Now, that is seriously overheated. And now you're starting to see, negative divergences, which is not a healthy sign.
Okay. All right. Let's talk about a few more stocks from the broader markets, and we've spoken about a few pockets, right? And one of the picks in the hospitality space that Nirav Ashar pointed out to was Indian hotels. And Soni, I'm just curious about what you think about that entire space, because we tend to speak about the larger names, but then we oftentimes don't remember that there are several options in the hospitality space now to talk about. So anything looking interesting on the charts from there?
So Alex, only from the F&O space, Indian Hotel is the only stock which is actually in the F&O space. And Indian Hotels, it has given a good breakout. It holds above the 800 mark. Of course, it has seen a very strong bounce back from the 700 odd levels. I think that is a good, healthy sign. Stock is heading towards 860, 890 plus levels positionally. So keep adding on those dips as long as 800 is holding on a closing basis on chart. So I think that is very important as a stop loss, as a support, and positionally it can head towards 860 and 890 odd levels.
Oh yeah, in fact, if you recall, EIH Limited, this is one stock that we discussed last week for a second target of 385. That's been hit and stock is sustaining above that. It's only the 200-day moving average around the 390 mark that's acting as a bit of a resistance. But otherwise, the move on this one has been good. And just one last thought, Alex, if you recall, last week when we spoke about the capital good names, is when I mentioned that the Power Mix and the Jyoti CNCs of the world are looking at a much, on a much stronger footing than the Siemens and ABBs and Thermaxes of the world, right? And you're seeing that move now. Now my suggestion would be to take some money off the table. You've got a gap up opening after a good run. Some resistance is acting up. So if you have Power Mech and Jyoti CNC from a trading perspective, now would be a good time to take some money off the table.
Right, so that's with regards to where a Jyoti CNC goes. Power Mech projects, let's pull up that one on the screens. On the back of an order win, that stock did see some smart moves. There you go. 4% up move coming in on that one. Kush, what are charts indicating? Any buying opportunity? I think we just mentioned about Power Mech. Sorry, I missed that one. But apart from that, let's pull up a Godrej Properties once again with a DLF and a Loda and see if the uptick is maintained right now. No, I mean, Godrej has given up some bit of gains. It's up now 0.7%. DLF as well. Again, real estate does not seem to be holding up, but railway companies are doing pretty okay. So you have the likes of an Orcon or a Railtel, RVNL. These few names have been on the limelight. Soni, coming to you on railway stocks. Railtel is up almost around 7.5%. Any picks coming in there?
I think yes, the entire space is doing comparatively better in the past 3-4 sessions. Railtel is just crossing its 50 EMA, so one can actually look, forward to buying at current levels as well, and maybe on slight declines towards 327. That's the range one can initiate a short-term trading, perspective for the longer side. The targets from current levels seems to be 360 as a first target. If that is taken out, it sustains above it, it can even head towards 380. Immediate basis 315 is a good support. One can hold on with that support stop loss.
Okay, Railtel in focus. I'm wondering, Nirav, if you would look at railway stocks again, and I want to pull up IRCON. There was negative news actually on IRCON today in terms of some challenges to their balance sheet, not challenges to the balance sheet, but actually a demand that had come on them, but 3% up on the stock. Railway seems to be back in focus after a long time. Nirav, would you look at railway stocks favorably?
I think I would wait for the results, for the Q4 results to come out and the commentary from these companies because they've won some good orders, so the momentum is back. But I think I'll wait for the results. And I think one particular stock in the railway space, which is recently listed, is Transrail. It's looking quite exciting from a medium to long term perspective.
Transrail. Okay, we had an interesting conversation with Transrail as well. Thank you so much, Nirav. Thank you so much, Soni. Thank you so much, Kush, for joining in today. We have an interesting set of conversations lined up right from 9:30 onwards. And of course, we speak with Ramdev Agarwal at 10:30. Exclusively from the Motilal Oswal Ideation Conference, so stay tuned for that as well. But coming up next is the conversation with MobiKwik. Before we get to that, let me go across to Mahima, my colleague, who's joining in with all the details on the company since it got listed. So much happening. First of all, a power up because of the IPO funds coming in, the lock-in opening, so a bit of pressure on the stock. Set it all up for us, Mahima.
Right. So as you rightly mentioned, the IPO price for the stock was around 279 and the listing price was 440, and it also closed at around 528 on the listing day. But now, and also the stock peaked at 698 on around December 26. But since then, we saw the stock crashed over 65%. And technically in the last 3 months, what we've seen is the stock is up around over 20% since its IPO price and down about 24% compared to its listing price. Now, what has led to the fall? Well, sharp run up in the share prices, overall lock-in period open, and general market weakness as well. What has led to the run up in the past few days? Valuations now becoming cheap in terms of the IPO proceedings getting implemented could drive the growth, and overall beneficiary in MDR is also coming back. In terms of future growth prospects, well, they're looking to add 5 million users each quarter. The company is onboarding 1 to 1.5 lakh merchants each quarter and optimistic overall about growth in payments. Even in terms of products, new products in UPI to drive growth. They are set to launch new insurance and saving business in 2025. And in terms of profitability, customer costs have increased, but they remain competitive. Financial services take rates have increased. They expect rebound post decline in disbursements, and this is in certain lending products, and fixed costs expected to remain stable. Larger ticket sizes to overall aid yields, and lastly 40% of disbursements are under first loss default guarantee. So this is the overall view as to what's happening with MobiKwik.
Excited about this conversation. We did a KYC a few days ago as well on MobiKwik, so you should go back and see that if you're tracking this conversation. That's to all of our viewers. But Upasana Thakur joining us now. She's Executive Director, Chairperson and CFO of One MobiKwik Systems. Upasana, very good morning and great to have you here with us on NDTV Profit. All right, so it's been an exciting few months. The IPO funds coming in, and like I said, a power up for the company's balance sheet. The lock-in has also, now opened up, and then you saw some impact there. Give us a sense of directionally where you're heading now that the industry, and I'm sure you as well, are tamping down on the BNPL segment, which was the steam engine.
Right. So firstly, thank you so much for having me this morning. Glad to be here as a recently listed company. I think first thing I want to say is that the fintech market in India has an amazingly large opportunity ahead of us. I mean, everything said and done, less than half of India is transacting digitally today. Okay, so there is a lot of growth available in the next 10-year time frame for all the companies to tap into. When it comes to MobiKwik, what I want to tell you is that we have demonstrated very strong growth year over year in terms of revenue performance, as well as achieving profitability for straight 6 quarters, which is 4 quarters of FY24, and then also the first 2 quarters of FY25. Now, that said, what are we doing in terms of where are we today? So this is the first time that the company has raised a substantial amount of capital. 570 crores is the highest amount of capital the company has ever raised. I'm just laying the context. Even if I add this together with 1200 crores that we had raised prior to the IPO in the last 15 years, that's a total of less than 1800 crores. With this kind of capital, MobiKwik has been competing with direct competitors that have raised 20,000 crore, 46,000 crores, etc., etc. That said, where we are today, I'm quite happy, but I can see that the payments business is doing really well. It's been growing 3x last couple of years, actually more than 3x. This year, again, we are headed in that direction. We are already the largest wallet in India. We are fourth or fifth ranked on in terms of the bill payments, and we are trying to catch up very smartly in the UPI market with innovative new products like Pocket UPI and a co-branded credit card. So I think payments will continue to give us a lot of growth in terms of users, merchants, GMV, and revenue. Payments take rate has been 0.7%. Thereabouts, it keeps hovering it between 0.67 to 0.75% last few years. So that continues to be the case. We do payments in a positive contribution margin. So after from this 0.7% take rate, about 19 to 20% is our net retention, what we call contribution margin. And as we keep scaling up payments, I think this itself becomes substantial. Now that we have so many users, we have 170 million users and roughly 5 million merchants. Of course, then we try to cross-sell other financial products to them. Now, in the cross-sell, you mentioned BNPL. I just want to clarify that MobiKwik is not a manufacturing company. It's not an NBFC. We are in the distribution business. So if the market or the consumers wanted BNPL, we were cross-selling BNPL. If the market wants merchant loans, merchant cash advance loans, if the market wants personal loans, if the market wants secured loans, credit card, we will bring all those products from our partner banks.
I understood, Upasana. I just want to know how big a part of your portfolio was BNPL, and then I'll come to the point on payments.
So BNPL was substantial in our credit distribution business in the last few years.
Yes.
But in FY25, already you are seeing that we are trying to defocus away from that product, and we are trying to diversify into distribution of other financial products. And not just credit products, but also savings products as well as insurance products.
Okay, just one point on payments. Like you said, and correctly so, that payments is, the big push for you and for your business. But what about acquisition costs that come for that part of the business, which have also going up? Can you give us some, color on that?
So I don't really think that they are going up. We are adding about 5 million users or 50 lakh, users every quarter. And the customer acquisition cost continues to hover in the 30s. And I think that's the case. Whether it's 32, 35, I don't think that's a material difference. It has a little bit to do with the dollar rupee also, because Google, Meta, all these big MNCs, they charge in dollar. So the dollar rupee conversion rate also affects the customer acquisition cost, because we are acquiring all our users on our app digitally. So the customer acquisition continues to be healthy. Merchant acquisition also continues to be healthy. And I think that we intend to grow the space even further now that we have, we have only received money in the bank in December and we are sitting in March right now. So all the investments that we want to make in terms of growing the user base, growing the merchant base, sort of scaling up the platform, and then adding more and more innovative products, all those investments are literally now going in. So you will see them, reap benefits sort of in the quarters to come.
Upasana, I'll go back to the overall business right now, because if you talk about the first 9 months of FY25, despite the total income, which has surpassed what you had achieved in FY24, you have reported a loss in the first 9 months, right? Is that trajectory what you see from here on, that you could be a loss-making company in FY25, taking into consideration the expansions that you have? And secondly, you have considered expansion into insurance and savings product distribution as well. So how are you tying up these two? Because your acquisition costs have been going up as well.
Again, I would like to reiterate that the acquisition cost continues to be in the range of 30 to 35 rupees. This is far lower than most of our competitors. This is at least 10x lower than most of our competitors. So while relative to our own performance, it may look higher. Just a small point I wanted to clarify. Now, coming to your question on profitability. Yes, it is true that, in Q3, we have not been able to be profitable, even though we have surpassed FY24 revenue in the first 3 quarters of FY25. But the short reason for that is very simple. We do report our payments revenue separately and our distribution of financial products revenue separately. You can see that there is a substantial dip in the distribution of financial services revenue, and that dip is in line with reduced dispersals. Reduced dispersals are actually in line with the market. Because if you think about it, the second half of 2024, there was a sentiment of a weak sentiment on unsecured lending. And it's only now that we see green shoots in that sentiment turning around. Since we are not the balance sheet owner, it's the banks and the NBFCs. So if they want to disburse less, of course, our disbursals via our platform will be less and therefore the revenue will be lower.
Which is the question over here is, does that mean that FY25 is going to be a year of losses?
Well, I think the year is not closed yet, so I would not like to give any indications. But I would like to state that the fixed cost of the company continues to be in check. Now, if one part of the business is doing really well and the other part is not doing so well because of the market sentiment, it is not just our numbers. All banks and NBFCs have also reduced disbursements. Therefore, it is going to have an impact on the bottom line. Now, I think that what we are trying to do is we are trying to scale up our payments business even more substantially so that that itself covers my fixed costs and I can break even sooner than later. And that is what we are trying to do in this calendar year.
Okay.
So that whatever we can generate from distribution of financial products should really be icing on top of the cake, and we should not be dependent on the distribution in order to be profitable. That is the earnest goal with which we are operating.
Okay, no, so very, very clearly put. So then in your own words, Upasana, what are the headwinds that you see? You talked a little while earlier about, focusing on UPI payments. Again, very crowded, not a huge margin, and a space where everyone is there. Volumes are great, but then again, everyone is there. So what is going to be that secret sauce, and what are going to be the headwinds in your view?
So see, the headwinds, I already explained. The headwinds were mostly on the side of unsecured lending. And I think
what I mean, going forward, I mean.
Yeah. So going forward, specifically for UPI growth, I don't see any specific headwinds. You're right, UPI is very large. There are many players, and of course, there are top 2-3 players who already hold 80% of the market. But again, I want to reiterate to you what is MobiKwik's DNA. MobiKwik's DNA has been to always be innovative and bring interesting products to the market, which allows us to differentiate. We have not grown on the back of marketing dollars like many of our competitors. We have grown back on the back of product innovation and delivering a strong user experience. So within UPI, we don't believe that we can succeed on what we call vanilla UPI payments, which is pay from your bank account to any other bank account. We are trying to innovate on new products like a RuPay credit card. RuPay credit card is usable everywhere on the UPI network. And so we are trying to bring that to the market. It is already in a closed user group available on our app to some users, and we are trying to bring it to the entire public. This would be an innovative product which would differentiate us, and it would allow us to also capture revenue, because a RuPay credit card actually is an MDR generating instrument on the UPI network. That's number one. Number two, the last entire year, we have seen substantial growth on our innovative product called Pocket UPI. Pocket UPI is nothing but pay with your wallet everywhere on UPI. And that helps you keep your bank account safe. You don't have so many small transactions in your bank statement, and you're also not entering your bank PIN for every 50-100 rupee transaction. So Pocket UPI, which is technically PPI on UPI under interoperability, is scaling very rapidly for us and continues to grow.
Can you share any numbers on Pocket UPI?
No, I don't think we have disclosed any numbers yet, so I cannot.
Okay. Or just what the initial adoption rate or any initial response has been?
No, I think the response has been amazing. I think the users that have, I can tell you that we have probably grown 10x in that business just in the calendar year 2024 from January, to December. Interestingly, Pocket UPI, which is PPI on UPI, also has an MDR. Now that MDR has been written down by RBI, and it has not manifested yet, but it is in the early stages of execution. So it should kick in sometime this year also. So these are going to be additional kickers, that help us not only in scaling our business in UPI, but also in generating more revenue. Thirdly, in our payments business, devices, which we have specifically raised some capital for in the IPO use of proceeds. That is also a business where where we are trying to bring sound boxes and EDC machines to our heavily engaged users in the tier 2, tier 3 markets. So that will also give us, rental income and higher lock-in with our small merchant base, the Kirana stores in tier 2, tier 3 cities. These are some additional revenue drivers that will add to our existing payments revenue.
Upasana, my last question is with regards to the launch of new insurance and savings business in 2025. To what extent is the plan with regards to scaling up, and how much would you be investing on this side?
So I think these are baby verticals for us, but we are getting started. I think you will see more progress on the investments vertical, where today on the MobiKwik app, we have a product called Lens.ai, which allows a user to connect all their bank statements using account aggregator. And it's a very smart bank statement. It's conversational. You can ask, how much did I spend on groceries? How much did I spend on travel? And you will get a conversational reply. We are using this to engage users. I think we have about 5 million users engaged on this product. And then from here, we are seeing users trying to invest. So for example, you can invest across 8-9 fixed deposits from banks and NBFCs very simply via the MobiKwik app. These are high yield fixed deposits. There's direct mutual funds. There is digital gold, and we are trying to bring more products there. On insurance, we've literally just launched our first product. It's called Shop Insurance, and it has just gone live for our small merchants. So we are trying to, capitalize on the mind share of our users as well as our merchants. And the idea is that whatever product they need in the space of finance, we should be able to serve them.
Right. So, Upasana, basically, these will be small products, small businesses that, at least you start off with. Thank you so much for speaking to us at NDTV Profit. So that's the management of MobiKwik. The stock has seen gains of nearly 4.5%, but it's going to be interesting as to how the company closes FY25, because the first 9 months they've already reported a loss because of the pressure in the third quarter, and there is a possibility there could be a bounce back, but whether they will be able to cover up for the losses or not is going to be the key question from here on. But moving on, MTAR Technologies, that is in focus as the company is holding its analyst meet today. Now, before we get the management in a short while, let's first head across to Mihika to understand how the company works and its outlook going forward. Mihika, over to you.
Yeah, we have MTAR in focus today. The stock is up actually 8% right now. It's gained over 14 to 15% in the past month. Now, it is a developer and manufacturer of components and equipment that cater to sectors like defense, aerospace, nuclear energy, as well as clean energy. Now, in terms of 9 months FY25, their revenue is up 12.5%. However, we've seen a contraction in terms of the EBITDA margins and net profit. Net profit is actually down 20% year on year 9 months FY25. So we need to know what the outlook is for FY26 and going forward, and whether the guidance given at the end of Q3 still stands. They're projecting a 700 crore plus revenues in FY25 with 21% margins. We also want to know what their order book growth is looking like and how the execution timeline will be for that. The total order book stands over 1,030 odd crores right now. 55% is from clean energy, 18% is from space, and 13% is from civil nuclear power segment. And this is a sector where MTAR's opportunity is high. They have been contributing to the nuclear power sector since 1969, and there's a potential of around 5,000 to 6,000 odd crores of orders coming in the space in the next 6 to 7 years due to the government's plan to add 40 gigawatts of nuclear power reactors in the space. And lastly, we also want to know how the their fuel cell segment is expected to grow, and whether they are looking to diversify their client profile.
Yep. Okay. Thanks for that, Mihika. Thanks for laying it up beautifully. Now, we have Mr. Parvat Srinivas Reddy, who is the Managing Director of MTAR Technologies, joining us on the show. Mr. Reddy, good having you. Thanks so much for taking the time out. And I understand there is also an analyst meet that you have today. Is that correct, sir?
Yeah, that's correct.
Okay.
We have an analyst meet in Mumbai today, yes.
Okay. So when I look back at your results that came in beginning of February and the flavor or the color that you gave for quarter 4, as well as probably a 30% guidance that you gave then, versus 24th Feb when you're talking to analysts today, is there a change, sir? Has business optimism improved? Have things maybe plateaued? Is there what's happened in quarter 4? Can we start with that?
No, quarter four, we are going as per the guidance what we have given.
Okay.
And what's more important is it will be also with improved margins, and we'll sustain those margins over the next 1 year and improve. The way I've said, we'll have a revenue growth of 30% year on year for the next 3 years with improved EBITDA margins at 24, 26, and 28%. So we stick by it. And we have done enough work over the last couple of years to improve various verticals, whether it's in defense or aerospace or other sectors. And we have done substantial work. So that's the result what we'll be getting over the next 3 years.
So I'm guessing what you're saying, sir, is that while the H1 wasn't the strongest, you had a pretty strong quarter three. That momentum is continued into quarter four, and I'm presuming that will continue to FY26 as well. Would that be a fair summation?
Yes, absolutely, yes.
Okay, and just a follow up there, because quarter three almost everything clicked for you, right? Clean energy, space, product segment, everything clicked simultaneously. Would you reckon it's a combination of everything that does well, or is there a first amongst equals from amongst the segments that you cater to?
No, presently we are doing pretty well in all the segments and growing pretty well as well. So on quarter basis, every segment, every vertical, every engine is going to fire better and better. That's how we're going to have this kind of revenue growth happening on a diversified sectors which MTR is involved. We're just not involved in one sector. We're involved in multiple sectors. And we have done a lot of R&D and new development work to be where we are today and to be where we are going to be in the next 3 years.
Mr. Reddy, my question coming to you is on two segments. First, let's talk about nuclear energy, because that's a big segment that you're betting big on. Clearly, you have, the opportunity is from the government's plan to construct 40 new nuclear reactors. Now, from where you are in terms of your current order book, where do you plan to get it? Because you clearly mentioned earlier 1,000 crores from Kaiga 5 and 6 reactors. Plus, if you talk about the current civil nuclear order book, that potential could go up to 1,500 to 2,000 crores in 6 to 7 years. So let's look at FY25, 26 and 27. What's that revenue potential and any margin creativeness that you see out of it?
First, let's look at the orders that we're going to get. That's most important. And with Kaiga 5 and 6, and also the refurbishment reactors, which are under the pipeline over this year, we are expecting close to about 800 to 1,000 crores of orders coming in. Now, what's important here is that all these orders have to be executed over the next three years' time. And we also have existing orders on hand. So the nuclear, I'm not going to go into a very long story about how many reactors are going to come and when they're going to happen, but we have enough on the plate right now to execute close to about 800 to 1,000 crores of orders over the next 3.5 years. And that's substantial, which never happened in the past. And it will continue to move in that direction even in the future. So that's what is very exciting right now.
Okay, so what will be your average execution rate then on a yearly basis from here on?
See, we're looking at, once these orders come in, right now we are looking at about, if you look at FY26, we are looking at nuclear doing at around 100 crores plus. But if you look at FY27, it will jump to about 200 and 250 crores. That's how exponentially it's going to grow year on year basis. And then we are going to execute all these orders. Obviously, we have to do it within the next 3 years. So obviously, you can see that kind of growth that's going to happen in this sector.
Doubling is what you're seeing between 25 to 26. And with regards to fuel cell industry, very quickly, if you could explain to our viewers in terms of what would this business contain and how big is it for you?
It's pretty big for us. But right now, it's not only the fuel cell, which we have been doing for quite some time. We're also increasing our wallet share within the same segment as well, with the same customer as well. But we're also focusing on many other segments where we are doing very well right now, getting qualified for the first articles and moving into batch and volume production. So fuel cells, yes, moving forward as well, we'll have a substantial growth year-on-year basis, the way the market is looking at or the way the kind of feedback we have right now. So it's going to grow at a similar pace year-on-year basis. So that should not be an issue at all.
Mr. Reddy, I just come back to the predictability of the linearity of growth and the possibilities thereof. Now, would you reckon that your 30% CAGR not a formal guidance, but a color that you've given, or maybe you give a formal guidance, I don't know, but let's say the color that you've given for the next 2-3 years, would it be linear or could it be patchy on a quarter-on-quarter basis? Maybe on the annual basis, you clock in that 30%, but would it be linear over the quarters or could it be patchy?
I think we have come to a stage where probably we'll move into the linear kind of growth, quarter-on-quarter basis. But for engineering firms, normally the second half is much better than the first half. But moving forward, probably that could change and become more linear quarter-on-quarter basis. We're just looking at that right now. But I think that's what is going to happen moving forward. Okay.
And one more would be around the strength of the cash flows and the receivables, and would that stay strong enough for you not to need maybe say any kind of further equity raising to execute orders and business, or could something like that happen as well? So two parts, right? How strong are receivables and cash flows, and would you need any equity fundraise in the next 12 months?
See, our cash flows are pretty strong. Our receivables are very good. And we also had an operating cash flow positive, more than 100 crores last quarter. And we are not looking at any kind of fundraising right now. Based on our requirements as of today, definitely we'll not be looking at that. We are comfortable with our internal accruals and taking care of our growth plan to fund it. It all depends on any substantial opportunities coming in, then we have to look at it. But as of today, the kind of roadmap we have, I don't think we are looking at that right.
Okay. Okay, Mr. Reddy, we'll leave it at that. Thank you so much for taking the time out and being with us. Lovely talking to you today. All the best. We'll look forward to talk to you post your quarterly numbers, sir.
Thank you. Thank you so much.
Right, that's Mr. Parvat Kumar Reddy. Fairly confident. You could almost say confidence personified. Remember, they had a fairly iffy first half, as a result of which the 9-month numbers don't look good. But quarter 3 was solid. They've guided to a pretty strong quarter 4 and linearity in revenues and flows, cash flows over the next 2 or 3 years, wherein they have, I think on the con call said that they'll probably grow at about 30%. We need to slip into a break on the note that things are looking okay for the markets per se. So the 6th straight day of gains for the mid caps and the small caps, which is great going. We'll be back on the other side with some key market data. Also talk to Dimensions Consulting's Ajay Srivastava.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort
We're back with India Market Open right here on NDTV Profit. Now let's take stock of some of the key newsmakers in trade. The first of them is DLF. Jindal Stainless is the other one, but DLF first up. It's looking at more than 17,000 crores in terms of receivables, and I think the actual number goes up to 43,000 over the number of years. So, well, lots of newsmakers per se. Let's get in Varsha with the detailed breakdown of this and Jindal Stainless. Varsha.
Thank you so much. So for DLF, they are expecting to be zero net debt company at a group level by FY30, and they are seeing rental income to scale up to 15% CAGR to rupees 100 billion over FY25 to 30, and they aim to sustain 20,000 crore annual pre-sales run rate in a near term with more than 45% of gross margin, and the payout ratio is expected to be more than 50% over time versus 40% in FY24, and capex of rupees 26,000 crore till FY30. In FY26, they are expecting to launch few of the projects with another 17,100 crore, and the rest 56,000 crore project is expected to be launched over the next 3 to 4 years, and significant residual margins is already available, and they expect to further deliver 45% of gross margin over medium term, and new sales bookings are expected to continue at a steady level, and they expect 2x growth in PAT, 2x plus growth in cash flows. Next on the list is Jindal Stainless, wherein they are setting up a downstream operation at Jaipur by 8 to 9 months earlier, which was expected in H1 FY27, and a management guided for FY25 consolidated EBITDA per ton at rupees 19,000 to 19,500 versus a 9-month FY25 at around 20,800 rupees, implying 16,000 per ton in Q4 FY25, and they are expecting a good recovery when it comes to export as inquiries begin from US and Europe, and they are guiding conservatively with FY26 volume growth of 9 to 10% considering no export growth, and due to weak export and firm imports, company diverted volumes to low margin segment, hurting margin. And lastly, the restructuring with respect to tax efficiencies and ad sale will actually aid their cash flow.
Right, so that's with regards to Jindal Stainless. The stock is down 4%. DLF, interestingly, is seeing some smart gains as well in today's session. I mean, you know what, 57,000 crore worth of projects over the next 4 to 5 years is what they have been aiming. The stock, though, has cooled off slightly from here on. But moving on, apart from these names, you have a sale also, which is in focus. And I mean, before we go ahead across to sale, gas stocks have been buzzing, and this is following the proposed regulatory changes for transmission tariff calculation norms. Somit brings in all the details. Somit, what are brokerages saying about the possible changes in terms of tariff? Stocks up in the range of almost around 1 to 4%.
Unless gas stocks would remain in focus given the fact that PNGRB has initiated this consultation process to amend the existing pipeline tariff. Now, do remember this is a consultation process, so there will be an open house, and most likely this open house will conclude by April, and as per CLSA, the new norms or the new tariff regulations could be formalized by the quarter ending June 2025. And as per CLSA, they're expecting stocks like IGL to benefit given the fact that their operational cost could be lower post the implementation of of the new tariffs, and also to some extent Mahanagar Gas could benefit because some cost benefit could come in for Mahanagar Gas as well. They are also saying that this would lead to higher pipeline tariffs for GSPL and GAIL from the current tariffs that they are incurring, and at the margin this could lead to a small hike in cost for other gas users, which are the industrial gas users. So that could be marginally negative for Gujarat Gas because that company generates most of its income from selling gas to industries. Now, as per Morgan Stanley, this proposed regulatory changes could increase the gas penetration in the country. Currently it's at around 6%, and India is aiming to increase this to around 15%, and this regulation could lead to that number going forward. As per Morgan Stanley, they are saying that these regulations are positive for transporters and upstream producers, and this will lead to normalizing returns for city gas distribution companies and for Petronet as well. They're saying that GAIL, Oil India, Reliance Industries stands to benefit the most, followed by GSPL, and they're saying that there are 4 proposed changes that could lead to higher pipeline tariffs, and hence it is most beneficial coming in for GAIL and GSPL. Now, GSPL had recently also seen a cut in their pipeline tariffs, so if this new norms get implemented, then the tariffs could be on the higher side, and hence GSPL also stands to benefit. Lastly, Morgan Stanley says that they believe that the proposed changes are part of the regulatory efforts to implement the One Nation, One Grid, One Tariff framework that were proposed by the government multiple times. In fact, post this proposal that has come in by PNGRB, Citi has also come out with its note on GAIL and GSPL, where they have initiated a 90-day tactical buy on both the stocks, and they are positive on both the stocks on potential higher tariffs that could come in. Citi has a buy rating on GAIL with a target price of 265, while on GSPL they have a buy rating with a target price of 370.
Right, so that's a strong one. 370 is the kind of target price you're watching out for in terms of GAIL. In fact, all the gas stocks that have been buzzing as well. But moving on, SAIL. That's the stock we're putting a spotlight on today. And what's interesting is that it has actually attracted the highest sell calls from analysts versus the peers. Now, this comes despite the stock actually posted an impressive 7% uptick last week. Today itself, the stock is up a little over 2.5% as well. The critical question from here on is whether this rally has the staying power, or is it merely a short-lived surge that we've seen over the last 2 trading sessions? Mika joins us with the analysis. Mika, clearly last week, Friday was a strong one. Today as well, the stock is trading in the positive. And you have analysts which have given the highest sell call to the counter. What is the story that the investors should be watching out for?
So when you compare Steel Authority of India to its other peers, something like a Tata Steel, JSW Steel and Jindal Steel and Power, well, SAIL actually has the highest percentage of sell ratings. Around 19 analysts out of 14 analysts out of 29 analysts tracking the stock currently have a sell rating on the counter, versus only 17 to 29% of the analysts tracking its peers have a sell call on those counters. Now, yes, we've seen an uptick today as well as a 7% uptick last week. This was mainly driven by 2 factors. One is a potential 12% safeguard duty on steel, which benefits sales volumes the most because it has a higher share of flat steel products, and at that point it had better valuation versus peers. However, the spotlight does come on the mid to long term concerns and whether this is just a short-lived uptick. If you look at historically, SAIL has underperformed its peers in the 1-year period. As of Friday, SAIL was down 10% in the 1-year period versus Tata Steel, JSW Steel and JSPL, which have seen gains of 6 to 30%. This is amid the kind of stock correction we've seen in the past few months. Even in the 5-year period, everyone has posted positive returns, but SAIL stands the least at 330% versus other counters that have gained over 400 to almost 800%. Now, the key concern is actually their capacity expansion. They plan to expand their capacity to 35 MTPA versus 20 MTPA right now by FY31. This entails a high capex plan of 1.1 to 1.2 lakh crore rupees. And however, on the other side, analysts do expect that the capacity expansion will only hit 28 MTPA by FY31. And the biggest concern around this capacity expansion is how it would impact the balance sheet. Now, expansion capex is set to start from next year, and high capex is expected to burden an already weak balance sheet as per MK and as well as Kotak Securities. Even in their previous historical expansion phase that lasted from FY10 to FY20, the expansion phase led to a 9 to 10 years of negative cash flows. Now, if you look at the debt and liquidity picture, as of H1, the company has a total of 35,600 odd crores of total debt, whereas the cash and balance stands at only 68 crore rupees. Even if you look at how it's changed from FY24 and FY23, the total debt has increased 16% versus the end of FY24 and has increased 39% versus the end of FY23. And their cash balance, on the other hand, has actually fallen when you compare it to FY24. And whereas for FY23, we've seen an uptick of 20% to 68 crores versus 50 odd crores in FY23. But the cash flow picture is what's turned negative actually. H1 FY25, we saw cash flows turn negative to around 1,100 crores versus positive cash flows of 2,900 crores in FY24. And even before that, FY22, FY23, we had positive cash flows. But the net cash flows have also been very volatile, and that's where the current liquidity picture looks like. The H1 FY25 cash flow from operations actually turned negative because of three main reasons. One is overall lower net profits. Second is higher joint venture losses posted by the company, as well as higher financial liabilities, as well as trade payables.
Right. Thanks, Mika, for getting us the details. So yes, cash flows are drying up, and the reasons that Mika has mentioned, that could be a concerning area that you should be watching out for. And analysts are pretty much telling you the story with maximum sell calls coming in with regards to a sale, though the last two trading sessions have been absolutely positive for the counter. If you pull up a 1 week chart of the counter or a 5-day chart, you'll know. There you go, 10% is the kind of up move that we've seen on this space. But moving on, overall, if you see in terms of the entire market conversation, the key question from here on is, what should you be doing with regards to the bounce that you've already seen right now? Because the best ever week in over last 4 years is what Nifty 50 has recorded. And the Nifty bulls have actually taken the lead throughout the week last year. It seems that the start also the bulls are taking the lead. Now, whether the dips are to be bought into, or is this recovery sustainable, or it's just another bull trap? To discuss this further, joining us on the show is Ajay Srivastav, MD at Dimensions Consulting. Ajay, good morning and welcome to NDTV Profit.
Hey, thank you very much, ma'am.
Ajay, my question coming to you is, how would you look at this bounce back? Do you think it's something which is going to be sustainable from here on, or is it just another bull trap?
I wish I could answer the question, but I guess the answer lies in the fact that certainly there is a reversal in terms of sentiment of selling by FIs, and which gives great comfort to the market, because India is naturally accretive on stocks by nature. Whether it's your PF which contribute, whether your SIP which are going down but do contribute, new people are coming to the market, capital market penetration is low. So put all the fundamentals together, India is a naturally equity accretive market. Now, what spoils the party, as always, is the FIs coming and selling and selling like nobody's business, and that affected the market. So intrinsically, I think we are a naturally optimistic market by nature, irrespective of fundamental. Sometimes we pay the price severely, sometimes we pay. So my guess is that till the FIs, and this is a caveat, till the FIs purchases come through, I think we don't have a problem in the market. Not too much to do with fundamental, because that's not going to change. Nothing changed in the last 3 weeks. What changed is the FI stand saying, I think, oversold this market. It's ripe for a plucking. So I guess is that for the next 6 to 9 months, the key ingredient is going to be that whether there will be a substantial amount of buying coming from abroad and in what stocks they're coming to. Because India, investor by nature, buys small mid-caps nature. FIs by nature had huge investment in banking stock, which have not performed for the 5 years. Now, whether we tally on to them and take a performance out of the market, to me, that's the key issue. Number two is, euphoria always hurts you. The worst part of the party is the last stage of the party, and you get up with a hangover. So I don't think so. You should pile in big time in this market. You should rejoice, enjoy the recovery in the market, see where the sectors where you are underinvested or you want to change your portfolio. But this is not a gung-ho market that fundamentals have changed dramatically, and therefore I need to go all in. Perhaps we are all underinvested in the banking segment, which is what is showing, but it will not overperform the market. I can tell you this month, even this rally, the Nifty next and the mid caps have done certainly better than banking. So they will not overperform your market. So in substance, calm your senses, enjoy the rally, relief to your portfolio, add to what you've missed out, but don't jump in whole hog and says, now the new next bull run has started. It has not started. Wait for March 31st results and we will see what comes through.
Ajay, good morning.
Good morning, Nilesh.
If the March 31st results are a bit disappointing, but maybe on expected lines, and if the commentary from companies around H1 and arguably H2 of FY26 is more constructive, you think the markets will discount a weak Q4?
I have a doubt because see, H1, at least the Q1, is always the weakest Q1 because the summer months, the consumption goes down, and the whole thing, the holiday season is partly contributed to the hotels industry.
But the base effect, Ajay, the base effect of last year for both Q1 and Q2, will that play a part?
The base, yes, it will play a part, but base effect was much better. Neeraj, we are ignoring the wealth impact of what has transpired in the economy today. We were all feeling super rich last year. Everybody was feeling super rich. And when you feel super rich, you tend to overspend and you spend the money. And you saw what happened in the real estate market. And you saw in the premium car market, you saw everything going premium, higher prices, hotel, aviation. The wealth impact starts to going to hurt you this year, because the net wealth of the people who are invested in the markets has now gone down substantially. And that affects your consumption behavior. So my own feeling, and it's showing up already in the quarter that we are seeing going past, that the kind of sales that we used to see in the year-end sales, etc., are not coming through. So fundamentally, the market, I don't think so. The market fundamental will change in performance. Yes, it changed because somebody came and buying big, 7,000 crores of big buying. But performance-wise, I think we will be worse than even the last year's base. It will be very difficult to even make the last year's number if you ask me the most consumer sector of the economy.
So Ajay, couple of things over here. Now you're talking about how the earnings probably will look at. Secondly, FI buying is the key trigger that you're watching out for. What would you advise Indian investors to do? Chase the momentum or stay put?
Well, again, there's no Indian investor. It's a question of how much are you invested. Some are even starting off today, for instance. So it's a wrong advice to somebody who's starting off today and saying, don't start your equity portfolio. But if you're over-invested in the market, this is not the time to go and leverage yourself and invest more. I think it's a prudent to be, at this point of time, to be some cash, continues to be cash. You'll get opportunities, but reorder the portfolio. If you were stuck in lots of small caps and lots of companies which are not doing well at all, making losses or whatever it is, this market again gives you a chance to get out of those stocks and move to sectors which are tariff resilient. In my view, that's the first issue in tariff resilient, and normal consumption issue related seems out of it. I think you need to reorient your portfolio, use this opportunity to reorient your portfolio, not to significantly add to your portfolio.
Okay. And when you talk about, reciprocal tariffs as well, to the point that you're making, are you saying that the tariff anxiety is something which will probably cap the upside in terms of domestic markets as well? I mean, yes, there could be pressures in terms of US, but how are you looking at it from the US market perspective? And if that is the case, are you saying an avoid auto, pharma? I mean, these are major sectors.
It's April 2nd is around the corner. So let's not worry too much that if I don't invest today, my fortunes will be destroyed by April 2nd. We will know the story on April 2nd, what tariffs come into place. It is certainly a factor from a longer term perspective also, because the world is saying reduce the tariff. Now, when you reduce the tariff, it puts automatic pressure on you on your GST rate domestically. You can't have a very low tariff rate, which is compelling in the international scenario, and have high GST rates domestically. You just seen what happened to this car industry, electric car industry. You saw just tariff reduction has resulted in mayhem in the market. You've seen what's happened to Mahindra is going to get impacted. Tatas are going to get impacted. So, so it's not about tariff is going to just impact that one day. It'll impact some companies and so on and so forth, but it will also impact the fundamental nature of GST in Indian manufacturing. If you let cars come in the way what's happened for this electric car, it's got a huge impact on the Indian economy by and large, right down to auto ancillaries. So please take tariff as a little bit different scenario, not just the immediate tax for export, but also the fact that it will put pressure on the GST for the government to say, if the tariff on the car is 15% to come into from the country and their local tariffs are 5%, 20% is all, you can't have a GST of 28% and expect the industry to survive. So there are going to be very seminal issues to be discussed on the GST part, which is why I say uncertainty in an environment with high tariffs is going to be highly uncertain for GST. Local companies will pay a price not because of exports, but also because the import will increase the competitive intensity in a market which is not growing as much as we want it to grow. Therefore, Prudence is in order. I think last year showed us it was well paid for prudence. Same will pay for today. That euphoria will kill you. But as I keep saying, we are all long in the market, so we have confidence in the market. The question is, which segments are you invested in and whether those segments will perform. I think that's the challenge in the market more than whether one has to be in the market or not.
Yeah, well, substantial moves today in BFSI for sure, and Ajay spoke about that too. A positive linkage to FI buying, and we've kind of seeing that right over the last a couple of 2 or 3 sessions. Now, Ajay, if you are getting new money right now, or if you open one of your closets and suddenly pools of capital fell off, I wish they do that, where would you put that money to work at the current juncture at 23,500 on the Nifty?
See, we are, okay, let me be honest. We are putting the money, a lot of money in hospital at this point of time. That's one of the key segments we are putting into the money. Domestic hospital chains, we're definitely putting in the money. We are putting in money in select NBFCs at this point of time, and we continue to invest in NBFCs, including just saw one has been taken over at this point of time. And you know, the best part, Neeraj, you got an entry point even lower than what the PE fund was buying at. Now, these are golden opportunities you get. PE funds normally have done a good job of giving returns to their own shareholders. So if a PE fund buys any company, I can certainly believe that you should follow the PE fund, most of them at least, at this point of time, because they give a very good return at this point of time. So, hospital is one segment where we definitely are buying at this point of time large amount of investment. If you ask me, something pops out. And NBFC, large NBFC is in 2 segments that has been buying going on. And I don't think much has been bought in any other segment barring these 2. No. And commodities, if you don't have it, I think it's a must have if you ask me longer term. If you don't have it, buy it. Why? Simple answer. There's no increase in competition. As the rupee depreciates, the local price of commodity goes up, so you're on the safe side. No competition, price constantly goes up. All you got to do is to dig and make money. No better industry than commodities.
Ajay, cement, sugar, metals. I'm trying to think what else in terms of commodities, but some people say AI could become commodity too. But yeah, what within the Indian landscape? I mean, is it metals or is it others?
See, as I said, you've got to go for basic commodities, whether it is copper, it's aluminum, and zinc at that point of time. Because this is intrinsically, if you go to the end product, which is converted steel, then you're in a different territory altogether, because then you've got tariffs and competing imports, etc. But nobody can import in bulk, alumina in this country. It's counterproductive. You can't just do it. Or, for instance, iron ore, yes, some was imported, but by and large, we ourselves have, we got to use the local thing. So basic commodities, and luckily very few companies. So I think you are in a zone where your safety in money, safety in returns, good dividends. Cement is a dog at the end of the day. It has to be a dog because everybody is competing for a 6% growth rate economy, and everybody wants to add 50 million, 100 million capacity. The words are thrown out as if, what's going to happen? I don't know. Maybe we'll need cement for eating, for breakfast at the rate they're growing their companies. And you just saw what happened to cable and wire industries, what happens to competition. So industry may be good, but never forget the competitive intensity. That could kill your returns. You saw that happened in telecom long back. Industry is very good, but now with the competitive intensity gone down, you're making returns. Banking is the same story. It's got 80 banks competing for your business at this point of time. How do you make money out of that, except for the fact that, you got a captive saving bank account. So it's the same issue. Look at competition more than just the fact that industry is good. Cement, we are not putting in any money. We have not put any money ever. We will not put money in cement till something really changes.
Okay, Ajay. Great talking to you as always. Thanks for taking the time out and giving us your
I will open some cupboards.
You should. If the cash falls out, do share 50% with me. This is a good luck.
I will. Thank you. Thank you very much. Pleasure talking to you.
Likewise.
Thank you.
Okay. Well, viewers, we wish you all the cupboards and the cash within and the gold within accounted for, of course. So keep that in mind. But with that, it's a wrap on this leg of India Market Open from Tamanna, Hiral and me, Neeraj. Thank you so much for tuning in.
Cash in the cupboard.
It's a risky thing to say these days, isn't it?
Yeah, especially if you make sure we saw what has been happening in Delhi. So it should be
So cash in the bank.
And make sure there are no fire hazards around it, if at all. But in any case, well, that's a wrap on the show. We have a very special interview coming up with Ramdev Agarwal exclusively from the Motilal Oswal Ideation Conference. Stay tuned for that right after this break.
Small and mid cap, particularly in last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown. For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and
You're watching India market open and it's a great Monday for the markets. Over 200 points up on the Nifty. The broader markets though are also holding up, which is what is exciting. I want to pull up the advanced decline ratio even as you're seeing the Nifty 50 comfortably above the 23,500 mark. If all goes well, could you be looking at a 24,000 this week? I dare say that's a bit optimistic, but as things stand, it's looking pretty good. Even the advanced decline ratio is robust at this point. But the star of the morning, no doubt, is the Bank Nifty, nearly 2% up and running. The Bank Nifty is what is roaring today in today's markets. Let's pull up components of the Bank Nifty as well, just for a second, because it's the large private banks that are ruling the roost. Kotak Mahindra Bank really on top of it over there. Kotak Mahindra Bank with management changes in focus as well, about 3.5% up. Canara Bank, PNB are all ruling the roost. I want to pull up Bajaj Finance for a second as well and see if it's holding up. Even an IndusInd Bank completely flat after all of the bad news, but IndusInd Bank also holding up. Bajaj Finance about 1% up. So those are some of the other spaces. But if I were to pick outside banking and IT stocks recovery also okay. Firecrackers this morning, I would pick up some in the defense space as well. That's what's looking really exciting. Look at a Zentech, look at an MTAR. In fact, we had a great conversation with MTAR Tech just a few minutes ago. But the focus this morning on the Motilal Oswal conference that we are talking about, and we are exclusive partners there for the conference. You're watching this very special program. Motilal Oswal Financial Services is kicking off their 11th Ideation Conference, and you can catch all of that action exclusively on NDTV Profit. The conference is focused on deciphering key trends in broader markets and unlocking the full potential of small and mid caps. The conference is held every quarter, and it's a great opportunity for investors to find hidden gems in this space. During the course of the conference, that is today and tomorrow, we will be speaking to an array of companies as well as the leadership of Motilal Oswal. And let's start off with Ramdev Agarwal, who's joining in. Mr. Agarwal, great to chat with you. And what an interesting time to put the focus back on small and mid caps. when the market seems to have shaken off its blues a little bit, and small and mid caps, which have been in focus for valuations, are back in action?
Yeah. So good morning, everybody. So, this Ideation Conference is the place where you can check the mood of the actual industries, what's happening in the various industries, because we'll get 30, 40, 50 companies, I think 60, 65 companies in 2 days. So it will come from all varieties of industries. So one, you can check over there what's happening there. And second, after this lull, what is this correction of 14-15% in the index? Now finally market is turning around, and so I think happy days are here again. Things are looking good. I think IPO market will open up, QIP market will open up, foreigners are buying. So I think some more activities now, and lot more fireworks will happen.
Okay, happy days are here again, especially for mid cap and small cap. That's the question, because even a month ago they were pretty much written off. Everyone said that, stick to the large caps, valuations are not making sense. Even after a downtick of nearly 10%, valuations are not making sense. When you say happy days are here again, which are the kind of companies that you're seeing with that upside still intact?
Yeah, too early to say the decided trend, but we can clearly see the financials, particularly led by banks. That seems to be the flavor of the season. And it had to happen, because what brings you for the first round up to say 25, 26,000 index? I think banks were ignored for whatever reason, credit slowdown, NPA cleanup and all those kind of things. Now everything seems to be falling in place for banks. Banks are being encouraged to give more credit. Credit flow is going to increase. Liquidity is good. Rate cuts are in offing. Balance sheets are very, very clean. I mean, except for one or two here and there, I think the credit cost is the lowest. The asset quality is the best in the history. Even for the PSU banks, I think the provisioning cover is like 80-90%. So I think this is a great time. If credit flow increases to 14-15%, I think you'll see very good return from the banking stocks, because not only there is going to be earnings growth, there is also, you can buy them at reasonable price. This is the only segment where everybody agrees that though it is very large segment of the market, this whole market, for whatever reason, high quality companies, high quality banks, very clean balance sheets, and available at sub 20p. So I think this is the start of the new wave in the market, and here it is led by the banks.
Mr. Agarwal, good morning and thank you for speaking to us. You've always taught us that the bottom belongs to the person who stayed invested. Now, assuming that people stayed invested and are reaping the benefits right now, would you believe this is the return of the uptick, or is it difficult to say, because the street is divided between this being a scared cat bounce versus a sustainable up move?
Neeraj, who knows all these kind of things? I mean, you stay invested, remain invested. Markets have, fundamentally, this time the market doesn't have a problem of earnings crisis.
Right.
Earnings remain stable. Okay, it grew a little slower than the trajectory growth rate. Say, we were expecting about 12 to 15% kind of growth. The growth turned out to be 5-6%. But per se, the earnings remain solid. It is a multiple which is a problem. So multiple was said 23-24, that has come down to 20-21. So it's much more manageable. When earnings are not there, you don't know from where the earnings will come. But multiples, I think you can be a little lower, little higher. So my sense is bulk of the correction is done, and now, I mean, have we hit the bottom and it cannot go down? I mean, a lot of geopolitical things are there. April 2 is becoming a big watch day for the global equity markets. What is going to come out from US, we don't know. So I think we are going to have a lot of these kind of, big ticket events which are going to come. But on the whole, I think Indian markets, Indian corporates have shown resilience, and I would think that broadly next year's earnings are not going to be impacted by whatever comes on April 2nd. So, and then even the US market guys, they are sitting on cash, a lot of cash, and they would like to diversify a little bit. So my sense is that we are on the whole, we are in a slightly warm environment for the time being.
And Mr. Agarwal, I'd love to know about what excites you in the conference as well. But just before that, one more macro question, sir. If the US investor wants to diversify, you've always said that don't bet against India. I'm guessing that mantra still remains the same. But now, in 2025, we have a reinvigorated China. And we have a European economy which is putting capex to work. So are the options many for a global investor to invest currently?
Yeah, clearly global investor has more choices than what it was a year back. But then you're coming out of US. I mean, US is mother of all. I think it was almost 60% of the global markets. So at 62 trillion, you are, 50-60% of the global markets. Of that, if you take the money off the table, because see, US is also rock solid in terms of corporate performance. It's only the uncertainty brought by these tariffs and whatever new policies, the multiples are looking higher out there. So there also it is a multiple correction in US so far, and hence money. So the global managers would definitely like to diversify, and let's see. What is their pick at this point? It is very difficult to figure out what they like, what they don't like. I think right now in the environment of a lot of instability and unpredictability, I think they will go for certainty and predictability, and India offers that. India offers a lot of certainty, a lot of stability because of the massive domestic economy.
You know, I heard you saying, Mr. Agarwal, that tariffs is one of the things that is uncertain. And when we last spoke, uncertainty was the name of the game. We, when we spoke at our conclave, we were in the midst of the worst level of uncertainty. Has that eased? Even if we see worst case scenario on April 2nd, Trump does not roll back tariffs, have we seen the fear of tariffs ease? Now a sense prevailing that maybe there's more talk than action that will come?
No. I think one should not take it lightly. Let the April 2nd come. I hope April 2nd happens on April 2nd. There's no further delay. The markets are kind of getting ready for that. And on that day, see, it's not only about how much you charge on India. It's a global market. So how much you finally charge on China and other emerging markets. If you keep it at 20% for China and only 5-7% or 10% for India, I think China plus strategy could get a completely new energy. So we have to see on April 2nd or whenever this tariff thing is settled, what comes out of it. So, there will be some pluses, there will be some minuses, but I hope on the whole we'll not have to revise our earnings for the next year meaningfully.
Okay, let me come to the earnings question. We have now all come to the point that, all right, for quarter 4 is going to be a little weak. By the next 2 quarters, are we going to start seeing the pickup from FY27? Is that something that the markets will start discounting, is my point, where, all of the impact of the action in the last 3-4 months starts showing effect, whether it's tax cuts in people's banks, whether it's capex spend, whether it's the overhang of an election cycle easing. Does that start now showing in the markets in the next 2 quarters? So when you say happy days are here again, how long do you see those happy days lasting is the short version of my question.
Yeah, so actually through the 2 days, today and tomorrow, I'm looking forward to meeting as many companies I can. At least I'll cover 12 to 15 companies from different industries, and we'll get sense of what's happening. Since the banks are banks are a starting point for every country. Any country you go, banks is a place where everybody converges. All the businesses, they do have to do banking. So if the banks are going to see pickup in their credit, it means that overall economy is going to do well. My GST collections are quite steady, growing at about 9, 10, 11%. So I think there is a lot of stability also. But I think credit flow to the industry and the overall economy, that has been kind of slightly slow in last 6 months or so. And RBI is doing everything to increase the liquidity in the system, and yet it is not done. So let's see how we go from here. And what is the mood in the corporate world? I mean, now the fiscal benefit which have been given in this budget, that will start kicking in next 4-5 weeks, next month onwards. That will start flowing in. So what is the mood at the corporate level, that will come to know in this ideation conference.
What industries are you looking forward to speaking to or gauging the most from Mr. Agarwal? Whether you like the stock or no, or sector is separate. But what are you looking forth the most?
Yeah. No, one is of course a few banks, financial services will go to. Second is that infrastructure companies, how things are happening, how they are getting the flow of their orders, flow of the execution, the payment cycles, or you don't know. Neeraj, you have to just go from one place to other for half an hour, 45 minutes, and quickly gauge the kind of mood of the company. So it is going to be a lot of fun going from one room to other room and catching up with them. So I remain completely open. I don't go with a preconceived notion or anything like that.
What is the Ramdev Agarwal formula to quickly in a few minutes gauge what's going on? What are the 2-3 questions you ask? Give us your secret formula.
No secret formula. It's just how's the business, like you just ask, how's the business? And that's from there you start the very first question, you can see the management's eyes, and typically here, better performing companies only come. All the companies which are on the sideline, they would not accept the invitation or they will not come. So typically, we get to see more performing companies than non-performing companies.
Okay, that's an excellent filter. If you show up, you have something to talk about. So that's a great start there. So then let's talk about some of the companies that are coming, and some of them we'll interview on the channel as well. Companies like Radico, Aadhar Housing Finance, some of them are really been in focus, and I know you wouldn't want to talk about it specifically, but do you think that most of the pain that we've been seeing over the last 2 quarters would be behind them in terms of consumption? I think appetite of consumers has been one big problem across sectors. Do you see that easing?
I have no idea, in the sense that actually what the companies they say, or what we saw in Q3, there's absolutely no sign of resurgence of the consumption. The commentaries were somewhat better, saying that rural demand is picking up, but I think urban was completely dull. So I think to some extent we'll get boost from I think I'm seeing that 2 things improving. One is the fiscal concession, but more than that, I think credit flow in the overall economy, that I think will start giving some energy. And government spending is, I believe, I met few companies, they said the government orders, the infra orders, I think from December itself it has started picking up big time. So at least from one angle that is doing better. Let's see what's happening on the credit side and the general consumer demand, because inflation is also down and rate cuts are also coming in. I think rate cuts also do a lot of good to it. So a lot of things are coming to there. So that's what actually in toto reflects in the corporate mindset.
Got it. Mr. Agarwal, I believe from amongst pockets where you believe there is inherent growth for multiple years and this correction could be a good opportunity would be the capital market segment. Am I correct in gauging how you've thought about this pocket?
Yes, since I'm from this segment, I can talk a little more about it. Because, see, this historical change we are going through, expansion of the market, expansion of number. I think this will be the most crowded equity market in the whole world, forever, I would say. Not for 1 year or 2 year or decade. It is forever, it will be most crowded equity market in the world. So we'll have most crowded in terms of number of investors, most crowded probably in terms of number of companies listed, variety of companies listed, and a lot of funny things will happen here. Because if you are the big bazaar or big marketplace, a lot of things will happen, a lot of good things will happen, and a lot of new enterprises which would have not seen the light of the day will come into being, and that will give completely new impetus to the development of the country.
Okay. So and Mr. Agarwal, just one more follow up there, if you will. There is I mean, the recent corrective move had brought a valuation of a lot of firms to a fairly sane level in the capital marketplace. Would you believe it's across the board that there might be opportunities? Asset managers, brokers, pipe companies, everything will benefit, you reckon? Because it's a tall statement that you make, the most crowded equity market in the world.
Yeah, so obviously everybody will benefit. The thing is that who have conceived a brilliant business plan and who has that belief that and even from the industry, people also don't share the kind of optimism I have for the industry. So first, those enterprises need to share that particular optimism and have the game plan. So the guys who have game plan and executing, those are the companies to chase.
Since we're speaking about the capital market space, and who better than you, Ramdev, to give us a gauge of what the appetite is? Because we get, data from the mutual fund industry that was a little, not so heartening from last week. But in terms of appetite, have you seen that resurgence in the last 1 week or so? Are you seeing people cool off and becoming a little wary? What is the trend that you are spotting?
Yeah, so clearly the capital market activity level, clearly we have seen bottom in March. I would say it was weakest in the month of March. January was, I think December, January was the best. February was somewhat lower, of which we have the numbers. And March could be, I would think it will be lower than February. That's what my sense is. But things are picking up. After seeing the lows in the March, say, second week or something, we are seeing pick up in the third week and all. So that's the nature of the thing. As the market recovers, even the confidence in the mutual funds and private equity and PMS, everything goes up. The guys who are sitting on the fence, particularly the large guys, they start putting their cash into the market. So that's the process. When it is the best time to buy, there won't be anybody to buy. When it is the worst time to buy, there will be massive crowd in the market. So that's the very nature of the market. We have seen the low of the market for the year, I would say, in terms of action, and the recovery has started. Now, how rapid recovery will be, and will it again go back? Those are different things. Those are difficult things to figure out. But I think it's a nice market now.
So, from in that gauge of best time to buy and worst time to buy, where are we right now?
We are closer to the best time to buy.
Okay. Okay, and in terms of what you like, you already talked about financials. Are you liking NBFCs? Are you liking large private banks? Apart from financials, are you going to look at more capex, push, impact stocks? Just give us a sense of what Ramdev is liking right now.
Yeah. No, I don't pick stocks because I don't buy directly. I buy only my own mutual funds. So these questions should be directed to the practitioners of day-to-day stock picking.
No,
I'm not doing that.
Yeah.
But I can broadly see, so I can't talk about, first thing is, actually I'm not on top of any of the stocks which I can say that, here you should buy.
Let's leave stocks out of it. Let's leave stocks out of it.
Quick commerce.
Let's leave stocks out of it. In terms of what sectors, for example, is quick commerce still as hot? Is autos looking a little painful because we don't have Teslas coming in and what's happening? That kind of a sense.
No, not Tesla coming. This 5 minutes charging, we saw the innovation last week where BYD said that we can charge in 5 minutes car for 400, 500 kilometers. I think this is a game changer. This is going to have, this will bring adoption like at a very, very rapid pace. So I think if that is right and they can push it through, push it into the market in a large number, which China can do, I think in 10 years' time you'll see a complete transformation of this industry. So I think we are looking at huge innovation, huge disruption also, and massive opportunity also, because there will be a lot of companies which are not to do with the per se engine technology or car. There will be winners and losers of this particular game. Winners will be the ones which can successfully adopt the technology and bring products, incorporating them. And there will be a lot of, braking systems or the tire systems or a whole lot of
part of the cars which have nothing to do with the EV technology or IC technology. I think you'll see some of these companies winning big on them. So it is very interesting space, and I would definitely like to meet some EV companies, some auto companies here and figure out what are they thinking about this particular innovation.
Yeah, and there are a clutch of them out here. I mean, there is hospitality, auto, recycling, and the likes. Mr. Agarwal, one more question from my end. You've looked at autos through so many decades, right? Hero, Eicher, Maruti, etc. If indeed this global EV giants come to India because of the duty changes, etc., does the Indian auto industry rise to the occasion, you think, or it's a case for disruption for the Indian automakers?
No, so far what we have seen is that new technology will be brought mainly by the existing companies only. I mean, at what pace they will bring, that's a different thing, and who will bring faster, that's also a different thing. But we are not seeing any major four-wheeler company with only EV technology. You know, say some small companies are there, but nothing mega in size, and all the companies have launched their own EV products. So let's see who scales up, and so it's a hybrid kind of situation. Like in US and all, you have Tesla, which is only EV, that kind of thing, or BYD, which is only EV. Those kind of evolution has not happened in India so far.
What about IT? Are you liking IT at all? The IT trade, does it continue in your view, or too much uncertainty there with lack of clarity on what's happening in the US?
Yeah, globally the largest market share of market cap in the market, global market cap of 125 trillion is IT. IT is about 21%, and I think banks are about 17%. So clearly IT has its own place, and our IT is somewhat different from American IT at least. So they're not, ours is a services company, not a technology company, but there is some correlation out there. I mean, execution of a lot of cutting edge technology is also done by the services company. So see, right now it looks like a little threatened in terms of growth, but I think economics still remain on the side of Indian IT.
Got it. Okay. Mr. Agarwal, lovely talking to you, and all the best with the conference. I'm sure it'll be a riveting set of conversations. So, but thank you so much for sharing these insights with us.
Thank you. Come over here and speak to all these companies.
Yeah. We're planning to come to do that.
We
have a team there too. Yes, for talking to a bunch of companies. So thank you so much, Mr. Agarwal, for doing that, for talking to us today. Right, and that's and it's an interesting set of companies, and it's a great time to talk to mid-caps, I reckon. So the timing of the conference for Motilal Oswal couldn't be better. I'm glad that we are covering key facets of this conference.
For me, the headline and the takeaways, happy days are here again. That coming from Ramdev Agarwal is quite a stamp in itself. So what do you pick when happy days are here is really the question. And it's the time to buy, he says very clearly. So very key takeaways from this conversation. Thank you so much for joining us, and of course stay tuned to NDTV Profit for much more.
Small and mid cap, particularly in last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Small and mid cap, particularly in last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. This show gets you answers to all of your stock-related questions. And to that end, the numbers that you see on your screen on the top and on the bottom, that's where you can get in touch with me. And the one on top, of course, is the WhatsApp number. The one on the bottom is the landline number where you can call us. Let's very quickly take you through what's happening with the equity markets, and it's a buoyant start and a continuation of the up move that you saw through the week last week. You had the Nifty 50 gain the most in a week in over 4 years, and that is moving even further, 1.2%. And what is leading to this move is the Nifty Bank, because financial stocks are contributing to a bulk of the up move for the Nifty 50 at this point, 2.3% or so for the Nifty Bank. The PSU banking pack also looking very good. Let's pull up the constituents of both of those indices. You have the PSU banking pack that's up about 2.2% or so. So Nifty Bank, Kotak Mahindra Bank, strong gains of 4% or so. ICICI Bank does not make the top list, but it's up and about as well. IDFC First also gaining about 2.3% or so. Can Bank looking strong, up about 3%. IndusInd Bank, for obvious reasons, is not finding favor in trade today. But everything across the board is looking strong this morning. Let me get our experts on for the day. We've got Saurabh Jain, who is the equity head research at SMC Global Securities, as well as Ajit Mishra, who is the senior vice president research at Religare Broking. Gentlemen, thanks so much for joining me this morning, and pleasure having you on the program. I believe our first caller of the day is in, and it's a great one. In fact, we've got Roy Matthew, who's calling us from Jammu and Kashmir. He's a serving participant, or he is part of the Indian Army. Roy, thanks so much for calling us this morning, and absolute pleasure speaking with you this morning. How can we help you?
Sir, I am holding IDFC First Bank at the rate of 83 of 7,000 shares.
Okay.
What is the future of the shares? Can I hold or sell, sir?
Okay. Roy, can you help me with when you bought these shares, and what was the thinking when you bought it? Did you think that you would hold for the long term?
Sir, around 2 years.
2 years ago.
I can hold for 2 years.
You can hold for 2 years. Okay. So let me get your question answered. I will in fact go to Saurabh on this question because it's a long-term view that is being sought. Saurabh, there's an up move in banking stocks that we've witnessed today as well as the last few days. IDFC First Bank, a lot of people saying that this is an attractive bank to hold, valuations are looking attractive, but Roy has bought at slightly elevated levels. What are the prospects for the next 2 years?
Hi, good morning, Alex. See, our view is very constructive on the banking sector per se. Yes, you are absolutely right that the valuations are low, considering the fact that in historical context also. The point is that the stock has got beaten down because of the street was disappointed with the last 2 quarterly earnings. But since his view is for next 2 years and the management is quite confident of coming out with the problems they had in the past, I think it is a good bank to hold. I would not recommend to average it out, but at the same time, I would suggest hold on to it.
Hold on. Another, Roy, hopefully that answers your question, and thank you so much for what you're doing. It, of course, keeps all of us safe, and absolute pleasure having you on the show. We've got the next question on Utkarsh Small Finance Bank, and this is a question that has come through on WhatsApp. It is, I'm trying to figure out who this is. Preeti Tekchandani is asking this question. She's bought at levels of 30.7 in a very large quantity at that, to the extent of 34,000 shares. What should she do at this juncture? The stock is currently trading at 25 or thereabouts. On the charts, Ajit, what is the view here?
Yeah, good morning, Alex. So, Alex, it's decisive downward journey for almost like 8-9 months now. That earlier post the listing, it was hovering in this band 44 to 66, but post the breakdown, we are seeing gradual drift. Of it, the stock has reclaimed short-term averages, so that may result in further respite, but the overall trend still looks negative, and it's not going to change until we decisively reclaim 35 mark or form some reversal pattern. So as of now, my recommendation is to maintain a trailing stop at 23 and use this recovery towards 34-35 levels to exit your longs.
All right, so hopefully that answers your question, Preeti. We've got our next caller from Chennai. Hari is calling us. Good morning, Hari. How can we help you today?
Hi, Alex. Good morning. It's nice talking to you.
It's my pleasure.
Yeah, Alex, my query is regarding Bajaj Housing Finance. I got it at the average price is around 140, and I have a quantity of 200 with me. So I'm sitting in a very minimal loss, but I'm wondering since there is a large portion of the 1 year lock-in is getting ended next month. So I was wondering whether to hold this or I can average it in the next month. I really don't understand how this stock will progress. Booking a loss is not a problem, but I just want to know whether I can hold it or for a long term, or what should I do on this?
Okay. Hari, do you have any other stocks in the financial space that you're holding right now?
Yeah, actually, Alex, I do have everything. I have the bigger banks, even the NBFCs also I have few, yeah. So I am thinking whether I can exit and go for some other stock in this case.
But the thinking was when I'm guessing you bought it shortly after the IPO, is that right?
Yeah, exactly, yes, yeah. So even when I bought it, I saw the price to book value was very high, but I thought it will do good in a longer run. But I don't see anything moving on this stock. Yeah.
Okay, but you bought it for the long term, right?
Yes. Yeah.
Okay. So Saurabh, so normally for a 1 year lock-in to end, this is something that usually brings people to the table to say, let's take some money off the table, right? And there are substantial gains that people have made through the IPO because the issue price was 70 rupees. Is the concern valid, and would you hold for the long term? Would you use any dips to accumulate the stock?
I think the concerns are valid enough. In the past also, we have seen whenever the lock-in period ends, there is an enormous amount of sellings that do comes in, maybe for a short while. And that depends upon the credibility and the credentials of the company also, how the company is working operationally, as well as the valuation metrics also. So in case of Bajaj Housing Finance, we have already seen good amount of correction coming in from as high as 10 times to book value. Now currently it is trading above 5 times to book value. It's considerably at premium than its peers. But also you have to keep in mind that the company has always grown above the industry average. It has grown to the extent of 25-30%. So while the management is good, company is good, long-term prospects are good, but his concerns are valid. And if he want, for the short term, he may sell his holding and buy again after the lock-in period and the sellings resumes. And for the long term, I would say he can stick with it, but he should have a time horizon of 2 to 3 years.
Let me ask you this: if he sells incrementally, should he look at Bajaj Finance instead?
I mean, he can, but he should have a view of the finance sector, NBFC per se. Now he is betting only on the housing finance. Bajaj Finance is certainly a good option than Bajaj Housing.
Okay, better option. Yeah. Okay. All right. Let's take the next question. Pramod is writing in from Bengaluru, and he's asking about Sansera Engineering, which he's got an average price of 1,500. Should he average his holding right now? Is the question. Ajit, on the charts, I'll come to you on this one. The stock is currently trading at 1,235, and so it's not a very substantial loss to his holding because he's got only 50 shares. But should he buy more at this current juncture?
So Alex, we have seen a decent correction from the record highs. The stock retraced to the neckline area of his previous consolidation range, and now we are seeing gradual recovery. Yes, this recovery can further strengthen once we cross this barrier of long-term averages around 1,300 levels. So if, let's say, its view is short-term, definitely can consider adding to this position. But at the same time, we should be very strict with their stop losses. Now, just in case if the stocks fails to hold 1140 area this time, probably this correction may resume again. On the upside, 1400, 1420 would be the zone where he can think about liquidating at least half of its position and trailing the stop loss to 1380 area.
Okay, all right. So that's the view on Sansera. Ram Prabhu is calling us from Andhra Pradesh. Hi, Ram Prabhu. How can we help you today?
I have a
Vishaka Industries shares. Bought it some 10-12 years back, about 2,500 at 119 rupees.
Okay.
So what is the future of this company? Should I hold it or sell it?
Sir, can you actually tell me about this company, because I'm not very familiar. I see that it's engaged in manufacturing.
No, yeah, it is a Vishaka Industries. This is a Hyderabad-based organization. Manufacturing asbestos sheets, asbestos cements, and polyester cements and other preparations. Recently, they had a textile industry also. Vishaka Textiles spun under. And now the second generation is taking up this company to auto electric ancillaries units.
Okay. But it's a very small company. So
in the asbestos.
Yeah, I get that. And you are
in asbestos industry.
Yeah, and you're Andhra Pradesh based as well, so you probably came across the company there. 550 crore market capitalization though, Ram Prabhu. I'm just wondering if there's a larger company that you can invest in. Why did you choose this? In 12 years you've held it.
Yeah, actually I got it in the initial stages from the public offer. Then later I have added to it, and due to my job pressure I could not able to focus for a longer time on this.
This is a fair
so
point.
Now when I saw,
Yeah, so now you want to know whether to exit at a loss and deploy your funds elsewhere.
What is the future of this organization? Yeah.
Got it.
Yeah.
I'm not sure if Saurabh is going to have a view on this. To be absolutely frank, Ram Prabhu, you may be closer to this company because you're based there, so you will be better aware than all of us. But what should the strategy be here, Saurabh? If you have a view on Vishaka Industries, then you can give that. But if not, do you sell at a loss? Do you deploy it elsewhere? There are a lot of prospects right now.
I think difficult to give view on this company. As you've already said, it's a 500 crore market cap company. But if you look at the valuation, it's close to 0.7 times to book value. And in the last 2 quarters, it is making loss. But since it is a very old company, and and looking at the valuations also, I think some kind of a cyclicality is there in the business. He can hold on to it.
Okay, there's some cyclicality, and you seem to have done your research, Ram Prabhu. So if you're studying the financials, please continue to do so. And I understand that there are pressures and pulls on your time, but then if you are more aware of the company than our experts are, then you should continue to study the company and take a call based on that. All right. The next question is on Swaraj Engines, and this is for a period of 2 to 3 years that a view is being sought. Arjun is asking, he's writing in from Bengaluru, he's got 4 shares that he's purchased at a price of 3,500. Saurabh, on the fundamentals, would you hold on to this?
Yes, again, this time around also, I think the agri economy is doing good, and the company makes engines for the tractors, and especially the tractor segment is looking quite good. So in my sense, I think it should be a good hold. You should hold on to a stock.
Okay. All right, so it's a hold on Swaraj Engineering. Purna Sai is calling us from Andhra Pradesh as well. Hi Purna Sai, good morning. How can we help you today?
Good morning, Alex. I'm holding the Kalyan Jewellers, sir. I would like to know about technical, sir.
Okay, so your voice is not coming through very clearly, but I understand your question. So Kalyan Jewellers, you bought at levels of 416. Just very quick answer. Is it short term or long term that you're seeking?
Short term, sir.
Short term, all right. And you're making a profit, so you're wondering whether to book, I'm guessing. Ajit, he's making a small profit here. The stock is up in about 4.5% in trade today. Does he take money off the table?
So Alex, my recommendation would be to trail his stop loss and let this profit inch higher, because we have a hurdle around 500 mark, which is very close to the current area. Once we break this barrier, then probably 530, 540 is also something that the stock might test. So with trailing stop loss at 480, he can continue to hold his position. And once we cross this 500 barrier, he can trail his stop to 490 area and wait for 530, 540 as a positional target.
Okay, if I'm not mistaken, okay, so that's the view on Kalyan Jewel. If I'm not mistaken, auto is not doing particularly well in trade today, and there's quite a swath of the market that is doing incredibly well. So in that context, there you go. So it's more or less flat. Auto ancillary player, you may not have heard about this, but it's an interesting company, Gabriel India. And we've got Rajiv from Mumbai, who has bought 200 shares at a price of 500. So he's in the green right now, and he's seeking a short-term technical view on this one. Ajit, I'm coming back to you on this. Should he book at this point?
Alex, we should definitely hold because we have very limited or a handful of stocks, in this market which are trading at their record highs. And Gabriel is one such name that after spending almost 6-8 months under consolidation in a broader range, close to around 550 to 400 was the range. It managed to surpass the upper band of late with strong volumes and price action. So this indicates a possibility of further up move towards 680 to 720 area. So he should definitely hold. Now his trailing stop loss should be at 550 on the closing basis, and he can wait for the targets.
Great. All right. The stock is up and about 2% in trade today. So hold is a recommendation with a trailing stop loss. Aditya is calling us from New Delhi. Hi Aditya, good morning. How can we help you today? Aditya, can you hear me? All right, we seem to have lost it. Oh, okay, Aditya, please go ahead with your question.
So I'm holding 100 shares of Bharti Hexacom at an average price of 959.
Right.
Just wanted to ask for whether I should continue to hold or look to book profit.
Do you have a long-term view on this? Did you buy based on the fundamentals?
Yes.
Okay, so you're not in a hurry to sell, right?
No.
Okay. So Saurabh, on the fundamentals then, Bharti Hexacom, he's holding on with sizable gains at this point. Should he take some money off the table or continue to hold?
I think the outlook remains optimistic since Bharti Hexacom works in a limited circle. It has a well room to increase its average revenue per user and the profitability, and the market is pricing well in that, and that is the reason the stock is gaining traction. My sense is if he is looking for long term, he should hold on to it.
Sizable gain over the last month or so. All right. Aditya, that's a view on Bharti Hexacom. It's time to hit the rapid fire segment on the show. And this, remember, is where we throw as many questions at our experts as possible over the course of 2 minutes. Saurabh, Ajit, hope you're ready. The first one coming through is on Axis Bank, and this is a question from Mark. He's bought at levels of 1,002 rupees per share, and he's looking for a 3-month view. Should he hold or sell? Ajit?
Hold and maintain the trading stop at 1080 for positional target of 1180.
Okay, oil marketing companies in focus. IOC is the name of the counter. 151 is the buy price. We've got Nidhi from Ambala who's got 1,900 shares. She's wondering whether to hold with a period of 6 months. Ajit?
Hold now. The trailing stop should be at 120 and around 145 she should review the position.
Okay, fundamental view is being sought on RBL Bank. Jaya from Bengaluru wants to know whether she should buy at this point. Saurabh? Sell. All right. Ambuja Cements is the name of the counter. 80 shares at 584 piece bought by Sunita. What's the view on the charts? Ajit?
It's underperforming. Better switch to Ultratech or Dalmia.
All right. CDSL is the name of the counter. Buy price is 1257. Gul wants to know whether to add more at the current juncture or wait for the quarterly results. Saurabh?
Wait for quarterly numbers.
RVNL is the name of the counter. 25 is the buy price. 1,000 shares. Wow, that's incredible. Would you hold or take money off the table? JV wants to know. Ajit?
Certainly hold, and now since he is a long-term investor, 300 is the immediate base with 460, 480 as a positional target.
Okay, Wari Energy 2,930 is the buy price, 35 quantity. Srinivasa Rao wants to know hold or exit. Saurabh?
Hold.
Okay. Arun Kumar from Udupi wants to know about KFin Tech. His buy price is 1,546. 29 quantity, 2-month time frame. Ajit, what's the view?
Hold 1,050 stop, 1,300 target.
All right, fantastic. Gentlemen, thank you so much for joining in, for answering all the questions that you did. Pleasure as always having you on the program. All right, and that brings us to the end of this edition of Ask Profit. It's been an absolute pleasure bringing it to you. We've discussed a lot of stocks. Hopefully, that has benefited you. Do stay tuned. Lots more coming up on NDTV Profit.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
Hello and welcome to Know Your Company, that is KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single listed company every day. So today's company that we're talking about is Sami Hotels. What happens with this one is going to be interesting because clearly if you talk about Sami Hotels, the key question that we ask over here is it slowing or growing? Now, to get you more details in terms of the company, firstly, a prominent branded hotel ownership and asset management platform in India. They've raised nearly almost 1300 to 1400 odd crores through its maiden IPO, and the company was listed in September 2023. Now, 8 hotel operator brands is what they have. And if you talk about the operator brands, you have Courtyard by Marriott, Sheraton, Hyatt Regency, Hyatt Place, Fairfield by Marriott, 4 Points by Sheraton, Renaissance, as well as Holiday Inn Express. Overall, if you talk about the total number of hotels, it's a portfolio of almost 28 of them. And in terms of their portfolio, the breakdown is between upper scale and upscale, which is around 30% of their portfolio. Upper mid-scale is around 40%, and the remainder is mid-scale, which is around 30. So that breakup between the three is in that range of around 30 to 40% as we speak. Overall, they have almost around 1,682 keys, and these are 8 hotels in that upscale and in the upscale portfolio. If you talk about the upper middle scale, which is 15 hotels, they have around 2,250 keys. And if you talk about the mid scale, they have 12 hotels with nearly 1,730 keys. So that's the numbers that we are working around with. So clearly, the highest one in terms of number of keys is in the upper mid-scale segment of the company. But now let's understand what are the rating parameters that we are using this time around with regards to where Sami Hotels goes. Firstly, we will talk about the income statement. Mahima will shed some more light on that one. Along with that, we'll talk about the balance sheet, how strong it is or not. The cash flows are very crucial over here, taking into consideration the expansion plans that Sami Hotels has from here on. And the profitability number is key. You talk about the shareholding, where to understand it's a mainly FI, DII driven company, so there are no specific promoters that are running a Sami Hotels. But what's happening with the FI and DIIs is going to be crucial. The street credentials, valuations. Now, valuations over here will not give you a P, but we'll give you an EV by EBITDA, taking into consideration a few of the parameters. You're talking about the street coverage, as well as the outlook that the analysts hold on this one. So these are the parameters that we will be rating Sami Hotels with. But first up, let's look at the income statement. Let me also get in Mahima to get us more details. Mahima, welcome. And firstly, the income statement, if you talk about the top line, the margins and the profitability, what is it telling you?
Right, so it's painting a good picture definitely in terms of the total income for Sami Hotels. The 3-year CAGR has been around 76%. 9 months FY25, the numbers stood at around 826 crore, which was around 979 crores in FY24. For EBITDA, the overall 3-year CAGR has been around 166%, so good growth there as well. 9 months FY25 numbers stood at 313 crore. Margins have improved from 29.4% in in FY24. This is consolidated margins to 36.2% in 9 months FY25. And net profit, so the company has become profitable now in 9 months FY25. FY24, there was a loss of around 235 crore, which is now been a profit of around 39 odd crores in 9 months FY25. In terms of operational metrics also, the overall RevPAR, which is revenue per available room, has been on an upward trend. If we see the quarter-wise performance, the RevPAR in quarter 3 had a growth of around 15% YOY, before that it was 16% YOY, and so on. So the RevPAR overall has always shown a double-digit growth in the past few quarters. In terms of other operational metrics, where overall operating rooms stand at around 4939, the occupancy overall in 9 months FY25 stood at 74%. The average room rate in 9 months FY25 was 6047, that is 6047. And in terms of their portfolio divided into domestic versus international, the overall portfolio, the domestic mix stands at around 79% versus that of 21% in international. And the upper and upscale hotels, the ratio is around 66% in domestic and 34% in international. In terms of segmental performance, like Hiral mentioned earlier, there are 3 different segments in which the hotels operate. The first one is upper upscale segment, where the occupancy is stable, the average room rate and RevPAR are on an increasing trend. 43% of asset revenue for Q3 FY25 came from the upper upscale segment, and 34% of this revenue came from food and beverages. In terms of upper mid scale, the occupancy is stable. Again, ARR and the RevPAR are on an increasing trend. 42% of asset revenues for Q3 came from this segment, and 25% of that came from food and beverages. Now, lastly, mid scale assets, in this, occupancy as well as average room rate and the RevPAR are on an increasing trend. 15% of total asset revenues in Q3 FY25 came from mid-scale, and around 8% revenue came in from food and beverages. So here there has been a slowdown in terms of revenue from food and beverages, which is also overall has had an impact on the Q3 numbers. Lastly, in terms of segment-wise, the RevPAR, the upper upscale has seen a growth of around 16%, and the revenue mix is around 43%. The mid-scale has shown a growth of 18%, and the mix is around 43%, the revenue mix. And mid-scale has shown a growth of 10%, and the revenue mix is at 14%. So overall, good operational metrics as well as good performance, where the 4 key numbers are concerned, that is your revenue, EBITDA, margins and net profit, and which is why we've given a thumbs up for this particular counter.
Absolutely, a thumbs up is what is warranted here, because clearly from what Mahima is pointing out too as well, the story seems to be growing so far, at least in terms of the first parameter. But let's move on to the balance sheet. Now, what's interesting over here is if you look at the net worth, the gross debt and the cash and bank. In terms of the net worth, that's almost equivalent to the gross debt of the company, and that is the concerning area, because if you talk about the FY24 debt, 1,560 odd crores is what the company was sitting on, with a net worth of around 139 and a cash and bank balance of around 150 odd crores. Whereas if you talk about the first half of FY25, the gross debt has increased, and this is to the tune of nearly almost 100 odd crores to 1,650 odd crores, and their net worth has grown marginally. The cash and bank has also remained pretty much stable, a 150 to a 195, so not a major improvement on that front. But the gross debt, if that keeps increasing from here on with the kind of expansion plans that the hotel is sitting on, that could be a concerning point, and that's something we will speak to the management as well shortly as to how do they plan to manage this aspect. So clearly, with the net worth, the cash and bank balance that they have, it's a neutral rating coming in on that front, Mahima.
Absolutely. In terms of the cash flow as well, overall, if we see the cash flow from operations, they've been around of the same range. Overall cash flow from operations in FY24 stood at 157 crores, which is right now 122 crores. But the real picture will come when the year ends, and we'll have to compare the FY25 numbers with FY24 numbers. But in terms of the net cash flow position, the net cash flow position for first half of FY25 stood at 62 crores, which was 500 crores in first half of FY24, and this is because net cash flow was significantly higher because of the IPO proceeds that they had received. So this is not a like-for-like comparison, because this also includes the overall amount which was received from the IPO proceeds. So overall picture of cash flow, although in positive and in good numbers, which is why we've given a thumbs up where cash flow is concerned.
Right. So 2 parameters or 3 parameters that we've spoken about so far, but now let's understand the shareholding pattern, because why that is important is because this is a company which is mainly held strongly by FIs, DIIs and the public. There is no promoter that is involved in a way with SAMHI Hotels. Now what's happening is the FI holding has been on a reducing trend. From a 64.6% in September 23, it's actually gone down to 54.8%. Similarly, the DIIs are also offloading. It's gone down from 22.4% to a 18.6%. Yes, one aspect we need to consider is with regards to the absolute number of shares, but overall it's a declining trend there. And the public shareholding has doubled or more than doubled from a 12.9 to a 26.7. So there are concerns coming in that why are FIs and DIIs offloading, and what happens with regards to retailers, because mutual funds are now holding 15% stake. You have your AIFs which are holding around 3.5%. Your FDI is around 22.9. FPI is around 31.8. Individual holding stands at around 20.3. You have Madhuri Madhusudan Kela is holding 1.7 and corporates are holding around 3.4%. So yes, Madhuri Madhusudan Kela coming in is something which the street is looking forward to, but the key trend with FIs and DIIs offloading, that's one of the reasons why to this one, if you talk about the rating as well, it's a pretty mixed rating that comes in over here, and we give it a thumbs down though, mainly because FIs and DIIs are offloading.
Right, absolutely. In terms of the street cred also, Hiral, overall, it did list at a premium of 7%. It listed at around a price of 134. The overall stock price has been up around 12% since its listing now. The stock has been up 20% as compared to its issue price, which stood at around 126, and the stock is down by about 28% in the past 6 months overall. But of course, this is on the back of the market weakness that is also taken place in the past 6 months. But overall, since the stock has been down 28% in the past 6 months, but it's still 12% above its listing price. We've given it a neutral rating for now, and we'll have to wait and watch out for as to how overall their capex plan plans out, how key additions take place, and how occupancy rate also goes up from now, and how that adds to the overall top line. And that is something which will also make even investors interested in the stock, and then see how the stock performance pans out.
Right, and the next one is with regards to valuations. What is interesting is between SAMHI, Chalet, Indian Hotels, ITC, EIH and Lemon Tree. These are the ones which we've compared. And if you talk about the valuations, the current trailing for a SAMHI is not something that we're looking at. We've given a EV to EBITDA trailing which stands at around 15.5 times. If you talk about the other companies as well, clearly this is one of the cheaper ones in terms of SAMHI. Chalet is on the expensive side. Indian Hotels, of course, is on the expensive side. What comes in line with them is somewhere like a EIH. Lemon Tree again on the expensive side, right? So it's a neutral rating. It stands in between. We will have to watch out for the price to earnings, taking into consideration that it's just turned profitable. So from here on, the way the valuations pick up with the performance is going to be key. So we will watch out for the future valuations from here on, but slightly on the neutral side, only and only reason being that the company has just turned profitable now, and it's still in between all of the names that we've already mentioned so far.
Right, absolutely. And in terms of the analyst recommendations, there are overall 5 brokerages that are covering this stock at present, and all 5 have given a buy rating. And the overall return potential as per Bloomberg consensus stands at around 91%, which is why we've given a thumbs up. So overall, in terms of street coverage and analyst recommendation, all buys, no hold and no sell, and overall a 91% return potential, which is why we've given a thumbs up for the counter.
So 91% return potential and a thumbs up. But let's overall look at the outlook from here on. They're expecting a RevPAR growth to be stronger in the coming quarters and a 18% inventory addition to 5,650 rooms, and the net debt of around 1,700 to 1,800 odd crores in 2 to 3 years. So that is something which the company seems is not worried about. That's the range, and we are way below the range right now. In terms of upper upscale, they're planning to double the inventory in this portfolio, and addition rooms will come in the existing hotels. They're looking at conversion of 4 points by Sheraton, Pune and Jaipur, and the existing building in High Tech City. They're opening up a Westin Bangalore, Whitefield as well. You're talking about upper mid-scale, they're looking at addition of inventory at Fairfield by Marriott at Chennai. And in terms of mid-scale, they're growing Holiday Inn Express portfolio and openings in Greater Noida as well. So that's with regards to the overall outlook that the company has given and in terms of the guidance. But let's quickly look at the rating performance. If you talk about the final rating performance, it's a 5.5 on 8, where income statement is a up, cash flow is a positive, shareholding is a downer, balance sheet is a neutral. So these are the 4. And street coverage outlook, again a positive, valuations and street credentials a neutral. So taking all of this into consideration, it's a 5.5 on 8. But the caveat being over here that when you're looking at the kind of guidance that the company has, the kind of capex that they're looking at in terms of expansion, how that will turn around into a higher rating from here on. In fact, now let's welcome in Ashish Jakhanwala, Chairman and Managing Director and CEO at SAMHI Hotels. Ashish, good morning and welcome to the show. I mean, I'm sure you've heard the entire conversation we've had and we've actually dissected a SAMHI so far. But let's start with your overall outlook in terms of the growth that you're looking at from here on, in terms of your top line and bottom line, because that's an aspect which has been absolutely strong.
So thank you for having us on the show. So when you talk about growth, it's important that we split it into 2 buckets. One is same store and the other is growth coming because of renovation, rebranding and inventory addition. We've always stated that I think given the fact that most of our inventory is in tier 1 office locations, we expect the total revenue growth to remain high single digits to early double digit. So that's only for the stable hotels. If we add to that the impact of the rebranding, renovations and inventory addition, we do expect to maintain, I would say, mid to high teens total revenue growth over the next 3 to 4 years.
For your revenue per available room, Ashish, Mahima also joining in, you know, the entire trend has been that it has grown in double digits. Going forward, how do you expect that trend to pan out? Do you expect, because right now in Q3 it was a growth of around 15% YOY, but it has been 20% before as well. So do you think that, you know, percentage of growth will increase? And then how do you expect your top line to pan out, let's say by the end of FY27 from a longer term perspective?
So I think, as you know, total revenue in hotels, comprises of 2 parts, RevPAR and what comes from other sources like food and beverage. So if you talk just RevPAR, which is largely room revenue, we remain fairly upbeat. We think that the company should be able to maintain a double-digit RevPAR growth on same set of hotels. You know, I think it's really important to clarify that in several portfolios, when you see the RevPAR growth, it's not same store and there are additions and deletions in the portfolio. So for the same store assets, we think we'll maintain a double-digit RevPAR growth. You know, I would say about 13 to 14%. Total revenue growth, as I will repeat, that for the same set of hotels, we expect it to be around, as I said, high single digits to early double digits, because we have seen that the room revenue growth is higher than what we see from other sources. So there is some bit of a diminishing impact of food and beverage and other sources on total revenue. So that's how I split the total revenue growth in the portfolio.
Right. So, okay. So from here on, if you have to talk about whether the company will remain in the black, what's the trajectory looking like? Because you have turned profitable. You think this is something that will continue, taking into consideration your expansion plans that you have?
Yes, absolutely. I think one area where we have no doubts about is the fact that the turn to profitability is consistent, it's sustainable, quarter on quarter and through the years. So there is absolutely no doubts in our mind about remaining a profitable company in future. In terms of growth, it's important to note that all of our growth is funded from internal accruals and internal cash flows. So we don't see the gross debt really increasing in the portfolio. So what's really happening is that the free cash the company is getting, it's deploying that for creating growth for itself. And because all of our growth is really quick, I would say capex to revenue conversion, you would see the impact of that coming down to the bottom line. So you will see both net debt to EBITDA number and the profitability number improve year on year. That's something that we are fairly well certain about.
Ashish, in terms of the FIs and DIs holding, we've seen that they have been offloading stake. You must be having conversations with your investors. What are the conversations looking like, and why do you think that they're offloading?
So first of all, I think a part of the FII stake reduction is on account of the sale by some of our pre-IPO investors that happened last year. I wouldn't really classify that as FII sellings. These are investors who were in the company for the last 10, 12 years, and they had a lock-in for 6 months, which expired last year. So FII reduction from 64.6 to 54.8 was largely on account of some of the pre-IPO investors exiting. We haven't really seen any concerning trend with respect to our public holders really selling the stock. So that's my view on the FII. And honestly, quarter on quarter, investors are revaluing their portfolios. But some of the big investors that we have in our portfolio, we continue to have conversations with them. We don't see any trends which are concerning to us.
So Ashish, my question to you will be, are you looking at any other marquee names to come in, taking into consideration some portion of lock-in also ends, in recent days now?
So let me clarify, the lock-in, what is expiring, the number may be large, let's say about 20 odd %. But the fact is, one of the largest shareholders in the company has been Asia Capital or ACIC, and they've not really sold a single share for the last year and a half. So while technically the lock-in is expiring, I really don't expect that block to come into the market. So we really don't see a lot of supply coming in. In terms of bringing in marquee investors, I have built the company with institutional investors over the last 14 years. That's been a strength. And therefore, we continue to look at some good investors who can join the cap table, and we can build the company alongside them.
Ashish, you've overall guided that you'll be adding, over 18% of inventory, and this will lead to addition of 2,650 odd rooms. What will the capex number roughly? Overall, you've also said that your net debt will remain within that range of 1,700 to 1,800 odd crores in 2 to 3 years. But after 3 years, do you think that this debt will then see a decreasing trend?
I think the debt will. So we got to a peak debt as of December 2024, and that's largely on account of the acquisitions we made in Hyderabad and Bangalore. So the reason you saw a slight increase in the gross debt was because of those two acquisitions. From Q4 onwards, we've seen free cash coming into the business, which will eventually reduce our net debt. So I think pretty much we've seen the peak debt scenario as of December 2024. In terms of debt reduction, there are really two sources for that. One is, of course, the free cash that we're getting year on year. And I'll just take you through the capex requirement. And the second is the fact that we have announced what we call a capital recycling program, where we have sold some of our small hotels where the contribution to earnings was insignificant, and that capital also goes towards further sort of improving the overall balance sheet. So we've sold one hotel in the last month and a half or so in Chennai. We have a plan to continue with asset recycling. So when you look at free cash from the business and the proceeds from asset recycling, we feel fairly confident that we'll be able to take the net debt to EBITDA below 3.5 times over the next 12 to 15 months. In terms of capital expenditure, we have a planned capital expenditure of about 700-800 crores. And therefore, on an annualized basis, we'll see about 150 to 180 crores of capital expenditure over the next 4 years, all funded from internal accruals.
Okay, so all funded from internal accruals is what you're looking at. And I think that is key because if the debt remains the same with the capex plans that you have, I think the story is going to be whether Sami Hotels warrants a re-rating by analysts or not. But thank you, Ashish, so much for joining us on the show and sharing your views. So that's the management of Sami Hotels. And overall, the key question from here on is, Mahima, that with the plans that the management is giving us and with the analysis that we've done from a 5.5, whether with the performance over the next few quarters, will the company be able to get a higher rating, and whether there will be a re-rating that could be happening by analysts on this counter or not. So Sami Hotels, another KYC candidate for another 3 to 4 quarters. But completely out of time with this, it's a wrap on this edition of Know Your Company. Please stay tuned for more on NDTV Profit.
Small and mid cap, particularly in last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Small and mid cap, particularly in last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into
Hi, thanks so much for joining in. You're watching NDTV Profit and my name is Alex Matthew. We're winding down to the end of the financial year, just about a week to go. And usually in past years, what this means is that you had to call your investment advisor and take last minute tips on how you can save tax. There used to be a flurry of activity. You used to have to decide between equity-linked saving schemes, the Public Provident Fund, the Voluntary Provident Fund, the National Pension Scheme, and a whole host of other investments. And you'd have to try and decide whether you had advance taxes due that you missed out on and various other things. Now, it's quite likely that this year and this conversation is the last such conversation that we will have, and that's because of the changes that were announced by the Finance Minister in the budget for 2025, where next year, in all probability, a lot of you will gravitate to the new tax regime if you haven't already done so. But the fact remains that this year, a lot of you will still prefer the old tax regime because it makes sense. Deductions allow you to save more tax. Let's talk about a few tips and tricks that you can use to save tax in this financial year. Joining me is Arvind Rao, who is the founder of Arvind Rao and Associates. Arvind, hopefully I've set the context at this juncture for what is going to be an interesting conversation. Let's start with who can benefit, because I'm sure that you've done the calculation. I was surprised to find that I would be better off in the new tax regime, so I have fewer headaches than a lot of other people watching this. So who would benefit?
So I think the simple formula is one has to check whether they are claiming, all those who are claiming HRA deductions. So along with that, the typical ATC, NPS and the various elements that you mentioned, if all of them put together are adding to 3.5 lakh or more, I would put it as maybe even 3,75,000 or more. With those deductions in hand, definitely old regime will be better for them. And for all those who have no HRA, who have no home loan deductions and only looking to do ATC, can blindly go with the new regime, because for deductions of quantum anything less than this, the new regime ranks better for them.
Now, when it comes to last minute tax saving, obviously we are only talking about the old tax regime, and there's still another few days in which people can make their investments. Now, ATC is what we're primarily talking about, which is the section that allows people to save up to 1.5 lakhs. There's also ATCCD, which allows the investment into the National Pension Scheme. There's ATD. Why don't you explain all of this to us? What are the easiest ways in which you can save tax at this juncture?
So actually, before we go into those details, let me also highlight that the people, especially our viewers, all those who are salaried, can have some relief, because it is possible that maybe they have mentioned to their employer that they want to opt under the new regime, and hence they have not submitted any proofs. But after they hear this, they realize that no, if I were to actually total my deductions and if they are going beyond that threshold, they still want to go under the old regime. It is very much possible to do that, because salaried taxpayers have the option to even opt for the old regime right at the point of filing the tax return too. So typical things that one can consider for ATC would be your public provident fund, your voluntary provident fund, insurance premiums, say your equity mutual funds that qualify for tax saving, all these up to 1.5 lakh. In addition to this, you have an additional deduction of up to 50,000 for contribution that an taxpayer makes to the NPS under ATCCD. Then comes ATD, which is the medical premiums. So you can claim a deduction for the premiums that you pay for a medical cover for self, spouse, and children up to 25,000. Plus, if you have dependent senior citizen parents, that is 60 years and beyond, you can claim additional deduction. Actually, for parents itself, you can claim an additional deduction of 25,000 towards the premium. But if they are senior citizen as well, the threshold goes up to 50,000 as well. Okay. In addition to this, ATE or the education loan. So if anybody is servicing an education loan, the interest that you pay will also qualify for deduction under ATE.
And there is no upper limit to that, right? You can claim any amount of interest payments through education loans, right?
Not only that, you can also service a loan for self, spouse, or children.
Okay. There's also Section 24, which makes a lot of sense, or at least it made a lot of sense in the old tax regime. You want to explain that?
So I think one of the most favorite and commonly used deduction, which is the interest that you pay on home loans. So for the interest up to 2 lakhs, especially if you're using the home for your own occupation, is what you can claim as a deduction. In case you have let out the property, then you can claim. There is no upper limit on how much interest you can claim, provided you have that much amount of rent that can absorb those interest. The basic rule is that the loss from house property cannot be more than 2 lakhs.
All right. Now, when it comes to choosing which of these in the ATC, there are so many categories to choose from. Would you say that at this juncture, because of the way that equity markets have moved over the last several months, starting in September, that now may not be the worst time to deploy some money into the equity-linked savings scheme? Yes, there is a lock-in period of 3 years, but then that's not such a bad thing, right?
It isn't, but normally what I would talk to people first is that prioritize on the expenditures that you are doing and which qualifies for a deduction under ATC. So, whether it comes to, like, for example, a lot of people may be having their insurance premiums, so life insurance premiums, even the provident fund contribution that gets deducted every month from your salary. For a lot of people, that takes up a good chunk of that 1.5. Not to forget the tuition fees that you're paying for your children's education, whether it's in a school or for that matter, a college as well. Those also qualify for that 1.5 lakh deduction. So if all of this put together still leaves you room, then I think it's a great time to also look at the equity-linked savings scheme, because with a lock-in of 3 years, it's a perfect time to make the best from equity volatility.
A quick point to make here is that if you're likely to do the old tax regime this year and you're likely to switch to the new tax regime, then perhaps an SIP in an ELSS may not make a lot of sense. Arvind, you want to comment on that?
Absolutely. Yeah. So for the viewers, just to note that for ELSS, if you generally, as people would say that SIP is the best way to enter into equities. But since today we are in March, in the last week of March, whatever investments that you want this ELSS to fill the gap, those will have to be made lump sum. There is no point in making an SIP for that investment now, because those SIPs will invariably start from April and go on and overflow into the next year. And in case for the next year, chances are very bright that you will qualify, the new regime will work better for you. In which case the SIP will not yield the tax saving benefit to you. Not to forget that each SIP installment of the ELSS has a lock-in of 3 years. So it's not that the lock-in is counted per financial year, it will be per investment installment.
Now, a quick point before we end the financial year is that if you had advance tax due, which is if you had income from any other sources apart from your salary, to the extent of over 10,000 rupees, then you would have to pay advance tax, and you've missed all of the deadlines. The last deadline was on the 15th of March. But having said that, Arvind, there's actually a very important point to make. If you're working, if you're salaried, of course, and if your payroll department has not yet sent your salary out, or sent out your, or contacted the bank, shall I say, then you can inform them that you would like them to deduct tax on your behalf. Is that something that you can do?
Either they can do that, which is even possible now. I'm not very sure, considering we're 24th. I think most organizations would lock their payroll by the 24th or the 25th at the max. So that is option A. Or let's say that option has gone past. So what the taxpayer can still do is that they can even try and pay advance tax before the 31st of March, because The way interest for non-payment or short payment of advance tax works is in two ways. One is interest for every quarter of advance tax that you miss. And second is interest that starts from the 1st of April till the time you pay these taxes. So although you might have not been able to save the quarterly interest, but you can definitely try and save the interest that you will be paying from the 1st of April till the time you're filing your taxes.
All right, so that's an important point to make. I do want to ask, because in all probability, a lot of investors, a lot of taxpayers are not going to have significant capital gains tax due this year, particularly because of how equities have worked. But the opposite is true, in that if you have capital losses at this juncture, and I think a lot of investors have actually gone ahead and done what is called tax harvesting. Arvind, you still got another 4 or 5 days. Of course, equity markets have bounced back quite sharply, but I'm guessing there are viewers that are tuning in that still have capital losses. Would you say that it makes sense to book them, especially if they're long-term capital losses, so that they can set off future capital gains?
Alex, well, it is, but I think one has to keep in mind that the whole concept of the tax loss harvesting meant that you sell today and book a loss with the hope that you will be able to again buy those scrips at a lower rate in subsequent days. But if one were to look at the trend of the last 8 to 10 days, you might be able to sell today, but we're not sure whether you'll be able to buy it again at a lower price. So I think the viewers will have to take their call whether they want to do this or they're happy to probably weed out those scripts in their portfolio which are not performing at all, book those losses and adjust them against the gains.
And that holds true for equity mutual funds as well, where if you are, for example, or you did, for example, earlier in the financial year gravitate towards a very concentrated sectoral investment and that is underperformed, now might be a good opportunity, Arvind, to book those losses?
Yes, very well.
Okay. All right. Any last pieces of advice that you have for my viewers to safeguard their investments? One, of course, and also to save on tax?
I think to just summarize this, while we did mention it at the start, that the whole old and the new kind of regimes that are now prevalent. So any decision that you are taking now, please note that it has to be a very short-term kind of a decision, because from April, parameters will change. So for example, what I'm hinting at is don't try and get into a new insurance premium kind of a mode just because it will help you save tax, because you have to keep in mind that any premiums that you get in today, you have to pay them for at least 5 years. So don't indulge in that just for the sake of tax saving. Keep in mind the bigger tax slabs that are coming up for the new regime, and whatever decisions you take, let it be with a limited time frame of March 25 and not beyond.
It's a very important point. Don't make your investment decisions or expenses purely from the perspective of saving tax. That's not the right approach to have. Arvind Rao, thanks so much for joining in and for this very interesting, very valid and topical conversation.
Thank you, Alex.
All right. Well, and now let me hand it over to Malika, who's sitting right next to me, for Markets at 12.
Definitely. And I think I really like the conversation where he spoke about tax hacks, last minute tax hacks across various segments like equity investments, CLSs. So
the thing is that it's only valid likely this year, because starting next month onwards, most people are going to gravitate towards the new tax regime.
Definitely. A lot of key points to take note of there, but let's take a look at how the markets are performing. The Nifty 50 recovers over 7% and crosses the 23,500 mark as we speak since February 10th especially. The 30-pack Sensex is about 77,700 levels, over 1% up as well. So great figure over there. Nifty Bank gains for the 8th session in a row, to building in its longest winning streak since September 24th. The broader markets are largely in line with the benchmark indices currently, as you see that the Nifty Mid Cap 150 and the Nifty Small Cap 250 are over 1% up as well. Let's take a look at the top gainers and losers in trade today, and you'd see Kotak Mahindra Bank, NTPC, Axis Bank, BEL, SBI Life, SBI Bajaj Finserv are some of the stocks that are clearly soaring and doing well. But on the other side, you would see that, stocks like Titan, M&M, Trent, some of FMCG players are not doing that well. But Kotak Mahindra Bank, these shares of the bank, they hit a 52-week high recently. Let's also take a look at the sectoral picture to see which sectors are clearly leading the gains today. And then you'd see the green map over there. It's an all green map today, but you would see the clear leaders at the moment are the Nifty PSU Bank, the Nifty Bank, Finance, Realty, Oil and Gas, Energy and Pharma. Let's take a look at how the market breadth is faring at the moment, and as per data on your screens that you would shortly see, yes, the advanced decline ratio stands highly skewed in favor of the gainers, with just about less than a quarter of stocks actually trading in the losing segment. Let's quickly take a look at how some stocks on our watch list this morning are performing as well. Godrej Properties acquires 10 acres of land in Bengaluru and sees a revenue potential of around 2,500 crore, and you see that the stock is up close to 2% in trade today. REC received a positive note by CLSA that sees a 22% upside potential for the stock, and you'd see that it's up again over 2% in trade today. And let's also take a look at Macquarie, NTPC. Macquarie came up with a positive note on NTPC, and it noted a 35% upside potential for the stock, and you see it's close to 4% up in trade today. Moving on, another set of stocks that are in focus are of gas companies, especially after proposed regulatory changes for transmission tariff calculation norms. So Amit is bringing us all the details about what brokerages are saying about the possible changes in this segment.
Well, as gas stocks would remain in focus given the fact that PNGRB has initiated this consultation process to amend the existing pipeline tariff. Now, do remember this is a consultation process, so there will be an open house, and most likely this open house will conclude by April, and as per CLSA, the new norms or the new tariff regulations could be formalized by the quarter ending June 2025. And as per CLSA, they're expecting stocks like IGL to benefit given the fact that their operational cost could be lower post the implementation of the new tariffs, and also to some extent Mahanagar Gas could benefit because some cost benefit could come in for Mahanagar Gas as well. They are also saying that this would lead to higher pipeline tariffs for GSPL and GAIL from the current tariffs that they are incurring, and at the margin this could lead to a small hike in cost for other gas users, which are the industrial gas users. So that could be marginally negative for Gujarat Gas because that company generates most of its income from selling gas to industries. Now, as per Morgan Stanley, this proposed regulatory changes could increase the gas penetration in the country. Currently it's at around 6%, and India is aiming to increase this to around 15%, and this regulation could lead to that number going forward. As per Morgan Stanley, they are saying that this regulations are positive for transporters and upstream producers, and this will lead to normalizing returns for city gas distribution companies and for Petronet as well. They're saying that GAIL, Oil India, Reliance Industries stands to benefit the most, followed by GSPL, and they're saying that there are 4 proposed changes that could lead to higher pipeline tariffs, and hence it is most beneficial coming in for GAIL and GSPL. Now, GSPL had recently also seen a cut in their pipeline tariffs, so if this new norms get implemented, then the tariffs could be on the higher side, and hence GSPL also stands to benefit. Lastly, Morgan Stanley says that they believe that the proposed changes are part of the regulatory efforts to implement the One Nation, One Grid, One Tariff framework that were proposed by the government multiple times. In fact, post this proposal that has come in by PNGRB, Citi has also come out with its note on GAIL and GSPL, where they have initiated a 90-day tactical buy on both the stocks, and they are positive on both the stocks on potential higher tariffs that could come in. Citi has a buy rating on GAIL with a target price of 265, while on GSPL they have a buy rating with a target price of 370.
So clearly gas companies could see deeper penetration in the future, especially with regards to this regulatory update that's just come in. Now, another stock that I was mentioning before in focus is NTPC, as Macquarie maintains an outperform rating with a target price of 475 rupees for the stock and also sees a 35% upside potential. Mahima, my colleague, is joining us with more details.
Macquarie has maintained outperforming the target price of 475 for something like an NTPC. What they're saying is that overall the compelling play on India's power demand potential remains positive for NTPC. The assured ROE on thermal assets exposed to a steady medium-term regulatory regime is also overall positive for the company. Pickup in power demand continues to bode well overall for the sentiment. It is the overall upgrades to NTPC's thermal pipeline cannot be fully ruled out, and the clarity on next long-term driver, that is nuclear power, should emerge over the next 6 months is something that Macquarie is expecting. Now lastly, they are also saying that NTPC is a part of their India Diviner Series Tactical 6. So they've added this particular counter to their India Diviner Series Tactical as well. So this is the overall picture and the reasons as to why Macquarie is bullish on NTPC.
Thanks for that, Mahima. Now, viewers, get ready for an exclusive conversation with none other than the legendary investor Govind Parekh, dubbed as the master of bear markets. Parekh shares his insights on why keeping cash in your portfolio at the moment is critical for navigating market volatility. Now, he's known as the Dalal Street Wizard. Parekh has crafted an enviable portfolio featuring 60 multi-bagger stocks. In this candid chat, he reveals his strategies for thriving amidst deep market turbulence and his secret formula for long-term wealth creation. Let's hear a snippet from our chat with one of India's most celebrated investment minds.
We never invested in companies which we didn't know. So basically 2008 crash was the worst crash I have seen. In 2008 crash, the Nifty crashed about 50% in 6 months, whereas my portfolio came down by about 75% because the shares we were owning were all blue chip companies, very good companies, but they were quite illiquid stocks. And there was no market for that. When the whole market is in red, nobody was caring for these kind of stocks. So we took a big beating there. Fortunately, we were not borrowed. We never invest in the market.
No leverage.
No leverage. But we took a big beating, and so we held on to our whatever shares we were. And unfortunately, I didn't have enough cash to buy at those levels, which are so attractive. Subsequently, the lesson that I've learned from this crash, the most important lesson is you must have some cash with you. You cannot have everything in the equities for these kind of things to come. And you should also, expect the unexpected to happen. So that was a very big lesson in 2008. And after that, we've decided that my son Chinmay is working with me. So we both decided that we should have at least 10% cash in our portfolio.
Even if you like a business a lot, I'm guessing you are saying that if it goes up quite steeply, in a slightly unemotional fashion, you are happy to trim down some of that position. Would that be a fair assessment, sir?
Yes, we do that. Whenever the market goes up crazily, valuations are crazy, and people feel there's no tomorrow. You're not going to get stocks tomorrow, or you have to pay for looking at a share certificate or demat certificate, and when taxi driver is asking you and everybody is asking you kya lena hai, that's the time I think we sell some shares also.
Okay, you do that.
Even the best of the best companies, we sell a little bit.
Okay.
This is basically from risk management point of view.
Got it.
Because the cash collected is always going to be helpful.
So as per the legendary investor Govind Parekh, one must try to expect the unexpected and at least try and keep 10% of cash in your portfolio. With that, viewers, that's all the time we have on the show. But do stay tuned to NDTV Profit for more news and updates.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors
Well, thanks for tuning into this very special broadcast wherein we are going to be talking to Mr. Ramdev Agrawal on the sidelines of their 11th ideation conference, and promises to be a really riveting set of conversations, Tamanna.
Also a very relevant one, because it's a conference where they focus on small and mid-cap companies. That's the talk of the town right now, as we're seeing a resurgence in Indian markets, most beaten down, I would say almost vilified in the last few months.
Most certainly.
Is that the space where you see the comeback? To speak on all of this and more, we have Mr. Ramdev Agrawal with us. Mr. Agrawal, let me start with exactly that question. What a time to be talking about SMIDs, and are you excited about it?
Yeah. So good morning, everybody. So, this ideation conference is the place where you can check the mood of the actual industries, what's happening in the various industries, because we'll get 30, 40, 50 companies, I think 60, 65 companies in 2 days. So it will come from all varieties of industries. So one, you can check over there what's happening there. And second, after this lull, what is this correction of 14-15% in the index? Now finally market is turning around, and so I think happy days are here again. Things are looking good. I think IPO market will open up, QIP market will open up, foreigners are buying. So I think some more activities now, and lot more fireworks will happen.
Okay, happy days are here again, especially for mid-cap and small-cap. That's the question, because even a month ago, they were pretty much written off. Everyone said that, stick to the large caps, valuations are not making sense. Even after a downtick of nearly 10%, valuations are not making sense. When you say happy days are here again, which are the kind of companies that you're seeing with that upside still intact?
Yeah, too early to say the decided trend, but we can clearly see the financials, particularly led by banks. That seems to be the flavor of the season, and it had to happen, because what brings you for the first round up to say 25-26 index? I think banks were ignored for whatever reason, credit slowdown, NPA cleanup, and all those kind of things. Now everything seems to be falling in place for banks. Banks are being encouraged to give more credit. Credit flow is going to increase. Liquidity is good. Rate cuts are in offing. Balance sheets are very, very clean. I mean, except for one or two here and there, I think the credit cost is the lowest. The asset quality is the best in the history. Even for the PSU banks, I think the provisioning cover is like 80-90%. So I think this is a great time. If credit flow increases to 14-15%, I think you'll see very good return from the banking stocks, because not only there is going to be earnings growth, there is also, you can buy them at reasonable price. This is the only segment where everybody agrees that though it is very large segment of the market, this whole market, for whatever reason, high quality companies, high quality banks, very clean balance sheets, and available at sub 20p. So I think this is the start of the new wave in the market, and here it is led by the banks.
Mr. Agrawal, good morning, and thank you for speaking to us. You've always taught us that the bottom belongs to the person who stayed invested. Now, assuming that people stayed invested and are reaping the benefits right now, would you believe this is the return of the uptick, or is it difficult to say, because the street is divided between this being a scared cat bounce versus a sustainable up move?
Neeraj, who knows all these kind of things? I mean, you stay invested, remain invested. Markets have, see, fundamentally, this time the market doesn't have a problem of earnings crisis.
Right.
Earnings remain stable. Okay, it grew a little slower than the trajectory growth rate. Say, we were expecting about 12-15% kind of growth. The growth turned out to be 5-6%. But per se, the earnings remain solid. It is a multiple which is a problem. So multiple was said 23-24, that has come down to 20-21. So it's much more manageable. When earnings are not there, you don't know from where the earnings will come. But multiples, I think you can be a little lower, little higher. So my sense is bulk of the correction is done, and now, I mean, have we hit the bottom and it cannot go down? I mean, a lot of geopolitical things are there. April 2 is becoming a big watch day for the global equity markets. What is going to come out from US, we don't know. So I think we are going to have a lot of these kind of big ticket events which are going to come. But on the whole, I think Indian markets, Indian corporates have shown resilience, and I would think that broadly next year's earnings are not going to be impacted by whatever comes on April 2nd. So and then even the US market guys, they are sitting on cash, a lot of cash, and they would like to diversify a little bit. So my sense is that we are on the whole, we are in a slightly warm environment for the time being.
And Mr. Agarwal, I'd love to know about what excites you in the conference as well. But just before that, one more macro question, sir. If the US investor wants to diversify, you've always said that don't bet against India. I'm guessing that mantra still remains the same. But now, in 2025, we have a reinvigorated China, and we have a European economy which is putting capex to work. So are the options many for a global investor to invest currently?
Yeah, clearly global investor has more choices than what it was a year back. But then you're coming out of US. I mean, US is mother of all. I think it was almost 60% of the global markets. So at 62 trillion, you are 50-60% of the global markets. Of that, if you take the money off the table, because see, US is also rock solid in terms of corporate performance. It's only the uncertainty brought by these tariffs and whatever new policies, the multiples are looking higher out there. So there also it is a multiple correction in US so far, and hence money. So the global managers would definitely like to diversify, and let's see. I mean, what is their pick at this point? It is very difficult to figure out what they like, what they don't like. I think right now in the environment of a lot of instability and unpredictability, I think they will go for certainty and predictability, and India offers that. India offers a lot of certainty, a lot of stability because of the massive domestic economy.
You know, I heard you saying, Mr. Agarwal, that tariffs is one of the things that is uncertain. And when we last spoke, uncertainty was the name of the game. We, when we spoke at our conclave, we were in the midst of the worst level of uncertainty. Has that eased? Even if we see worst case scenario on April 2nd, Trump does not roll back tariffs, have we seen the fear of tariffs ease? Now a sense prevailing that maybe there's more talk than action that will come?
No. I think one should not take it lightly. Let the April 2nd come. I hope April 2nd happens on April 2nd. There's no further delay. The markets are kind of getting ready for that. And on that day, see, it's not only about how much you charge on India. It's a global market. So how much you finally charge on China and other emerging markets. If you keep it at 20% for China and only 5-7% or 10% for India, I think China plus strategy could get a completely new energy. So we have to see on April 2nd or whenever this tariff thing is settled, what comes out of it. So I mean, there will be some pluses, there will be some minuses, but I mean, I hope on the whole we'll not have to revise our earnings for the next year meaningfully.
Okay, let me come to the earnings question. We have now all come to the point that, all right, for Q4 is going to be a little weak. By the next 2 quarters, are we going to start seeing the pickup from FY27? Is that something that the markets will start discounting, is my point, where, all of the impact of the action in the last 3-4 months starts showing effect, whether it's tax cuts in people's banks, whether it's capex spend, whether it's the overhang of an election cycle easing. Does that start now showing in the markets in the next 2 quarters? So when you say happy days are here again, how long do you see those happy days lasting is the short version of my question.
Yeah, so actually through the 2 days, today and tomorrow, I'm looking forward to meeting as many companies I can. At least I'll cover 12 to 15 companies from different industries, and we'll get sense of what's happening. I mean, since the banks are banks are a starting point for every country. I mean, any country you go, banks is a place where everybody converges. All the businesses, they do have to do banking. So if the banks are going to see pickup in their credit, it means that overall economy is going to do well. My GST collections are quite steady, growing at about 9, 10, 11%. So I think there is a lot of stability also. But I think credit flow to the industry and the overall economy, that has been kind of slightly slow in last 6 months or so. And RBI is doing everything to increase the liquidity in the system, and yet it is not done. So let's see how we go from here. And what is the mood in the corporate world? I mean, now the fiscal benefit which have been given in this budget, that will start kicking in next 4-5 weeks, next month onwards. That will start flowing in. So what is the mood at the corporate level? That will come to know in this ideation conference.
What industries are you looking forward to speaking to or gauging the most from Mr. Agarwal? Whether you like the stock or no, or sector is separate. But what are you looking forth the most?
Yeah. No, one is of course a few banks, financial services will go to. Second is that infrastructure companies, how things are happening, how they are getting the flow of their orders, flow of the execution, the payment cycles, or you don't know. Neeraj, you have to just go from one place to other for half an hour, 45 minutes, and quickly gauge the kind of mood of the company. So it is going to be a lot of fun going from one room to other room and catching up with them. So I remain completely open. I don't go with a preconceived notion or anything like that.
What is the Ramdev Agarwal formula to quickly in a few minutes gauge what's going on? What are the 2-3 questions you ask? Give us your secret formula.
No secret formula. It's just how's the business, like you just ask how's the business. And that's from there you start the very first question, you can see the management's eyes, and typically here better performing companies only come. All the companies which are on the sideline, they would not accept the invitation or they will not come. So typically we get to see more performing companies than non-performing companies.
Okay, that's an excellent filter. If you show up, you have something to talk about. So that's a great start there. So then let's talk about some of the companies that are coming, and some of them we'll interview on the channel as well. Companies like Radico, Aadhar Housing Finance, some of them are really been in focus, and I know you wouldn't want to talk about it specifically, but do you think that most of the pain that we've been seeing over the last 2 quarters would be behind them in terms of consumption? I think appetite of consumers has been one big problem across sectors. Do you see that easing?
I have no idea, in the sense that actually what the companies they say, or what we saw in Q3, there's absolutely no sign of resurgence of the consumption. The commentaries were somewhat better, saying that rural demand is picking up, but I think urban was completely dull. So I think to some extent we'll get boost from I think I'm seeing that 2 things improving. One is the fiscal concession, but more than that, I think credit flow in the overall economy, that I think will start giving some energy. And government spending is, I believe, I met few companies, they said the government orders, the infra orders, I think from December itself it has started picking up big time. So at least from one angle that is doing better. Let's see what's happening on the credit side and the general consumer demand, because inflation is also down and rate cuts are also coming in. I think rate cuts also do a lot of good to it. So a lot of things are coming to there. So that's what actually in toto reflects in the corporate mindset.
Got it. Mr. Agarwal, I believe from amongst pockets where you believe there is inherent growth for multiple years and this correction could be a good opportunity would be the capital market segment. Am I correct in gauging how you've thought about this pocket?
Yes, since I am from this segment, I can talk a little more about it. Because see, this historical change we are going through, expansion of the market, expansion of number. I think this will be the most crowded equity market in the whole world forever, I would say. Wow. Not for 1 year or 2 year or decade. Okay. It is forever. It will be most crowded equity market in the world. So we will have most crowded in terms of number of investors, most crowded probably in terms of number of companies listed, variety of companies listed, and lot of funny things will happen here. Because if you are the big big bazaar or big marketplace, a lot of things will happen, a lot of good things will happen, and a lot of new enterprises which would have not seen the light of the day will come into being, and that will give completely new impetus to the development of the country.
Okay. So and Mr. Agarwal, just one more follow-up there, if you will. There is, I mean, the recent corrective move had brought a valuation of a lot of firms to a fairly sane level in the capital marketplace. Would you believe it's across the board that there might be opportunities? Asset managers, brokers, pipe companies, everything will benefit, you reckon? Because it's a tall statement that you make, the most crowded equity market in the world.
Yeah, so obviously everybody will benefit. The thing is that who have conceived a brilliant business plan, and who has that belief that and even from the industry, people also don't share the kind of optimism I have for the industry. So first, those enterprises need to share that particular optimism and have the game plan. So the guys who have game plan and executing, those are the companies to chase.
Since we're speaking about the capital market space, and who better than you, Ramdev, to give us a gauge of what the appetite is? Because we get, data from the mutual fund industry that was a little, not so heartening from last week. But in terms of appetite, have you seen that resurgence in the last 1 week or so? Are you seeing people cool off and becoming a little wary? What is the trend that you are spotting?
Yeah, so clearly the capital market activity level, clearly we have seen bottom in March. I would say it was weakest in the month of March. January was, I think December, January was the best. February was somewhat lower, of which we have the numbers. And March could be, I would think it will be lower than February. That's what my sense is. But things are picking up. After seeing the lows in the March, say, second week or something, we are seeing pick up in the third week and all. So that's the nature of the thing. As the market recovers, even the confidence in the mutual funds and private equity and PMS, everything goes up. The guys who are sitting on the fence, particularly the large guys, they start putting their cash into the market. So that's the process. When it is the best time to buy, there won't be anybody to buy. When it is the worst time to buy, there will be massive crowd in the market. So that's the very nature of the market. We have seen the low of the market for the year, I would say, in terms of action, and the recovery has started. Now, how rapid recovery will be, and will it again go back? Those are different things. Those are difficult things to figure out. But I think it's a nice market now.
So, from in that gauge of best time to buy and worst time to buy, where are we right now?
We are closer to the best time to buy.
Okay. And in terms of what you like, you already talked about financials. Are you liking NBFCs? Are you liking large private banks? Apart from financials, are you going to look at more capex, push, impact stocks? Just give us a sense of what Ramdev is liking right now.
Yeah. No, I don't pick stocks because I don't buy directly. I buy only my own mutual funds. So these questions should be directed to the practitioners of day-to-day stock picking. I'm not doing that.
Yeah.
But I can broadly see. Yeah, so I can't talk about first thing is, actually I'm not on top of any of the stocks which I can say that here you should buy.
Let's leave stocks out of it. Let's leave stocks out of it.
Quick commerce.
Let's leave stocks out of it. In terms of what sectors, for example, is quick commerce still as hot? Is autos looking a little painful because we don't have Teslas coming in and what's happening? That kind of a sense.
Yeah, so no, not Tesla coming. This 5 minutes charging. We saw the innovation last week where BYD said that we can charge in 5 minutes car for 400-500 kilometers. I think this is a game changer. This is going to have. This will bring adoption like at a very, very rapid pace. So I think if that is right and they can push it through, push it into the market in a large number, which China can do, I think in 10 years' time you'll see a complete transformation of this industry. So I think we are looking at huge innovation, huge disruption also, and massive opportunity also, because there will be a lot of companies which are not to do with the per se engine technology or car. I mean, there will be winners and losers of this particular game. Winners will be the ones which can successfully adopt the technology and bring products incorporating them. And there will be a lot of say braking systems or the tire systems or a whole lot of part of the cars which have nothing to do with the EV technology or IC technology. I think you'll see some of these companies winning big on them. So it is very interesting space, and I would definitely like to meet some EV companies, some auto companies here and figure out what are they thinking about this particular innovation.
Yeah, and there are a clutch of them out here. I mean, there is hospitality, auto, recycling, and the likes. Mr. Agarwal, one more question from my end. You've looked at autos through so many decades, right? Hero, Eicher, Maruti, etc. If indeed this global EV giants come to India because of the duty changes, etc., does the Indian auto industry rise to the occasion, you think, or it's a case for disruption for the Indian automakers?
No, so far what we have seen is that new technology will be brought mainly by the existing companies only. I mean, at what pace they will bring, that's a different thing, and who will bring faster, that's also a different thing. But we are not seeing any major four-wheeler company with only EV technology. You know, say some small companies are there, but nothing mega in size, and all the companies have launched their own EV products. So let's see who scales up, and so it's a hybrid kind of situation. Like in US and all, you have Tesla, which is only EV, that kind of thing, or BYD, which is only EV. Those kind of evolution has not happened in India so far.
What about IT? Are you liking IT at all? The IT trade, does it continue in your view, or too much uncertainty there with lack of clarity on what's happening in the US?
Yeah, globally the largest market share of market cap in the market, global market cap of 125 trillion is IT. IT is about 21%, and I think banks are about 17%. So clearly IT has its own place, and our IT is somewhat different from American IT at least. So they're not, ours is a services company, not a technology company, but there is some correlation out there. I mean, execution of a lot of cutting edge technology is also done by the services company. So see, right now it looks like a little threatened in terms of growth, but I think economics still remain on the side of Indian IT.
Got it. Okay. Mr. Agarwal, lovely talking to you, and all the best with the conference. I'm sure it'll be a riveting set of conversations. So, but thank you so much for sharing these insights with us.
No, thank you. Come over here and speak to all these companies.
Yeah, we'll be planning to come to do that.
We have a team
there too. Yes, for talking to a bunch of companies. So thank you so much, Mr. Agarwal, for doing that, for talking to us today. All right, and that's and it's an interesting set of companies, and it's a great time to talk to mid-caps, I reckon. So the timing of the conference for Motilal Oswal couldn't be better. I'm glad that we are covering key facets of this conference.
For me, the headline and the takeaways, happy days are here again. That coming from Ramdev Agarwal is quite a stamp in itself. So what do you pick when happy days are here is really the question. And it's the time to buy, he says very clearly. So very key takeaways from this conversation. Thank you so much for joining us, and of course stay tuned to NDTV Profit for much more.
Small and mid cap, particularly in last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings, and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Good afternoon and welcome to Profit Buzzers. I am Puneet Zaveri and with me today is Varsha. It's been a very good session for the market today, continuing its bullish momentum from the previous week as well. We saw the Nifty going up by almost 4.2% last week, and we've continued that with another 1.2% almost gains today. And we did speak about the FNOQs this morning, that 23,400 will be a key level to watch out for. It's something that we've not breached in a while, and today we've decisively breached that level, going ahead as well, almost 274 points. It'll be key to note if we can hold on to these levels going forward as well. Let's look at the Nifty Bank as well. because from the 5600 mark, which was a resistance for quite some time, we are up almost 1000 points in the session today. Let's also look at the Nifty 50 and its main contributors today, because we've seen the bullish momentum continue across banks, and today again is another day where HDFC Bank, Kotak Mahindra Bank have done really well. We've also seen some positive momentum from ICICI Bank continuing from the previous week, but on the other side, just very marginal losers today. Not much to talk about on the losing side for the Nifty 50. Let's look at the mid cap 150 as well and the small cap 250 as well, because the broader market as a whole has been trying to make a comeback, and today again we're seeing that 1.3% move across the mid cap 150. The small cap also should follow through with a 1.2% gain as well. And let's just finally look at the sectoral index as well, because we've seen some very big moves in the auto sector specifically. We've seen the PSU Bank also make a very strong comeback. Realty is also doing well again. So it's been a very strong session for the Nifty as a whole. All sectoral indices, are in the green today. Let's finally look at the Nifty 500 and look at the broader markets and some key stocks to watch out for. We've seen, moves across JBM Auto up 12%. Finolex is up almost 12%, and then we'll talk about Finolex Industries in the show. While we are seeing Finolex Cables as well doing very well in trade today. Varroc Engineering, and we'll discuss the domestic auto component makers, why they are in focus. While on the other side, just some losers, nothing too much to talk about. Jindal Stainless had its analyst meet. Apart from that, Titan is just losing some ground, but overall it's been a positive session overall. And we also let's just pull up BMW Industries as well, because that's a stock that's been in focus over the last week after the company announced its capex as well. Let's also pull up a longer term chart for BMW Industries as well, because as a stock it's been in focus because the company has commissioned capex of about 803 crores, and they will be establishing a new greenfield steel complex as well. And we are now joined by the management of the company, Mr. Harsh Bansal, the managing director of BMW Industries. Mr. Bansal, good afternoon, sir, and thanks so much for joining us today. I just wanted to start off with the capex question as a whole, because it's a sizable capex in context of the company's revenue that it did last year. If you could just talk us through the rationale behind the capex and how will the same be funded in this particular cycle?
Thank you, Puneet. An absolute pleasure being here. So just to quickly recap, currently our business is primarily related to outsourced manufacturing. The capex that we are talking about today is in Bokaro. We intend to spend something in the range of about 810 odd crores. The debt equity mix is about 550 of debt, and balances through internal accruals and cash flow of the company. And the products, like you've rightly, you're showing over there, we intend to have a cold rolling mill complex with galvanizing and some new products that we are working on, for example, ZAM, and of course, color coated steel.
Got it. Hi, sir. This is Varsha this side. Just wanted to know, how will the numbers look like? So one is when this capex will be online, the capacity utilization that you are aiming to, and how much of top line will be added through this capex. If you can give us a ballpark number, and by when?
So the commissioning will start to happen. I think the first products we intend to start getting into the market before the end of FY26. And just to put this in relation, today our top line is by virtue of the services that we do. So there is no actual cost of steel that comes into our top line. Post this project getting online, we hope to achieve a stable state top line of maybe about 3,000 odd crores. But that will be in about 24 odd months.
Mr. Bansal, if you could just comment on the funding of this. You mentioned in your press release that it's going to be funded by internal accruals. I'm guessing there will be cash flow, but some amount of debt will be required for it. Any kind of quantification that you can give us?
So roughly about 500 odd crores of debt.
500 odd crores of debt. Okay. And I just want to understand, on the capex spending as well. Apart from this, is there any other capex that's going into FY26 for you?
So we continue to have small capexes relating to our existing businesses, and these are part of stabilizing, upgrading, maintenance capexes.
Got it. And Mr. Bansal, you just said that you are expecting a 3,000 crores of top line in the next 2 years. Just wanted to have your view when it comes to margins, because I assume that you are going into, or rather you are manufacturing more of pipes and tubes. So I'm assuming this is a high margin product. So any comment that you can give on margin side? Where can your margins go?
So again, relating to the businesses that we do today and what we are doing capexing on for the future, the margin profile will be slightly different. Today we are a service business where we do not buy any raw materials. Tomorrow for the new capex, that's a fundamental change where we'll be buying and selling steel along with the products that we service. So there will be a substantial margin difference in the two sides.
Mr. Bansal, you currently did about 600 odd crores of revenue last year. Now you mentioned that this does not include the cost of the steel in the revenue side. So going forward, will that change happen? Because you're mentioning that you're going to go to 3,000 crores in revenue in 2 years. So it's roughly 5x from the current levels.
Yes.
And margins, like you mentioned, it's going to be a different product profile. But would it be safe to say that the blended margins would come between 18 to 20 odd % for at least the next couple of years?
So if you're talking about net numbers, the net numbers will be in the range of about 10 to 11%. Okay. The EBITDA numbers will be closer to the numbers that you mentioned.
And just, in terms of the safeguard duty, we have seen a potential, government bodies have mentioned that a 12% safeguard duty in terms of imports of steel would be something that the industry wanted at least about 80 to 20%. But any kind of comment that you have on the same?
Puneet, thank you, but I don't think I'm qualified to comment on that, but it's most welcome nonetheless.
Got it. Mr. Bansal, in your last con call, you had said that rather you had given a guidance of almost 15 to 18% growth for the full year, but Q3 did not go as per your expectation. It was a bit lower. What it was expected. So, are you still sticking to the guidance of achieving 15 to 18% growth? I mean, how?
No, I think we
ahead.
also mentioned that we will not be meeting that guidance. And the full year guidance we will be coming out with along with the March numbers.
Okay,
but
so
I think, yeah.
So does it mean that Q4 will also be weak, like Q3?
No, I think Q4 we are on track, but we won't be able to make up the negatives of Q3.
Got that, Mr. Bansal. Thanks so much for joining us today and giving us a overview of course, the big capex about that, and many congratulations for the same. We look forward to our next conversation. But thank you so much for joining us today, Mr. Bansal.
Thank you so much, Puneet. An absolute pleasure. Thank you.
Well, with that, let me invite Sharmila Joshi from sharmilajoshi.com as our fundamental guest for today. Sharmila, you've seen the market react very positively today. I'm not sure if you have coverage on BMW Industries, but if you can also mention about the sharp move that we've seen in the market over the last 4 to 5 days on the positive side, as well as if you have any comment on BMW Industries.
Well, it certainly sounded very interesting, because I'll tell you why. I've never really studied the company, but just listening to them, I think that the way I think the management was very articulate. And when you say that Q4 is on track, but you're not going to be able to cover the negatives of Q3. So that's being very forthright. Their plans sound very exciting. I think the only negative, I was looking at the numbers while you all were talking. It's a small cap company, so in that sense you need to monitor it. But overall, from whatever I could hear, it did sound quite encouraging. And coming to the markets, again encouraging. I think that the kind of fall that we have seen and the recovery that we've seen in this last week is very heartening. I would have thought that there is one more dip to be had before we close this year out. But market doesn't seem to be in any mood to correct from to the levels or lower than the levels that we were at. So I think that we can look forward to the new year with far more optimism, and then start looking at earnings, year-end earnings, and start building our portfolios from there. And I'm sure everybody has bought at lower levels. Certainly, I have recommended, staggered buying when markets were falling, and I think we will continue to do that. If we see dips, we will continue to add the stocks that we like.
Right. Thank you so much, Sharmila, for that. While moving on, if you see another set of stocks in focus, though, are the gas companies following proposed regulatory changes for transmission tariff calculation norms. Somit brings in all the details about what brokerages are saying about the possible changes.
Well, as gas stocks would remain in focus given the fact that PNGRB has initiated this consultation process to amend the existing pipeline tariff. Now, do remember this is a consultation process, so there will be an open house, and most likely this open house will conclude by April, and as per CLSA, the new norms or the new tariff regulations could be formalized by the quarter ending June 2025. And as per CLSA, they're expecting stocks like IGL to benefit given the fact that their operational cost could be lower post the implementation of the new tariffs, and also to some extent Mahanagar Gas could benefit because some cost benefit could come in for Mahanagar Gas as well. They are also saying that this would lead to higher pipeline tariffs for GSPL and GAIL from the current tariffs that they are incurring, and at the margin this could lead to a small hike in cost for other gas users, which are the industrial gas users. So that could be marginally negative for Gujarat Gas because that company generates most of its income from selling gas to industries. Now, as per Morgan Stanley, this proposed regulatory changes could increase the gas penetration in the country. Currently it's at around 6%, and India is aiming to increase this to around 15%, and this regulation could lead to that number going forward. As per Morgan Stanley, they are saying that this regulations are positive for transporters and upstream producers, and this will lead to normalizing returns for city gas distribution companies and for Petronet as well. They're saying that GAIL, Oil India, Reliance Industries stands to benefit the most, followed by GSPL, and they're saying that there are 4 proposed changes that could lead to higher pipeline tariffs, and hence it is most beneficial coming in for GAIL and GSPL. Now, GSPL had recently also seen a cut in their pipeline tariffs, so if this new norms get implemented, then the tariffs could be on the higher side, and hence GSPL also stands to benefit. Lastly, Morgan Stanley says that they believe that the proposed changes are part of the regulatory efforts to implement the One Nation, One Grid, One Tariff framework that were proposed by the government multiple times. In fact, post this proposal that has come in by PNGRB, Citi has also come out with its note on GAIL and GSPL, where they have initiated a 90-day tactical buy on both the stocks, and they are positive on both the stocks on potential higher tariffs that could come in. Citi has a buy rating on GAIL with a target price of 265, while on GSPL they have a buy rating with a target price of 370.
Well, thank you so much, Somit, for all the details. Sharmila, so Somit mentioned 4 stocks which the brokerages house are also bullish on. You have IGL, MGL, GSPL and GAIL. Any stocks that you're tracking? What do you like amongst 4 of them?
Well, overall the space looks okay, but I must say that I used to be a lot more positive on the space, but ever since we started hearing about the fact that I think Delhi was the first to announce it, and I'm sure other cities will also follow, where the focus is going to be more on penetration of electric cars, like your buses will shift to electric buses, and we're already seeing that happening in Mumbai, etc. That sort of put a dent into that whole, that space, the city gas, the vehicle space for these companies. Having said that, I think that the use of gas is something that the government is promoting, and I think that while I don't like the sector as much as I did maybe 2 or 3 years earlier, I think now it's at fairly decent levels, and though I think in this note probably Gujarat Gas was a stock that could face headwinds. I think in fact there is more space for expansion there because you are going to see increased use in industry of gas, and that's where Gujarat Gas is nicely positioned. So I would like Gujarat Gas in this list that you all spoke about.
Well, Gujarat Gas is the pick for Sharmila. Now, another few set of stocks that are in focus are the pipe makers. So we can pull up Supreme Industries. Finolex Industries is the biggest gainer in trade, at least in the piping space, and that's because India has imposed an anti-dumping duty on 5 Chinese goods specifically, and one of them is polyvinyl chloride paste resin, which is the PVC resin. Now, that is one of the key raw materials for the piping majors, and over the last couple of quarters, we have seen a lot of volatility within the quarter itself for PVC prices. Now, for pipe makers specifically, if the price is on either an upswing or a downswing, they can still pass on those kind of price hikes to his customers. But when the prices are very volatile, essentially if in the first 10 days of the month they're high and then they fall in the next couple of weeks or months, specifically the company has to book a raw material loss, and that's what was impacting all the pipe majors over the last couple of quarters. Now that India has imposed an anti-dumping duty on cheaper imports, that is expected to benefit the pipe makers, essentially have some kind of lower volatility in the PVC resin prices, which is one of the key raw materials, and hence we are seeing the very smart move on stocks such as Finolex Industries, Astral, as well as Supreme Industries. So a very interesting play, because these stocks have corrected a lot over the last couple of quarters. But let me take this across to Sharmila as well, because Sharmila, we've seen as I mentioned, a lot of volatility in PVC prices. What do you make of the pipe majors after the recent correction?
I think your observation sort of hits it on the head, because you had an environment which was positive for these pipe companies, but you were not really seeing that in the stock prices, because I think this environment that they were in. So I think all the three companies are good. I think probably from a valuation perspective, maybe I like Finolex pipes the best. But having said that, I think Astral and Supreme are preferred by the market in that sense. And this duty that will come in will definitely stabilize the environment from there, and you could see the PE environment sort of improving also, because people will view this space more positively. So yes, I think this is a good move. This has been a good development for these companies.
Right. Thank you so much for that view. Moving on, COVID-19, if you see, was a tough time for everyone, including the markets, but it opened up opportunities for multiple companies and sectors. Let's take a look at how markets have fared since COVID. What are the top gainers, worst performers, and what are some of the mid-cap additions in the last 5 years? Mahima joins us with the report.
Right. So, as you rightly mentioned, it's been already 5 years since COVID-19 has happened, and there are a couple of stocks and as to how all of these benchmarks have reacted. Now, in terms of how the overall stock performance has been, in terms of the top gainers from the NSE 500, there is Lloyds Metals, which has gained over 25,000 odd percent. In terms of PTC Industries, it's up over 12,000 odd percent. There is CG Power, there is Anant Raj, there is BSE Limited as well. In terms of worst performers, the top ranking is Rajesh Exports, followed by Yes Bank, then Whirlpool India, PVR Inox, and Bandhan Bank. In terms of largest market cap addition for NSE 500, there is Reliance Industries that has added over 1,16,000 odd crores in terms of market cap, followed by HDFC Bank, Bharti Airtel, ICICI Bank, and Tata Consultant, that is TCS, Tata Consultancy Services. And in terms of investor addition, 13.5 crore was added since April 2020, and this accounts for 73% of the total investor base. This is as per NSE Market Pulse. And in terms of India market cap, it stands at around $4.06 trillion, and market cap added since the COVID time is around $2.76 trillion. So this is the overall view as to how things have fared. It's been 5 years since COVID, and how things have fared since then.
Right. Thank you, Mahima, for all the details. Sharmila, if you see the NSE 500, the top gainers, the list that I have is, you have Lloyds Metals, which was up almost, the change has been 253x. Then you have PTC Industries, then CG Power, Anant Raj, BSE. Just wanted to have your view, especially on Anant Raj, because of it's going into data center, and lots of growth expectations from when it comes to data center, and also BSE. So any view on both of the stocks?
Both are, it's an interesting list to start with. I mean, the kind of names that are there on that list. And even I think the losers list is very interesting, especially when you find PVR Inox and Bandhan Bank there. But having said that, coming to your question, yes, I think definitely BSE finding its name in that is sort of an indication, when you were talk of how the market has gone up, the growth in the market, and those numbers were also mentioned. I think you have doubled in size, and the number of investors have also gone up. So I think not just BSE, I think anything that was market related, you would find has gone up in these last 5 years, whether it is a CDSL, whole host of stocks, everything sort of market related has moved up. Coming to Anant Raj, I think they have the double benefit, because you did see real estate as a sector rally in these last 2 or maybe 3 years, and we've just seen a slowdown in the last, this would have been a very different list if you had seen it 6 months earlier. But having said that, completely the point that you made about data centers as well as the sector that they were in, I think it's a combination of that. I don't think it's only data centers, but it's also the fact that they were in real estate, and that was a sector that moved up, that has taken Anand Raj to where it is. So I think both good stocks, and I would think that once market recovers, they should continue their journey.
Right. Let's take a look at a couple of companies which are in focus on the back of analyst meets. You have DLF. Let's pull up that chart. DLF, the stock is up almost 2.34%. Let's see what the key highlights of the analyst meet were. So they're targeting zero net debt company at a group level by FY30, and they're seeing rental income scaling at 15% CAGR to rupees 100 billion over FY25 to 30, and they aim to sustain rupees 20,000 crore annual pre-sales run rate in the near term and more than 45% of gross margin. Also in FY26, they plan to launch projects worth rupees 17,100 crore, and the rest 57,000 crore is expected to be launched over the coming 4 to 5 years. And also the significant residual margins are already available, and they expect to further deliver 45% plus gross margin over the medium term. And lastly, if you see, new sales bookings is expected to continue at steady levels, and they expect 2x growth in PAT, 2x growth when it comes to cash flows. So this was about DLF. Let's pull up the chart of Jindal Stainless also, because the stock is down almost 4%. There you go, 5%. Now the key highlights of the analyst meets were, so they have deferred so they were supposed to set up a downstream operation at Jaipur, which they've deferred by 8 to 9 months. Earlier it was expected by H1 of FY27, and the management have guided for FY25 consolidated EBITDA per ton of around 19,000 to 19,500 crore, versus if you see the 9-month FY25 data, it is the EBITDA per ton is around 20,800, implying rupees 16,000 per ton in Q4 FY25, and they are hopeful of the export recovery in H2 of FY26 as inquiry began from US and Europe. But they've guided conservatively with FY26 volume growth of 9 to 10%, assuming no export growth, and due to weak exports and firm imports, company has diverted volume to low margin segment, which is actually hurting their margin. So, and also they are restructuring when it comes to tax efficiencies and asset sale to aid cash flow profile. So these are the key reasons why you're seeing the stock is down almost 5%. But Sharmila, your view when it comes to DLF and Jindal Stainless?
So DLF was sort of music to my ears, because not just the fact that everything that they said sounded very positive, but the fact that real estate is a very important sector for overall, I think where your GDP is concerned, where your market is concerned, in all respects, real estate is a very important sector. And if you continue to see the kind of growth, the kind of sales numbers, for instance, that they're aiming for, and we were seeing all these companies hit very good numbers, in the last 2 years. And I think in this last quarter, we've heard some sort of murmurs of slowdowns, and that sales may not be what they were, etc. So I think this is a piece of news and data that I will be monitoring closely going ahead. That said, if in their analyst meet they sound very positive, it's, as I said, music to my ears. Coming to Jindal Stainless, and I think the entire steel metal pack, we've seen, a lot of concerns, right? To do with what kind of duties there could be. So the sector has corrected because of that, and now this for Jindal Stainless. So I think a lot of bad news getting factored into the price, and even if you look at it from a valuation perspective, it's okay. It's not exactly it's not exactly cheap at this level. So it's sort of evenly priced. So that's the sad part, but like bad news overall.
Got that, Sharmila. Sharmila, we'll leave it at that. Thanks so much for joining in and giving us your views across the whole host of stock. But with that, we're seeing the market sustain at the levels that we started to show at, seeing some strong moves in stocks like Sharda Motors up almost 20%, JBM Auto also up 13%. But we'll see if we can close at these levels as well going forward. But with that, it's a wrap on this edition of Profit Buzzers. From Varsha, me and everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit.
Small and mid cap, particularly in last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
any tariff coming on Indian goods will be passed on to American consumer.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar. Well, if you look at the markets, Nifty has managed to gain for the 6th trading session. In fact, with today's gain, the Nifty has comfortably crossed above the 100-day moving average also. And after 6 consecutive days of gains, in fact, Nifty has now erased all the losses that we have seen so far in 2025. Now, among sectoral indices, it's the PSU and the banking names that have been leading the rally. In fact, Nifty Bank Index post today's gain is now comfortably above the 200 DMA as well. And apart from that, if you look at it, it's specifically the private banks which have been leading the rally. In fact, Nifty Financial Service Index is closest to its all-time high, and 69% of the constituents in Nifty Private Bank Index are private banks. So it's the private banks that have been leading the rally. And in fact, in Nifty Bank or private banks, the gains have been led by Kotak Mahindra Bank, while the only stock that is in red is IndusInd Bank in trade. Now, if you look at the stock-specific action among FNO stocks, the top gainer is IRDA. The stock is up around 8.5% among FNO stocks, and in fact, in the last 2 trading sessions, the stock has gained more than 10%. Apart from that, it's Hindustan Aeronautics, which is up on the back of the Jefferies note that has come in. Kalyan Jewellers gaining around 5%. Titagarh Rail again gaining for the second consecutive session. The stock is up 5%. Rest of the rally has been led by Macrotech, GAIL, Jubilant Foodworks up anywhere between 4 to 5% in trade. Among top FNO losers in trade, if you look at, it's Jindal Stainless, which is down the most. It has declined around 5% in trade, and this is after the weak commentary coming in from the company, where they have also delayed their capital expenditure plans. That has led to this 5% downstick in the stock. Apart from that, it's IndusInd Bank, which is down 3%, Titan down again 2.5%, L&T Tech, Vodafone Idea, Glenmark Pharma down anywhere between 1.5 to 2% in trade. Apart from that, if you look at the cash stocks, it's Salasa Techno, Sharda Motors, JBM Auto, Power Mech projects that have gained anywhere between 16 to 20% in trade. IIFL Capital is also up 15%, while on the losing side, it's ICO Lighting, which is down around 7% in trade. Gensol down another 5%, Vimta Lab, Trident Tech Labs, Ujas Energy down around 5% in trade. But it's the private banks that have been leading the rally, and apart from that is the gas stocks that have been buzzing. In fact, GAIL is one of the top gainers among gas stocks, and that is largely on the back of the PNGRB's initiative, where they have come out to the public consultation process to amend the tariff regulation. Now, do remember, it is a consultation process, and it will be open for the public, and then the final regulation, as per many brokerages, they are expected to come in by the end of June quarter. Now, what CLS is saying about this tariff amendments that PNGRB is trying to bring is that they are saying that this will lower the operational cost for IGL and for Mahanagar Gas as well, and this could pave the way for higher tariffs for both GSPL and GAIL going forward, and that's the reason GAIL is one of the top gainers in trade. Apart from that, they are also saying that at margin this could lead to small hike in cost for other gas users, like industrial gas users specifically, and that could negatively impact Gujarat Gas, because they derive most of their revenues by selling gas to industries. So that is a kind of negative for Gujarat Gas. Morgan Stanley is saying that the proposed regulatory changes will lead to more gas penetration in the country. In fact, if you look at the current gas penetration, it stands at around 6%, and government's aim is to bring this to 15%, and this new regulation or this new proposed regulation could aid in that. Apart from that, they are saying that it's positive for transporters and upstream producers, but will normalize returns for city gas distribution companies and Petronet. They are saying that the amendments are positive for GAIL, Oil India, Reliance Industries, and it will benefit also GSPL, one of the on the higher side. They're saying that there are 4 proposed changes that could be beneficial for the gas pipeline transmission companies, and they're saying this will also lead to lower gas cost for those customers who are much away from the port area. Now, they believe that the proposed changes are part of the regulator's effort to implement the One Nation, One Grid, one tariff framework which the government has been continuously talking about. Now, in fact, post this amendment that has come in, Citi has come out with this note on GAIL and GSPL, where they have opened a 90-day tactical buy on both the counters. In fact, for GAIL, they have a buy rating with a target price of around 265, and for GSPL also they have a buy rating with a target price of 370, and GAIL is one of the top gainers among the gas stocks that we have been currently looking at. Apart from that, let's also take a look at a couple of companies which are in focus on the back of analyst meets, that's DLF and Jindal Stainless. In fact, Jindal Stainless is one of the top F&O losers in trade. Let's get in Varsha to understand what the management had to say in their analyst meet.
So for DLF, they are expecting to be zero net debt company at a group level by FY30, and they are seeing rental income to scale up to 15% CAGR to rupees 100 billion over FY25 to 30, and they aim to sustain 20,000 crore annual pre-sales run rate in a near term with more than 45% of gross margin, and the payout ratio is expected to be more than 50% over time versus 40% in FY24, and capex of rupees 26,000 crore till FY30. In FY26, they are expecting to launch few of the projects with another 17,100 crore, and the rest 56,000 crore project is expected to be launched over the next 3 to 4 years, and significant residual margins is already available, and they expect to further deliver 45% of gross margin over medium term, and new sales bookings are expected to continue at a steady level, and they expect 2x growth in PAT, 2x plus growth in cash flows. Next on the list is Jindal Stainless, wherein they are setting up a downstream operation at Jaipur by 8 to 9 months earlier, which was expected in H1 FY27, and a management guided for FY25 consolidated EBITDA per ton at rupees 19,000 to 19,500 versus a 9-month FY25 at around 20,800 rupees, implying 16,000 per ton in Q4 FY25, and they are expecting a good recovery when it comes to export as inquiries begin from US and Europe, and they are guiding conservatively with FY26 volume growth of 9 to 10%, considering no export growth, and due to weak export and firm imports, company diverted volumes to low margin segment, hurting margin. And lastly, the restructuring with respect to tax efficiencies and ad sale will actually aid their cash flow.
Well, then the stock that remains in focus is on Steel Authority of India Limited. The stock has the highest sell rating. Why so? Let's get in Mihika to understand the same.
So when you compare Steel Authority of India to its other peers, something like a Tata Steel, JSW Steel and Jindal Steel and Power, well, SAIL actually has the highest percentage of sell ratings. Around 19 analysts out of 14 analysts out of 29 analysts tracking the stock currently have a sell rating on the counter, versus only 17 to 29% of the analysts tracking its peers have a sell call on those counters. Now, yes, we've seen an uptick today as well as a 7% uptick last week. This was mainly driven by two factors. One is a potential 12% safeguard duty on steel, which benefits sales volumes the most because it has a higher share of flat steel products, and at that point it had better valuation versus peers. However, the spotlight does come on the mid to long term concerns and whether this is just a short-lived uptick. If you look at historically, SAIL has underperformed its peers in the 1 year period. As of Friday, SAIL was down 10% in the 1 year period versus Tata Steel, JSW Steel and JSPL, which have seen gains of 6 to 30%. This is amid the kind of stock correction we've seen in the past few months. Even in the 5 year period, everyone has posted positive returns, but SAIL stands the least at 330% versus other counters that have gained over 400 to almost 800%. Now, the key concern is actually their capacity expansion. They plan to expand their capacity to 35 MTPA versus 20 MTPA right now by FY31. This entails a high capex plan of 1.1 to 1.2 lakh crore rupees, and however, on the other side, analysts do expect that the capacity expansion will only hit 28 MTPA by FY31. And the biggest concern around this capacity expansion is how it would impact the balance sheet. Now, expansion capex is set to start from next year, and high capex is expected to burden an already weak balance sheet as per MK and as well as Kotak Securities. Even in their previous historical expansion phase that lasted from FY10 to FY20, the expansion phase led to a 9 to 10 years of negative cash flows. Now, if you look at the debt and liquidity picture, as of H1, the company has a total of 35,600 odd crores of total debt, whereas the cash and balance stands at only 68 crore rupees. Even if you look at how it's changed from FY24 and FY23, the total debt has increased 16% versus the end of FY24 and has increased 39% versus the end of FY23. And their cash balance, on the other hand, has actually fallen when you compare it to FY24. And whereas for FY23, we've seen an uptick of 20% to 68 crores versus 50 odd crores in FY23. But the cash flow picture is what's turned negative actually. H1 FY25, we saw cash flows turn negative to around 1,100 crores versus positive cash flows of 2,900 crores in FY24. And even before that, FY22, FY23, we had positive cash flows. But the net cash flows have also been very volatile, and that's where the current liquidity picture looks like. The H1 FY25 cash flow from operations actually turned negative because of three main reasons. One is overall lower net profits. Second is higher joint venture losses posted by the company, as well as higher financial liabilities, as well as trade payables.
Well, that's a wrap on all the market action on Profit Top Trades today. But wait, before go into the break, NDTV Profit is giving you an exclusive coverage on the Motilal Oswal Ideation Conference. Now, on the sidelines of the event, my colleague Agnidev spoke to Rishi Anand of Aadhar Housing Finance and Gravitas Chirag Somani. Listen into the slice of these conversations.
Hello and welcome. Today we are joined by Mr. Rishi Anand, the MD and CEO of Aadhar Housing Finance. Thank you so much for joining us, sir. So, to begin with, I would like to start off with a sector outlook. So, affordable housing finance is a sector that a lot of people are very bullish on, and Aadhar Housing has time and again turned out to be a top pick for many analysts. So, in this industry of high growth and demand, do you think it is possible for your growth to be above the guidance?
Sectoral outlook, I would want to say that the overall sector has been growing at about 15-17%. Now, if we carve out affordable housing from the overall sector, which is growing at about 18-19%. As far as Aadhar goes, Aadhar is the largest low-income housing finance company in the country today, with an AUM close to about 24-25,000 crores. And the way we look at our growth is we are going to be growing at about 21-22% AUM year-on-year basis.
Right, sir. So, possible to shoot above that?
See, everything is possible. Then you will want to compromise on certain matrices which you would, as an organization, not want to do it. I think given the industry standards, growth standards in the industry, 21-22% on a higher AUM that we are is quite a respectable number.
Right, sir. Moving on, let's talk about margins. So, margins, will they decline as you increase your leverage? Because currently you are saying AUM is very comfortable for you right now. So as your leverage increases, do you expect margins to decline?
See, Agni, today our leverage today stands at about close to 3%. The way we look at our industry, while the regulator allows your leverage to go up to 12%, the overall sectoral comfort is around 4-4.5%. Are we going to cross that leverage? I don't think in the next 4-5 years we are looking at crossing those leverage numbers. Hence, our profitability numbers, NIMs numbers are going to be as they are today.
Right. Moving on, sir, have you normalized your margin numbers? Can you comment on that?
See, today we work on a NIMs of 9, the last reported NIM is 9.2%. We work on something called spreads, which is at an average of about 5.8, 5.9%. Are we comfortable at these NIMs and spread numbers? We are very comfortable. And why are we comfortable is while in the declining rate trend, I'm sure that's a question coming in on the declining rate trend, how do we manage the book? Close to about 80% of my book is floating in nature. And close to 80%, precisely 80% of my borrowing, which is the liability side, is floating in nature. So whatever comes in is passed on to the consumer either ways. Hence, as an organization, we are very confident of maintaining those spreads that we work on currently.
Right, sir. And can you give us a reason as to why there is this certain amount of asset quality comfort that you have? Can you break that down for us?
See, the way asset quality goes is, if you look at our numbers for the last 3 years, we've been hovering around 1.1% GNPA numbers as of March of each year. The comfort purely comes from a perspective of the kind of consumer I am funding and the kind of loan I am funding. It is a 100% secured retail asset, and the segment that I fund to, this property or this asset becomes a very emotional quotient, right? A very high on emotions. and they're going to be making one property in their lifetime. Because the emotion quotient is so high, so probability of the consumer defaulting and losing his house is very low. So that's how the mathematics works.
Right, sir, I understand. So can you give us what the OPEX growth for Aadhar will look for the next, say, 3 to 4 years?
So we should be looking at declining of OPEX with efficiencies coming in. We've invested a lot in technology, so those things are going to be playing around in the coming financial year. So from a perspective, I would say anywhere between 10 to 15% drop in OPEX year-on-year basis would be a good number to have.
Right, sir. So that's over a 3 to 4 year period.
Over a 3 to 4 year period.
Sir. And how about the ROA? Can you tell us what the ROA figure is looking like right now for Q4 and the sustainability on the ROA front?
I will not be able to give you some guidance on Q4. I will maybe let's talk about Q3. Q3 we closed the year at the quarter 3 at 4.4%. Is there any reason for us to fall below the current numbers? I don't think there are any reasons to fall below 4%. So we should be upward of 4% even as we go ahead.
Right, sir. And lastly, like we discussed, Blackstone still holds a reasonable stake in the company, above 70%.
That's right.
If I'm not wrong. So there is this certain sentiment in the market where the huge PE investor still being in the company. So there is an overhang about if and when or should there be an exit from the PE investor. So can you give us some perspective on to how that is likely to play out?
Certainly, while I agree with the sentiments of the market, but let me give you some good news here. See, pre-IPO, Blackstone had 98.7% holding in the company. Post-listing, it is close to 76%. The fund from where the private equity, which is Blackstone, has invested with us, has a lifetime of 10 years. And from that 10 years, close to about 5.5 years is still balance. Is Blackstone in a hurry? Are there any management discussions happening around their exit? No, they are not. So as far as the management sees, I don't think there is any reason to be worried. They are not seemingly in a hurry. Eventually, since it's a private equity fund and the way the funds work, it has to die down. The fund, equity portion has to die down. So keeping that in mind, we still have 5 years in hand. There is no hurry, seemingly hurry in the system right now. So that's the only comfort I can give to the market.
Right, so thanks for that. Last couple of questions. So how much of an impact has the February rate cut from the RBI has on the margins of Aadhar?
Okay, so first of all, I think it was a very welcome move. After 5 years of gap, a rate cut came in the market. The way our liability is positioned, Agni, is out of the total liability of about 15,000 crores, close to about 10% of our liability is linked to repo rate. And the balance is linked to either 3 months, 6 months or 12 months MCLR. So whatever was linked to the repo, you get the benefit immediately. MCLR benefits comes over a period of time, I would say 1 or 2 quarters ahead as we see. The moment those benefit comes, as I told you, 80% of my book is floating, everything is going to be passed to the consumer.
So you can't quantify the margin impact?
There logically should not be any margin impact because 80% of the book is floating, 80% of the liability is floating, whatever comes in goes back. Yes, there will be an impact of a quarter because let's say if something comes to me today, you have to operationalize it and then it flows back to the consumer. So a benefit of a quarter you can look at a benefit of a quarter.
Right, sir. So last question. Can you highlight how the competition is building up in the housing finance industry with so many other players and top picks are constantly being redistributed by brokerages across companies, but Aadhar again sustains one of the top places. So how is the competition playing out there?
Again, on competition, I would say, there is no new competition coming in. Everybody has been around. Everybody has created their own niche. For example, we've created a niche below 15 lakh segment and we call ourselves, or CRISIL define us as low-income housing finance companies. Companies and all the peer group, all the competitors in the low-income housing finance have been existing for good 15 years in the system. So I would not say that competition is heating up. Everybody is creating their own markets. We are today present in 22 states, with about 600 branches. The closest competitor is present in about 13-14 states with close to about 380 branches. So there is a lot of catch up to do, and the way we think where we are, we would be in any given market, either we are number 1 or number 2, and we are 3 to 5 years ahead of competition.
Right.
And that's one position, is a clear direction from the board, from me to the field, that we have to maintain those positions.
Thank you. Right. Thanks, Mr. Anand. Those were all my questions. Thanks for watching.
Thank you for having me, Agni.
Today we are joined by Mr. Chirag Somani, the Deputy General Manager of Gravita India. The company has come on the back of very strong Q3 numbers, and their lead business is expanding in a very positive manner. Mr. Somani, thank you so much for joining us.
Thank you for having me here.
Right, sir. So to begin with, I would like to start off with a question on your debt. So can you give us a picture on what the net debt of the company looks like, and what are the reduction plans on that front?
So currently we did a successful oversubscribed QIP in December. After that, temporarily we have zeroed down all the debt in India, and we only have one structural debt at overseas from the DFIs, Proparco and OEB, that we'll do in a phased manner as per the requirement post our capex plan. Whatever the liquidity is there, we'll try to reduce that as well. So currently we have already zeroed down entire debt in India.
Right, sir. Thanks for that. And when you talk about growth plans for the company, are there any inorganic growth plans that you have planned, any mergers and acquisitions down the line that we can expect from Gravita?
Yes, definitely. Actually, we see a huge opportunity, not only in India, across the globe, because if you see globally, all the lawmakers are discussing about the circular economy and recycling, and our product fits into that. So we think that we want to invest up near about 2,500 crores in the business in the next 3 to 4 years, where 500 to 600 would be organic growth, where we ourselves manufacture or fabricate all the equipments and do the projects by our own, and remaining 8 to 900 crore we'll try to acquire certain companies which are up for value addition for our business. So we have the good plans over there.
Right, sir. So quite a picture you painted for inorganic growth. There were, if I'm not wrong, some capacity expansion plans also in the pipeline. So can you tell us when they will be coming online?
So currently one of the capacity pilot project is coming up at the Mundra plant for the lithium ion recycling, and then we are discussing certain plans for the east side, because currently we have plants in Jaipur and Mundra, J&K, and in south Chittoor. So now we are doing some feasibility to have a plant in east side. So you'll hear soon for the east plant as well.
Right.
Once our feasibility is done.
So, sir, can you give us an update on the extension of RCM to battery scrap and EPR?
Okay. So EPR is already there on the battery scrap. If you are not able to complete the target as per the battery waste management rules, then there are EPR penalties which are enacted by the government, which is somewhere around 5.4. You need to compensate it by buying the EPR certificates from the recyclers. That is somewhere between 5.4 to 18 rupees per kg. Regarding the RCM, so GST Council already implemented RCM on lead scrap, but they forget to mention the battery, which is the major source of the lead scrap. So now the industry is again pushing to the government, and government is also working on it, and we think it will come soon on the battery scrap as well, RCM.
Right, sir. So moving on, my final question for you. Can you give us an idea on how the fourth quarter numbers and in tandem the financial year numbers will end up looking like for Gravita, and can you give us a growth guidance, if any?
So we have already given that visibility for the growth guidance is we wanted to grow at least 25% CAGR growth in volume terms, because in lead size top line doesn't matter, because if market prices fluctuates, then your top line fluctuates accordingly. So for recyclers, they get their margin from the volumes, whatever the volume they recycle. So our target is to get at least 25% volume growth in next 3 to 4 years. And for the quarter 4, I think we have delivered good success in past in the business. So same way we are hoping in future we are continue to do that, not only for Q4, for all the coming quarters.
Small and mid cap, particularly in last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Small and mid cap, particularly in last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money.
watching India Market Close. I am Mahima Vachrajani and with me is Neeraj Shah. Well, before I toss to him for broader markets, let's take a look as to how the benchmarks are doing. And it's definitely a great start to the week for both the benchmark as well as the broader markets. In terms of the Nifty 50, it's crossed the 23,600 levels. The Bank Nifty has crossed the 51,600 levels. The Nifty 50 is up by 1.4%. Bank Nifty is up by 2%, and this is led by the gains in the PSU bank space. Let's also pull up the Nifty 50 heat map and see what are the counters that are doing well in trade today. It's led by Kotak Mahindra Bank, up by 4%. NTPC on the back of the Macquarie note, up by 4%. Tech Mahindra up by 3%, Power Grid up by 3%, SBI also up by around 3%. So all of these banking names, Kotak Mahindra Banks, SBI, Axis Bank, leading the pack. Some counters which are seeing the pain is Titan, down by about 2.5%, IndusInd down by about 2.7%, M&M also feeling the pressure, Trent also feeling the pressure, down by about 1.3%. Let's also pull up the advanced decline ratio and see how things are faring there. There you go. There are 1700 odd advances versus that of 528 odd declines. So there is roughly almost 3 advances versus that of 1 decline, and the graph has remained stable throughout the day today since the start of the trade. In terms of the sectoral indices, let's pull up the sectors and see how they are faring in trade. It's led by the Nifty PSU Bank. That is the kind of reason as to why the Nifty Bank is also leading. Nifty Defence is up by 3%. Nifty Private Bank is also up by 2.4%. Nifty Realty is seeing gains by about 2.2%. All sectors in green, and the least gains are being seen in the consumption space and the healthcare space, and Nifty Media also not seeing much of gains. So this is with respect to how sectors and benchmarks are doing. But overall, Neeraj, how are the broader markets panning out to be?
Now, just before we talk about that, Mahima, I'm very intrigued by the move that has happened in Nifty IT intraday today. You must have marked it, but I still want to mark it once again. Bring up the intraday of the Nifty IT for you and look at that index. It was down, it was flat, and now it's eclipsed the gains in the Nifty and the small cap. So quite telling there, and I wonder if some of the mid cap IT names have also bounced. So if we can pull up the Nifty IT gainers and losers before we talk about some of the other broader market stocks, that'll be helpful. Not just, right there. So you see Tech Mahindra there, but Persistent, Emphasis, Coforge are amongst the mid-size names that have done really, really well for themselves in the session today. So that is actually pretty good to know too. And then you look at some of the others which might be moving around in trade. So the BSE 500 or the NSE 500 gainers and losers list should come up on your screen. And you can see a clutch of names there, right? I mean, look at the gains that are coming in Finolex or a JBM Auto. In Finolex, it's probably a rumor of some duties on the raw material that has been levied. There is gains in Varroc Engineering. SIS, which I think recently had a brokerage upgrade, is up in trade. What's not doing well? Precious little. KEC, which has gained quite a bit in the last few days, is down. Suven, on which there's a positive note today, is down. And Uno Minda, amongst others, which is looking like slightly wobbly. But let's try and get in an expert voice to understand how to trade in a scenario like this. Amit Goel, CMT, SEBI registered advisor and founder of Amit Ventures, joins us on the show. Amit, good having you. It's been a while, but good talking to you today. How do you trade, Amit, a market which is in a period of disbelief gained so swiftly the last few days? What do you do now?
Yeah, I mean, I could look at my portfolio and smile. Good afternoon, Neeraj, and good afternoon to all your viewers at NDTV. And it's good to be back on the channel. Have been missing it. I've had some, missing pangs for it. But speaking about the market, yes, the rally that we have seen after creating a bottom at 22,100 is in fact one for the books. And we currently are in a short covering sort of a phase. However, I do also see that at 23,800, 850 to 24,000, wherein lies the highest call OI, we might face some bit of pause in the current rally, relentless rally. So, anybody who is not already in the long trade could possibly wait for a dip and then try and pick it up at, let's say, if 23,000, 23,200 comes in. If not, just ride the rally and maybe book some profits if you're a trader at 23,800 or 24,000. That would be the short-term view.
All right, Amit. Hi, Mahima also joining in. I just want to understand what are your strategies that you're adopting right now with respect to the bank nifty, because we're seeing gains of 2% on the overall bank nifty. Both PSU as well as private banks are seeing good gains. What is the strategy that you'll be adopting right now?
So we are in the midst of a rally. So there are no current, immediate triggers to enter the Bank Nifty. As I said, that Bank Nifty and Nifty both have been mirroring the kind of moves that we are seeing in the last few trading sessions. And 52,300 happens to be a near-term resistance for Bank Nifty, and 50,800 was the previous resistance, which got taken out today quite comprehensively. Looking at the OI, 51,000 and 52,000 are the broad areas where we see highest open interest, which kind of tells me that this could be the range. So if somebody is looking to play the Bank Nifty, and since we are in the last week of expiry, a very short, simple trade could be selling a strangle at 51,000 and 52,000 if you have a decent RR, though I have not looked at the actual trade per se, but that would probably be the view on Bank Nifty if you would want to trade it. From positional perspective, there are no fresh entries. A dip at 50,800 or below could possibly give me a re-entry in the long position. I would look to go long on a dip.
Okay. And Amit, we've asked you about indices. Now let's talk about stocks. What are the ideas, firstly, that you have for our viewers?
Yeah, I'm going by the pure momentum because this is a trending phase of the market. So in the context of a trending phase, I would like to be with the trend and, try and reap the benefits there. So I do have a couple of trades in the banking space. One is PNB and the other one is Canara Bank. Both the stocks are giving EMA crossover, bullish crossover signal. If I look at the technical setup, both the stocks, PNB is also taking support at the 50 EMA on a daily basis, which is a very nice bullish sign. Plus, if you look at the other technical parameters like RSI or ADX, they all point towards strength in this current momentum. Having said that, I would like to trade this on the bullish side, keeping a stop loss, taking an entry at around current levels and keeping a stop loss of about, let's say 3.5 rupees and a target of about 6 rupees from the current market price.
All right, Amit, what are your views with respect to Power Mech? It's buzzing on the back of an order win today, of course. But what are the charts saying for this counter, and what are the supports and resistance that you're observing?
Okay, let me just have a look at this stock. I don't know the reason, the technical reason, or if there is any news-based, breakout in this stock. But it has also broken out through a downward trending move and with very strong volumes. At 16%, 15% odd, up move on a single day, I would tend to believe that it is, entering after such a strong move could be a little risky. So maybe if there is a dip and there is a reversal there, I could look at re-entering this trade. Though I have not traded this stock, so I would not have a real strong conviction on it. Mahima.
Okay, Amit, I'm coming in on one more index, and which is intrigued me today. The strength that the IT stocks have shown from the intraday levels. It was looking flattish while the banks were really piling on until noon. And then there has been a big, nice, remarkable surge here. So wondering if the Nifty IT is set for more, and if there is any specific stock that people can look at to trade.
So, see, as a trend follower, IT and the constituents of IT index, they have all been, trending lower for obvious reasons, for the news that has been driving the markets from the US. I do feel that this seems to be a value buying kind of a move in IT stocks. There has been a basing on the IT index at about 36,000 levels, and we have now seen a nice, up move in this index. If I look at the technical parameters also, RSI is also trying to point towards an improvement in the current trend. So if I had to bet on this index from a value buying proposition, then yes, there are some of the large names which have fallen the most could be the top picks here.
All right, so that's with respect to the Nifty IT and its top picks. But another set of stocks that is in focus today are the gas companies following proposed regulatory changes for transmission tariff calculation norms. Somit brings in all the details with respect to that.
Well, as gas stocks would remain in focus given the fact that PNGRB has initiated this consultation process to amend the existing pipeline tariff. Now, do remember this is a consultation process, so there will be an open house, and most likely this open house will conclude by April. And as per CLSA, the new norms or the new tariff regulations could be formalized by the quarter ending June 2025. And as per CLSA, they're expecting stocks like IGL to benefit given the fact that their operational cost could be lower post the implementation of the new tariffs, and also to some extent Mahanagar Gas could benefit because some cost benefit could come in for Mahanagar Gas as well. They are also saying that this would lead to higher pipeline tariffs for GSPL and GAIL from the current tariffs that they are incurring, and at the margin this could lead to a small hike in cost for other gas users, which are the industrial gas users. So that could be marginally negative for Gujarat Gas because that company generates most of its income from selling gas to industries. Now, as per Morgan Stanley, this proposed regulatory changes could increase the gas penetration in the country. Currently it's at around 6%, and India is aiming to increase this to around 15%, and this regulation could lead to that number going forward. As per Morgan Stanley, they are saying that these regulations are positive for transporters and upstream producers, and this will lead to normalizing returns for city gas distribution companies and for Petronet as well. They're saying that GAIL, Oil India, Reliance Industries stands to benefit the most, followed by GSPL, and they're saying that there are 4 proposed changes that could lead to higher pipeline tariffs, and hence it is most beneficial coming in for GAIL and GSPL. Now, GSPL had recently also seen a cut in their pipeline tariffs. So if this new norms get implemented, then the tariffs could be on the higher side, and hence GSPL also stands to benefit. Lastly, Morgan Stanley says that they believe that the proposed changes are part of the regulatory efforts to implement the One Nation, One Grid, One Tariff framework that were proposed by the government multiple times. In fact, post this proposal that has come in by PNGRB, Citi has also come out with its note on GAIL and GSPL, where they have initiated a 90-day tactical buy on both the stocks, and they are positive on both the stocks on potential higher tariffs that could come in. Citi has a buy rating on GAIL with a target price of 265, while on GSPL they have a buy rating with a target price of 370.
Well, a few questions to Samit, thanks for that, but a few questions to PNGRB as a result of this, and Mr. Gajendra Singh, member of Petroleum and Natural Gas Regulatory Board, joins in right now to talk about some of these aspects. Mr. Singh, great having you. Thank you so much for taking the time out. You would have heard my colleague Samit as well just a minute earlier, but just wondering, the proposed regulations, right, that have been coming, I mean, and people expect that these will be formalized by maybe end June or thereabouts. Any timelines to these, and why have these been proposed in the first place, sir?
Our primary focus is how we can increase the gas usage in the country. Because what we see that in CGD, the volume is growing in CGD at the rate of 11 to 12%. And on the other side, what we see that the CGD entities, because the source are towards west coast or the east, and once the volume reaches to them, the tariff is different. Like for CNG, PNG, if you see, for CNG, PNG, the tariff in Zone 1 is say 42 rupees, Zone 2 it is 80, and Zone 3 it is 105 plus. So that way it was getting different. So CNG particularly and PNG, that was getting affected with those. And what we see that CNG, that's what we are seeing that a good growth to give that boost to them. We want to now, in place of 3 zone, we want to make it a 2 zone. That is what it is proposed in PCD. This public consultation paper, what we have published, that was to take views from all the stakeholders, whether it is a consumer, whether it is a supplier, whether it is traders, and the exchange and all others. We want to take their feedback. And the primary thing right now, there's 2 tariff that will get in place of 3 zone, it will be a 2 zone. And the tariff which was there at 105, it will come down to a little bit to 90s. And the Zone 1, perhaps it may increase little bit. And Zone 2 remain the similar band. So now what we are seeing, two tariff will be applicable. And going forward, we want to make it a 1 tariff for entire country. So as from any source, if anybody wants to take a gas, so it should not be like for consumer, they have to pay different tariffs. So that was the prime objective for this thing.
Mr. Singh, by when do you envision that to happen, part 1? And can there be any business discrepancies that could come in for any of the existing players as a result of these long-term measures? They must be taken with the right intent, but does any business get disrupted of any of the participants? Are you inviting consultations or queries from the impacted parties, if you will?
Yeah. When we have, normally what we see, I know our experience is when we call for public consultation, normally 35 to 40 entities do participate, and they give their views depending upon how their sector is going to affect and how they are going to be impacted. So based on that, then we'll take a final decision. Board takes a final decision based taking into account of all those suggestions. But what I'm saying, like if because your colleague in our opening remark was suggesting something, but what I'm saying, the consumer which were there in the Zone 1, say in Gujarat and Maharashtra, it's not that they were paying only the Zone 1 tariff, because if the volume is traveling from KG-D6 source, so for them reaching up to the west coast, it was that price was in Zone 3. So they 30% of the volume which is being used in Gujarat or other 20% in Maharashtra, that was coming from that. It was falling in a Zone 3 because the volume is transporting being from KGD6 to the west coast. So it's not like that the consumers which are near to source, they were paying only Zone 1.
Sure. Okay. Can I, because a lot of our viewers would want to know what is the impact on the related parties, right? So one, what's the, let's say, if I can, let's choose GAIL or Gas Authority of India. What's the tariff impact on GAIL, sir, as a result of these proposed changes, if any?
Yeah, definitely. Tariff will, for some entities, it will increase definitely, but where they were getting a, say suppose same entity, they were supplying a gas to Zone 3, where they were getting, say 106 rupees. Now it will come down to, say suppose 92 or 93, whatever it get finalized. So that way, it's not that finally it will get averaged out all across. And Zone 1, which was paying currently, say suppose 42 rupees, it may increase, say 50 rupees. For all across CGD, all across country, it will be only 50 rupees will be applicable if it get decided at 50 rupees. But all those numbers will get decided based on the suggestions and based on the feedback we received from the industry.
Okay. I mean, I heard you start off this conversation talking about city gas distributors. I would love to know what's the impact on them. How do they get, how materially do they get benefited with this?
Like the entities, like if you take IGL, currently they may be paying 82 rupees for their transportation tariff. Now, if it get decided, Zone 1 tariff will be say around 50 plus. So they have to pay only 50 rupees for the transportation. So particularly their tariff from what they were paying 80, what they are paying currently 80 plus. So now it will come down to 50. Similar way like Uttarakhand, Himachal and all far-flung areas where we go for J&K, Jammu and other places, which was far distance places. It will now, they have to pay for particularly CNG, PNG, they have to pay only the Zone 1 tariff. And Zone 1 tariff, particularly it will be 50 plus rupees.
I have one final question, Mr. Singh, and that is whether any representation, any request to the government on bringing gas under GST?
No, we keep on, whenever we discuss, you know, that is a government decision. Government have to take a decision. They may be waiting for the right time. But whenever we discuss, yes, this is a level playing field. If we have to see that if it comes under GST, because at VAT in different state, it is different. So it is basically somewhere it is 40% of the tax impact. So that is something which is not directly under PNGRB. But whenever we discuss, yes, we keep discussing all those things with the government, and government is also very actively they consider all those things. But let's see how it get finalized that it will come under GST.
Got it. Okay, Mr. Singh, thank you so much for taking the time out and being with us and giving us these explanations. Really appreciate your time.
Thank you very much for having me.
Yep, you know, oil and gas players in focus. And before Mahima has a set of questions, Amit, I have a couple of questions for you. One of them is on these city gas distributors. Amit, can you hear me? My question was on city gas distributors.
Sure. So
IGL, MGL, Gujarat Gas.
Yeah. All right. So let me just have a look at them. Yeah, I mean, these are fairly sideways. I mean, from a technical standpoint, I don't see any major moves happening in these counters. I would like to stay away from them. There could be a slight, up move in these, considering that the overall market is also giving some sort of a bullish move, and the news is also there. I would like to stay away from them because from a technical setup, they do not seem to offer any kind of clear trend for me.
All right, Amit, as per what Soumit was saying, GAIL and GSPLs might have the most, impact of this entire thing playing out. What are the charts saying about these two counters?
If I look at GAIL, this is slightly more positive as compared to IGL and MGL. So if I had to take a bet, I would take a punt on GAIL, because it is now moving above all the important averages, and also it is trying to show some bit of strength in this kind of momentum. So I would like to, if I am asked to take a trade on the gas distribution companies, GAIL would be the top pick here with 182. If I were to enter at the current market price, I would enter GAIL at the current market price, keeping roughly about 7-8 rupees as my stop loss.
All right, and Phenolix Cables is one of those counters which is really picking up in trade today, and it's been up around 18% in the past 5 days. The 14% gains today itself on the counter. Couple of news coming in with India imposing anti-dumping duty on certain China goods is positive for this counter. How are you viewing the charts for something like a Phenolix Cable?
So if I look at the charts are fairly negative, fairly weak. This has been in a downtrend since last 6-8 months. So technically speaking, this could be looked at a value buying proposition with 930, 860, 850 levels as the low. So and today the move today is kind of giving a breakout over the 50 EMA, which would give me some bit of confidence that the trend could possibly sustain. So what I would like to do is I would like to go long in Phenolix Cables, but because this is a news-driven counter and the news flow has been positive and negative on both the sides, right? So I would keep a very strict stop loss of about 50 rupees. So if it is 960, about 910, 900 rupees and below, if it trades, I would like to exit or trail for 1:1 kind of a gain.
All right, Amit, thank you so much for giving us those insights, and thank you so much for taking out time and speaking with us at NDTV Profit. All right, with that, let's shift focus to the Motilal Oswal conference. The chairman and co-founder Ramdev Agrawal is bullish on banks while speaking to NDTV Profit in an exclusive conversation. He said that banks are the flavor of this season and their asset quality has been the best in a lifetime. Listen in to a slice of that conversation.
Yeah, too early to say the decided trend, but we can clearly see the financials, particularly led by banks. That seems to be the flavor of the season, and it had to happen because what brings you for the first round up to say 25, 26 on index? I think banks were ignored for whatever reason, credit slowdown, NPA cleanup, and all those kind of things. Now everything seems to be falling in place for banks. Banks are being encouraged to give more credit. Credit flow is going to increase. Liquidity is good. Rate cuts are in offing. Balance sheets are very, very clean. I mean, except for one or two here and there, I think the credit cost is the lowest. The asset quality is the best in the history. Even for the PSU banks, I think the provisioning cover is like 80-90%. So I think this is a great time if credit flow increases to 14-15%. I think you'll see very good return from the banking stocks. Because not only there is going to be earnings growth, there is also you can buy them at reasonable price. This is the only segment where everybody agrees that though it is very large segment of the market, this whole market for whatever reason, high quality companies, high quality banks, very clean balance sheets, and available at sub 20p. So I think this is the start of the new wave in the market, and here it is led by the banks.
Mr. Agrawal, good morning and thank you for speaking to us. You've always taught us that the bottom belongs to the person who stayed invested. Now, assuming that people stayed invested, and are reaping the benefits right now. Would you believe this is the return of the uptick, or is it difficult to say because the street is divided between this being a scared cat bounce versus a sustainable up move?
Neeraj, who knows all these kind of things? I mean, you stay invested, remain invested. Markets have, see, fundamentally, this time the market doesn't have a problem of earnings crisis.
Right.
Earnings remain stable. Okay, it grew a little slower than the trajectory growth rate. Say, we were expecting about 12 to 15% kind of growth. The growth turned out to be 5-6%. But per se, the earnings remain solid. It is a multiple which is a problem. So multiple was said 23-24. That has come down to 20-21. So it's a much more manageable. When earnings are not there, you don't know from where the earnings will come. But multiples, I think you can be a little lower, little higher. So my sense is bulk of the correction is done, and now I mean, have we hit the bottom and it cannot go down? I mean, a lot of geopolitical things are there. April 2 is becoming a big watch day for the global equity markets. What is going to come out from US, we don't know. So I think we are going to have a lot of these kind of I mean, big ticket events which are going to come. But on the whole, I think Indian markets, Indian corporates have shown resilience, and I would think that broadly next year's earnings are not going to be impacted by whatever comes on April 2nd. So, and then even the US market guys, they are sitting on cash, a lot of cash, and they would like to diversify a little bit. So my sense is that we are, on the whole, we are in a slightly warm environment for the time being.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings, and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
Welcome back. You're watching India Market Close, where it's that time of the show where we bring in my colleague Somit Sarkar, who will join us with all the chatter from the dealing room. What did you find today, Somit?
Well, multiple news flows that we are listening by. Firstly, it's on persistent system, like all the entire IT pack is up in trade today, but persistent system, specifically what I'm hearing is that there are multiple buy flows coming in or buy orders coming in from domestic mutual funds. So keep an eye out for persistent in trade. Apart from that, NCC is one stock that multiple dealers are pushing the stock aggressively. They're expecting multiple order wins to come in going forward, and there's a valuation comfort also that kicks in for NCC, and hence that stock is also on dealers' radar. Third stock on the list is Zomato. Now there was a large FII buyer on this for this stock, and the buying of that FII has now ended as per dealers, and large HNIs have now started to sell this counter, and hence we are seeing this selling pressure. The stock is down 2% in trade. Fourth stock on the list is Titan. What I'm picking up from dealers is that their channel checks are indicating that March sales has been quite weak, and hence we are seeing this kind of a selling pressure when it comes to Titan stock as well. And fifth stock on the list is Apollo Tyres. Now we have seen a sharp spike coming in on Apollo Tyres. Dealers are indicating that there's some potential corporate development that could come in, some restructuring of the European business is what the street is expecting from Apollo Tyres, and hence we saw that stock gain nearly 2%. If you see the chart, it has spiked nearly 1% in trade in between. Yeah, see, you can see that move in the share prices. It has spiked nearly 2% on the back of this potential development that the street is expecting.
All right, thank you so much, Somit, for bringing that to us. With that, let's also welcome in Aditya Shah, founder at Hercules Advisors, and Hemant Kapadia, who's joining in from DR Choksey Finserv. Welcome to both of you, gentlemen. Aditya, I'll come to you first. Zomato is one stock that he mentioned. What are your views like? There was some levels, if I'm not wrong, that were being discussed earlier. I don't remember the levels exactly, but what are your views with respect to Zomato?
So a couple of things on the food delivery platforms per se. I don't have a positive view on the hyper delivery that these guys are really taking on. I don't believe nobody knows who's going to win per se on the hyper delivery. Will it be Blinkit? Will it be Zepto? Will it be Swiggy Instamart? Who's going to really be? I've seen that the Zomato founder has said that that Blinkit is losing much less money than what Zepto or Swiggy Instamart are doing, but that's not a clear answer as to who is to win the first point. The second point as well, the food delivery business will be just as the cell phone business. It is going to be a monopoly of two companies, Zomato and Swiggy per se, and these companies are going to make a lot of money over the next 5, 10, 15 years on the food delivery business per se. So the food delivery business per se is the place where I am very bullish on, but I am very skeptical on the fact that how these companies are going about their quick commerce business. I think one of Zomato or Swiggy is going to lose out big time on the food on the hyper delivery business per se. Within Swiggy and Zomato per se, I'm positive on Zomato because Zomato's efficiencies are far greater than what Swiggy's are. So positive on Zomato, lesser positive on Swiggy, but both of these companies will continue to do extremely well given the fact that they are in a monopoly of their own in the delivery.
All right, and Hemant, your view with respect to Titan, because last week the stock did see gains, but today it is under pressure, and as Somit rightly mentioned, it could be because of March and sales. But what are the charts saying about the counter?
A very good afternoon to you, Mahima. Thank you for having me on the show. It's a pleasure. We've walked into a corrective phase of a greater degree, Mahima. If you go back a little bit on the longer term charts, okay, market peaked in September end, Mahima. But if you look at it, Titan has peaked in January of last year. So frankly speaking, it's almost 1.25 years and we haven't done anything much. So frankly speaking, it doesn't look like doing anything spectacular. Having said that, it's oversold on the shorter term charts. I believe a short term bottom probably has been made. For a confirmation of this, we need a close above 3200, which is a swing low resistance point and a higher top, higher bottom scenario if we close above 3200. So I wouldn't be too bearish from a near term point of view. If I take a longer term point of view, it's going nowhere. And looking at the charts, I don't think it's going anywhere.
Okay. Well, Hemant, good afternoon, and just wondering what's your sense around the indices per se, because there has been a rally that has happened already. From these levels, are you inclined to take any long trade on the Nifty Bank, or maybe the IT stocks because they've staged a remarkable intraday move?
Hi, very good afternoon. I think 23,400 was a level which I thought we would have stopped a bit to consolidate. That's not happened. 23,800 is the next level, and that is significantly significant. So I believe I would wait a bit. If I was going long, one would be very selective. But IT as a pack makes sense because that was the only thing left. Next is the FMCG. Because it's like musical chairs. Every sector gets pulled every few days, and see, it's a pullback. I don't think this is a rally. It's a recovery. It's too fast to sustain. But yeah, IT makes sense. Deeply oversold, whether it's TCS, you look at Infosys, Wipro, Tech Mahindra, the entire gamut, the bigger one first and then the mid cap one. So IT makes sense to take a contra buy trade now because deeply oversold, positive divergences, crossover buys at support levels. Everything seems to suggest less to lose, more to gain by going down.
All right, and Hemant, what are your top picks for the day?
Okay, top picks is firstly a buy call on Infosys. Neeraj spoke about IT, so I have to respect him and give a buy call on IT. So a buy call on Infosys at 1605, stop loss 1580, target of 1655, risk reward ratio 1:2. Secondly, a buy call on ACC is looking good. It virtually fallen off a cliff from 2,800 odd to 1,800, that's 1,000 points. We not only have formed a short-term bottom, I believe we are in the process of forming a medium-term bottom also. So buy an ACC at 1935, stop loss 1905, target 1995. It's a modest target, should get overshot. And I still remain positive on the Adani pact. Last week I told Neeraj, buy Adani basket. That buy still holds. If there's a decline, add more.
Even if you keep on giving respect to things that I ask you about, I think you'll have to buy the whole market at some point of time. But thank you so much for trying to consider to do that. I'm inclined to ask this to you also, Aditya. I mean, IT, but a remarkable intraday move today.
So Neeraj, in the shorter term, it's a short-term move, as Hemant was also saying. One or the other sector continues to keep bumping up. In my opinion, this whole 2025 will be remaining very difficult, in the sense that market will try to figure out what Trump is really doing and how Trump policies are going to move. And does any of Trump policy add escalation to cost of doing business for all of these IT companies? At the same time, as I've already continued to keep saying, that though these companies are a little bit expensive, the mid-cap IT looks really very strong. Companies like L&T Infotech, Mindtree have taken a severe correction, or L&T Technology Services. To that extent, KPIT is also another one which looks really very interesting. Or to that extent, Tata Technologies as well, which has corrected 50% from the top. So these companies look really very interesting. However, you must be an investor in these companies for the longer term, because 2025 and maybe some part of 2026 could also remain very difficult, post which these companies could start to do deal.
All right. The stock of the day today definitely is Power Mech, and this is on the back of an order win that it is received from BHEL, which is roughly for 570 odd crores, and the stock is up over 15% in trade today on the back of that. We have Varsha joining us with more details on that.
Yes, thank you for that. So yes, as you rightly said, Power Mech is buzzing on the back of order win from BHEL of rupees 579 crore, which needs to be executed in next 32 months, and the order is for civil structure and architecture works. If I were to talk about the current order book of the company, they've secured orders worth 4,242 crores till December 2025, and the order backlog as of December 25 stands around 5,915 crores. They are actively pursuing tenders targeting 3,000 crore in new orders by March 2025, and they've also declared themselves as L1 bidder for Deoghar bypass highway project, which the value of the contract is 973 crore. They also gave a target revenue. So for FY26 they are expecting 7,000 to 7,500 crores of revenue, and by FY27 they are expecting 9,000 crores of revenue, and they are also expecting EBITDA margin to increase 0.5% year on year over the next 2 to 3 years, and also they have a aim of reaching 1.5% at peak capacity, and they're also focusing on profitable orders when it comes to O&M, that is operation and management contracts, to improve margins, which will help to improve their net profit margin, also simultaneously EPS for the company. Lastly, if you see, they anticipate significant growth in power sector, which is driven by upcoming installations and infrastructure projects.
All right, Varsha, thank you so much for giving us those details and breaking them down for us. We also have Siddharth Khemka, Head of Research, Wealth Management, Motilal Oswal, joining us now. Very good afternoon to you, Siddharth. How are you viewing something like a Power Mech?
Good afternoon, Mahima. So, unfortunately, we don't have coverage on Power Mech, but what we are seeing is that towards the end of the financial year, there is definitely a pickup in the ordering activity, which was missing in the last few quarters. And I think that is helping improve the sentiments for capital goods space as a whole. So overall, I think on back of the strong order inflows, sentiments have definitely changed in favor of some of the capital goods names.
Okay, and Hemant, with respect to the charts, how are you viewing them?
Okay, if you're talking about Power Mech, decent term, medium term, bottom, we saw an upward bar reversal coming in a few weeks back. Obviously, there's a bullish gap. Everything is hunky-dory. I'm not sure one needs to chase it at this point in time. but short-term bottom made, medium-term bottom also made. So I would say even from a slightly trading point of view, we've gone from 1700 to 2550 Mahima in a matter of 4 weeks. I'd wait for a small cool off to come in sub 2350 before venturing going long.
Interesting. You know, the other aspect, and we're just about to start a European conversation as well, but Aditya and Siddharth, of course, welcome to the show. But Aditya, this question to you, and then of course, a bit later on the show, we'll ask Siddharth Khemka about what is the feedback from the ideation conference, which of course we are bringing you a lot of details on NDTV Profit. But Aditya, to you, the whole piece around European expenditures moving up because of the stimulus that they are giving and the resultant impact on one particular sector, which is cap goods and auto components, both of which have a terrific presence in Europe directly and through exports. Any thoughts, any company that you've researched which you think might benefit from this?
Neeraj, one of the companies that we hold is RSCL Geartech, and that company exports nearly about 70 to 80% to Europe. Mind you, the company's reported massive slowdown in order books in the US. They've also reported that EV investments that BMW, Mercedes are doing are slowing down. So the short-term move of recovery is on the cards in the entire European sector. Over the last 6 to 12 months, there has been a slowdown, and there will be a sharp recovery in particularly the auto component side of the business for the next 6, 12, 24 months. And that's what we've been learning from the management when we are talking to them. So Europe has seen a really rough patch, and I believe that they will recover over a period of next 6 to 24 months. And I am positive on a lot of export-based companies, particularly in the auto sector, companies like Sona BLW or companies like RSCL Geartech, where they export good quality materials into the US or into the European sector.
Okay, well, let's get in a global voice on that note. Gustavo Medeiros, he's head of research at Ashmore Investments and joins us right now on the show. Gustavo, good having you. Thank you for taking the time out. And I dare say, if people thought that 2025 was yet another year of US exceptionalism, Europe is proving that wrong. Now, how constructive are you on what European indices would do or what have done till now and will do for the rest of the year based on all the capex plans that are coming in from Germany predominantly, but from the other countries as well?
Yeah, thank you very much for having me. It's a pleasure to be here. I think 2025 is a year, it shows us that you got to stay humble, right? Many of the the thesis that the American exceptionalism would continue forever has been challenged initially on capital markets due to the uncertainty in regards to the US policies. And then also the geopolitical turmoil that the new administration in the US has thrown the world has really galvanized the Europeans to move in a much bolder way than perhaps people expected. I think it was relatively well flagged, and you could see that by how European assets have been performing since last October, that Europe was moving away from its fiscal austerity. Germany in particular was moving away decisively. But I think that the magnitude of the impact and how quickly they managed to actually get the consensus for a 1 trillion euros fiscal stimulus that was approved shows us that has been partially due to the fact that there was this geopolitical tectonic shakes shifting. So that's nothing short of historical a change in Europe policy, and I think global portfolios are yet to global portfolio managers and global investors are yet to acknowledge these historical shift in portfolios, and that's going to have profound effects in global asset allocation, particularly as investors will have to diversify away from overbought, overly owned US stocks into the rest of the world, with implications beyond Europe into emerging markets, including India.
All right. Gustavo, Trump has kind of indicated that he will be flexible with the tariffs on, which are to be implemented on 2nd of April. How are you reading this, and how do you expect global markets to react to that?
I think tariffs, there are three broad objectives to them. This is what Trump, Bass, and other people are saying. It's an instrument to raise taxes. So think about it as a VAT, where foreigners pay part of that. Is also an instrument to get better reciprocity in terms of trade and get national security dynamics in favor of the United States. And thirdly is a negotiating tool. So what I'm expecting from the 2nd of April is mostly on the first leg of these three-legged objectives. So there will be some higher tariff element to the to tariffs will increase, and there we should expect, even after the end of the tariff war negotiations towards the end of 2025, higher levels of tariffs. Again, I don't think that's going to be a game changer. I think the market has anticipated that. If you look at the dollar index, for example, it rallied from 100 to 110 after the Trump got elected, or before we thought that Trump would be in power to after the election. And we're back now to 104 levels, 103.5, 104 ballpark. So I think that is already pricing in some kind of manageable tariffs, something between 8 and 12% overall increase in tariffs, which after substitution effects could actually have a relatively mild impact on CPI depending on the way it's done. So in April the 2nd, we're actually going to know a little bit more about, I think in my view, the first leg of this tool, of this three-legged kind of like approach. But there will be some noises most likely coming as Trump tries to get further concessions away from different countries, particularly China and perhaps European Union. So I'd expect to see a jittery year in terms of 2025 performance.
Okay, just one quick follow-up there. So did I hear you straight that it's a jittery performance for markets for 2025, or are you bullish on Europe markets from here on for the rest of the year?
I'm bullish the rest of the world against the United States, but I think that the U.S. stock market peak is a process similar to what we've seen in 2022, perhaps, and that's going to be, it's likely to be a multi-week, multi-month process that we're starting to see. So I'd expect to see more bouts of volatility hitting markets in 2025.
Yeah, well, when the largest market goes through that, certainly there could be pain. Gustavo, I'm tempted to ask you before we wrap up very quickly. Do you look at India at all?
Absolutely. India is one of our main markets. Yes, I think structurally we're very, very bullish in India. It's perhaps the market with the most structural catalysts for an ongoing performance. But I have to say that within the last 24 months or so, before 2025, we've been having an underweight position in India on a tactical basis because valuations run ahead of themselves. And there was a big theme of people having zero exposure to China and having a lot of their portfolio in other countries, India being one of the deepest and most liquid market that you have alternatives, bringing this combination of locals and foreigners that were very, very bullish into the stock market. Now, more recently, we've reduced some of this underweight exposure over the last couple of weeks and months, to the extent that stocks traded at more reasonable level of valuation, particularly when you look at small and medium cap, small cap stocks, for example, traded pretty close to the average over the last 10 years, even though the average over the last 20 years is still one standard deviation expensive. But so, in a nutshell, we like India structurally. We think we're going to use more of these volatile market conditions in 2025 as opportunities to add into weakness in Indian stock markets vis-a-vis other emerging markets. But it's a position that have been holding a tactical underweight for a while. So that sell-off and relative correction between India and other emerging markets was welcoming for our portfolios. And I think it's healthy for the long term of the capital market development within India as well.
Certainly. So, but tactically allocating to India, and I presume, Gustavo, Indian small caps. You find opportunities, selective opportunities that you find, you are looking at the small cap space as well.
Actually, Indian small caps are still overall relatively cautious, to the extent that, again, valuations are still relatively expensive. So we've been adding exposure more recently on the larger cap companies and names that have a higher beta effect. So we've seen the Nifty 50 today wiping out the losses that it had accumulated in 2025. And this relief rally, this rebound that we've seen was what we're actually trying to capture. And to that extent, you have actually better instruments, more liquid instruments to capture this rebound. I would cautious, the fact that we've having a strong week as we had last week, for example, and kind of like, the magnitude of the relief rally comparable to 2022 being something that one has to bear in mind when making asset allocation decisions. These, again, when we've seen relief rallies that are that vicious and that aggressive, that is less welcoming than a slow recovery from a bottom. That is what we like to see to actually call for a permanent bottom, right? So we're still not very, we're still cautious of companies that trade at very expensive levels of valuations. So I just mentioned the overall small cap and medium cap that were insanely expensive, trading at much more reasonable levels of valuations, but still tracking on the expensive side.
We'll leave it at that. Thanks so much. Have a great day ahead. Much appreciated.
Thank you. My pleasure.
That's Ashmore with their view. We need to slip into a break, but our guests are waiting, and we still haven't. I still haven't asked a question to Siddharth as well. There's a conference going on. Would love to get feedback from there. And of course, both Hemant and Aditya stay on as well. Gentlemen, we need to slip into a quick commercial break, commercial obligation, so excuse me for that. Be right back and continue our conversation.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up. in the breading also. You have to come down. So the correction.
Welcome back. You're watching India Market Close. Siddharth, I'll quickly come to you. We were just discussing that the conference is going on at Motilal Oswal. What are you picking up, and what's the interesting thing that you came across today? The most interesting thing, of course.
Yes, the conference is going on, and we'll meet end of the day to collate all the tidbits from the conferences to understand what exactly is going on and what is the mood and feedback. But definitely, I think a lot of interest is there on the greater consumption theme this year. So a lot of interest is there. Be it so we have ID Fresh, which is in the unlisted space, where there is a lot of interest. We also have the Radico, Khaitan, Tilak Nagars, the likes of those beverages companies, where again a lot of interest is there to meet within the consumption space. There are few hotels, Lemon Tree, Juniper. There again we see a lot of interest. Some of the QSR names. Plus the retail names. I think those are the themes where a lot of interest is there. Apart from that, I think one more segment where a lot of interest is that we are seeing from investors to attend the meetings and get market management insights is the recycling, or you can say the environmental related companies, be it Gravita, be it in the unlisted space. We have Sri Chakra Polyplast, where again there is a lot of interest, Ganesha Ecosphere. So overall, a lot of interesting ideas in this time where market has corrected. A lot of mid and small caps have come down, and there definitely seems to be a concern with regards to the growth, because valuations have still not come down, and that is where a lot of questions are being asked to the sustainability of the growth. Given this the global environment and the impending tariff, how the companies could get impacted, or how they are positioned in this environment.
Okay, point well noted. Well, this rally notwithstanding, a clutch of stocks that we've marked which are doing so well. Amongst them, the amine stocks are really shooting up in trade. Himen, Alkyl Amines, Balaji Amines. Any thoughts here?
Anirudh, without doubt, Alkyl Amines. Okay, it's moved. It hasn't moved. It's rocked. If it's 11% up today, it's sort of scary if you want to go low, or if you want to go long over here. But if you notice, Neera, this has been corrective since ages. If you look at Alkyl Amines, we have peaked at a high of 4749 in July 21. Now this is 4 years and counting, Neeraj, and deeply oversold. Great company. Downside appears limited. Okay, we are coming to the end of this month, so it's on the verge of giving an upward key reversal on the monthly chart. There is a virtual, I wouldn't say roadblock, but a strong resistance level at around 1800, 1820, Neeraj. I believe it's on the verge of taking that out. That happens, we're looking at a medium-term bounce, probably another 10% from here at least.
Okay, Aditya, very quickly on the pipe companies, all of them seem to be doing very well today. The PVC pipe companies. Any thoughts here?
So, Neeraj, I will be very cautious on the pipes companies as well. We've seen that the valuations across many of these companies continue to remain a little bit expensive. So I will wait and watch when the valuations become cheaper. Then I will try to add in this.
In fact, on our bull versus bear segment, we have Finolex in the spotlight as well, and Puneet Johnson to talk about the increase, or Puneet, dare I say, a very strong intraday increase after a 3-day decline, but then a pullback as well.
Well, definitely, and one of the key reasons for this pullback might be some of the more finer print of the import duty as well as the restrictions. So let's look at the first bull and bear case for Finolex, and then we'll just take a minute to explain what has actually happened. So India has, of course, imported an anti-dumping duty on Chinese PVC paste resin. Now that is separate from the PVC resin that is used specifically for manufacturing pipes, which players like Finolex, Astral or Supreme do. So it's not specifically on the raw material that is used for the piping companies. It's on the PVC paste resin which is used for, across the board, or like gloves, for toys, basically essentially the softening and using those materials. So it's separate from the PVC resin, and hence that could be one of the key reasons for Phenolics Industries falling from the highs, because it couldn't be directly benefiting the pipes business but the PVC resin business. Now essentially PVC paste resin is made from PVC resin, and hence while there is a restriction of import of PVC resin and the paste, essentially that could benefit the second and the smallest segment for something like a Phenolics Industries. And while that clarification has been there out in the media since Friday, I think currently traders and investors are taking notice of that aspect. So essentially, just to be clear again, it's on the PVC paste resin and not on PVC resin, the import duty, and hence might see some pullback as well. When you look at the second bull and bear case, is of course the resin volume. Now that is a smaller segment for the other players like Supreme and Astral, but it almost forms roughly about 30 to 40% in terms of revenue, and that has grown over the last 2 quarters specifically for Phenolics. But on the other side, the pipe segment has been lagging, and the EBIT per kg almost fell by 60% in the Q3 of FY25 and compared to the same time last year as well. Let's look at the third aspect, which is the appointment of a new MD. Now they have made that change here. New MD comes in, Mr. Saurabh, for the next 2 years specifically, but they've lost a company veteran here in Mr. Ajit Venkatraman. He's been speaking to us over the last couple of years, so definitely the management change is something to watch out for. And finally, in terms of valuations as well, currently trading at the lowest versus its other peers at 20 times price to earnings, but better inventory management for Supreme as well as Astral, which we've seen over the last couple of quarters just because of PVC volatility. That could be something that's been weighing on the valuations, as well as the capacity that Astral and Supreme have developed over the last few years. I just want to highlight a couple of more points here specifically what this particular PVC resin might be benefiting players specifically like Astral and Supreme. The PVC segment forms a material aspect for Phenolics, and hence that is one of the key aspects, because for players like Supreme and Astral, the PVC resin segment is quite smaller, so hence there is a slight benefit to Phenolics shareholders, but overall it's smaller in the mainstream. And the BIS quality standard is something which is yet to come in June of 2025, so it might not be a bull case as of now, but will be in the future. It has been delayed, and hence we're seeing that kind of EBITDA erosion. Lower price volatility in PVC prices, it's not a bear case, it's something that could be watched out for going forward. So essentially there are multiple valuation triggers on the positive side, but the business fundamentals might be a little shaky for Phenolics Industries compared with its peers.
All right, Puneet, thank you so much for breaking that down for us. Siddharth, Phenolics, Supreme, Astral, which one would you pick? Because right now, as he mentioned, valuations for Phenolics are definitely cheaper as compared to its peers. But overall, with respect to outlook, which of these counters do you like?
So, Mahima, if you look at fundamentally, the discount is because of the weak fundamentals as well as the weak growth that the company has delivered in the past. And I think in terms of growth, Supreme and Astral, they continue to report strong numbers, at least in terms of the industry growth that they are reporting. And margins are also better compared to Phenolics. I think clearly in between the three, we would prefer more Supreme Industries followed by Astral and then maybe a Phenolics.
Right, so that's the view with respect to where pipes are concerned. But let's also shift focus to the banking space. Kotak Mahindra Bank on Saturday announced the appointment of Bhavnish Lathia as its new chief technology, and this was effective immediately. My colleague Vishwanath joins us with more on how this new appointment will shape up the management.
So shares of Kotak Mahindra Bank rose nearly 5% on the bourses on Monday. This was primarily after the bank came out with a notification on its exchanges about a slew of management changes at the bank, the most important of which is the appointment of Bhavnish Lathia as the CTO, or the Chief Technology Officer of the bank. Now remember that in February, Milind Nagnur, the CEO of the bank, had quit, citing personal reasons, saying that he wanted to move abroad, so he could be with his family at that point in time. And now Bhavnish Lathia is coming in to join that position. Bhavnesh has been at the bank since 2022. He was appointed the head of consumer experience as well as customer technology at Kotak Mahindra Bank, and now he will take over the broader technology piece at Kotak. Now remember, the technology piece is actually quite important for Kotak Mahindra Bank because only recently the Reserve Bank of India had removed the restrictions on Kotak Mahindra Bank to issue fresh credit cards or to onboard customers through the digital means. This was placed last year in April, primarily because the bank's technology initiative or the technology position at the bank was not so great. According to the RBI, the bank had been trying to fix that issue, and finally, now the bank seems to have finished it. And about 3 or 4 weeks ago, the RBI removed those restrictions. So now the bank can issue fresh credit cards to customers and can onboard customers using digital means. The appointment of Lathia then becomes that much more important because the technology piece is therefore crucial at Kotak Mahindra Bank. We need to see how exactly Kotak Mahindra Bank is able to turn the ship around and whether the removal of RBI restrictions will have meaningful results for the bank's financials. Remember that the bank will come out with its Q4 updates next week at some point in time. We'll find out whether the asset growth has improved because of the RBI restrictions being removed and whether deposit growth is keeping up with that pace.
Vishy, thank you so much for breaking that down for us. Aditya, I'll come to you. Kotak Mahindra Bank definitely the top gainer on the Nifty 50 as well today, up 4.6% as we speak. What's your view with respect to the new management change, and overall what's the outlook like?
So, Mahima, we've been positive on the larger private sector banks, solely because this year will be very bad from a credit cost perspective for the smaller ones. The larger ones will tide over the storm in the NPAs much better than the smaller ones. That's the first point. With respect to Kotak Mahindra Bank, still too early to understand what the new management is and what the new guidelines of Ashok Vaswani are. So from that perspective, a little bit of cautious there. Over the last 2 to 3 years, the Uday Kotak premium from the Kotak Mahindra Bank stock is wearing off. That is clearly visible as the stock has taken a huge correction over the last 4 or 5 years. Now, as the negatives of the 811 ban wane off and the company is investing heavily in technology, for the period of next 12 to 24 months should be really good for the company. So, pure play, I am positive on all larger private sector banks. The order would be number 1 would be ICICI Bank, number 2 would be HDFC Bank, then will come Axis and Kotak Mahindra Bank.
All right, so that's the view with respect to banks. Siddharth, I'll come to you as well with this question because, you know, we've talked about how banking looks very attractive in this year. What are your views and what are your picks there?
So yes, I think if you look at overall financials, the view is positive in terms of the overall outlook. But in an environment where RBI is improving liquidity, is cutting rates, we believe that NBFCs could do much better. While on the larger banks, we prefer private sector banks where valuations are comfortable. Growth will be decent. NIMs may not expand much from here. Hence, what we like within the larger banks, we like ICICI Bank, we like SBI. These are our preferred banks. Within the, if you look at the NBFCs, we believe again NBFCs will be a key beneficiary in the current environment. Not only the consumer-driven NBFCs are picking up in terms of growth, but again the cost of capital is coming down. Hence, we believe something like a Bajaj Finance could continue to do well. We are also witnessing strong growth in the vehicle finance companies. So Shriram Finance is something again that we like within the NBFC space.
Okay. Well, get ready for an exclusive conversation with the legendary investor Govind Parikh. He is dubbed as somebody who can make the best of bear markets. And Mr. Parikh shared his insight on why keeping cash in the portfolio is critical for navigating market volatility as well. He's crafted an enviable portfolio featuring multiple multi-bagger stocks. In this candid chat, he reveals his strategies for thriving amongst deep market turbulence and his secret formula for long-term wealth creation.
We never invested in companies which we didn't know. So basically, 2008 crash was the worst crash I've seen. In 2008 crash, the Nifty crashed about 50% in 6 months, whereas my portfolio came down by about 75% because the shares we were owning were all blue chip companies, very good companies, but they were quite illiquid stocks.
Okay.
And there was no market for that. When the whole market is in red, nobody was caring for these kind of stocks. So we took a big beating there. Fortunately, we were not borrowed. We never invest in the market.
No leverage.
No leverage. But we took a big beating, and so we held on to our whatever shares we were. And unfortunately, I didn't have enough cash to buy at those levels, which are so attractive. Subsequently, the lesson that I've learned from this crash, the most important lesson is you must have some cash with you. You cannot have everything in the equities for this kind of things to come, and you should also expect the unexpected to happen. So that was a very big lesson in 2008. And after that, we've decided that my son Chinmay is working with me. So we both decided that we should have at least 10% cash in our portfolio.
Even if you like a business a lot, I'm guessing you are saying that if it goes up quite steeply, in a slightly unemotional fashion, you are happy to trim down some of that position. Would that be a fair assessment, sir?
Yes, we do that. Whenever the market goes up crazily, valuations are crazy, and people feel there's no tomorrow. You're not going to get stocks tomorrow, or you have to pay for looking at a share certificate or demat certificate, and when taxi driver is asking you and everybody is asking you kya lena hai. That's the time I think we sell some shares also.
Okay, you do that.
Even the best of the best companies, we sell a little bit.
Okay.
This is basically from risk management point of view.
Got it.
Because the cash collected is always going to be helpful.
A big proponent of value investing principles. But what is Govind Parikh's secret to market mastery?
Asset you have, at the end of the day, it's a paper asset. So you should know exactly to encash sometimes. Harshad Mehta's time, we coined that thing and we put it in our office notice board. Sell, regret and grow rich. Because the way the market was going up, every day you sell, next day you regret.
Do you think the next 10, 15, 20 years are very promising?
I'm very, very optimistic. I think markets can correct, but at a low level, everybody is going to come and buy.
This is an investment wisdom you cannot afford to miss. Watch it only on NDTV Profit.
It's as big a voice as they come when it comes to legends of investing, and Govind Parikh spoke to us, and the whole interview plays out as we said on Thursday. You'll hear snippets of it through the day, but it's almost unmissable really to hear some of these legends of investing speak. We spoke to Ramdev Agarwal earlier today as well, by the way. It was quite fabulous to talk to as well. But in the dying moments of trade, a few points left. Now, Siddharth, I know Mahima asked you about what are the key takeaways from the conference. When I looked at the list of the companies that have come to the conference or have come to the conference, one of the themes that looked quite robust or prominent was hospitality. You guys still constructive there? Are you personally still constructive? Would you invest in a hotel company at these levels or these valuations?
Yeah, Neeraj, definitely. We believe that that's one space in the broader consumer or consumption theme which is still doing well. We remain positive on the entire hospitality space. So what we are seeing is that even Q4 will see a strong exit to the year. Around 12 to 14% growth in terms of revenue per, as well as increase in ARR by about 10-12%, driven by higher occupancy. So those things will continue to help hotels report strong numbers in Q4. In the long term, or you can say the medium to long term drivers such as the improvement in economic activity, industrial convention centers, improved connectivity, that's a big major factor which is helping the hotels. So we are now seeing some of the airports being developed in the tier 2, tier 3 towns with a lot of airlines connectivity. I think that is helping the overall sector, as well as finally you see a favorable demand supply dynamic. So supply has not increased to that extent the way demand is improving, and hence we have a limited coverage in the space, but we like Indian hotels where we have a buy rating as well as Lemon Tree which is our preferred pick, where we see almost 30% upside. We have a target price of 190.
Lemon Tree has come off its day's highs. It was trading around 3% higher. If I'm not wrong, the intraday high was also around 3%, but it's come down to negative 0.7. But with that, we'll let you go, Siddharth, and thank you so much for taking our time and speaking with us at NDTV Profit.
Thank you. Thank you.
All right, Heyman, any, not just the hotel counters, but also stocks that operate in the tourism space, something like an Ease My Trip or Thomas Cook, any of these looking attractive on the charts right now?
Okay, I stopped tracking Ease My Trip some time back. But talking about Thomas Cook, yeah, Thomas Cook looks interesting. It's had a deep correction. Technically, it's cheap. It's at support levels. So I wouldn't yet quantify this as an investment point of view. But yeah, if you're taking a positional trade, looks good, downside limited, a turnaround is in the offing, a base formation is in place, not much to lose. So yeah, something like a Thomas Cook I would prefer over a Lemon Tree, because Lemon Tree is corrective. Thomas Cook is bouncing back after a deep correction.
Okay, and what will be your buy today, sell tomorrow calls?
Mahima, a buy on Bsoft, Bitlasoft at 410, stop loss 406, target 418. Risk reward ratio 1:2, crossover buys, higher tops, higher bottoms. It's a matter of time before these mid cap IT stocks also catch up to the bounce in the mainline stocks, Mahima.
Okay, Aditya, the real estate sector is also doing very well in trade today. There was DLF where there was an analyst meet. Let's also pull up the stock and see what it's doing in trade today. But overall, what's your outlook where real estate is concerned, and what are the counters that you're liking?
So I'm a little bit cautious on the real estate sector now. The upcycle that we've seen in 23 and 24 is easing off a little bit. So a little bit of caution is required. However, within the entire real estate space, Godrej Properties continues to be my favorite pick. Top class brand or top class expansion that the company is doing in Bangalore and in Delhi. The company is also taking measures to reduce some of its debt as well. So from my perspective, Godrej Properties continues to remain the number one pick within the real estate sector.
Okay, and defense has also made a comeback. Any counters that you now think look attractive to buy?
Particularly not, I am negative the defense counters. I feel that the valuations today are still really very expensive. The entire defense pack will now not undergo a price correction, will undergo a time correction. So from that perspective, most of these stocks are really very expensive with the hype around defense. So I'm a little bit cautious on the entire defense pack person.
Okay, and Heyman, anything in the railways that you're liking?
Seeing most of the railway stocks, I mean, I'm positive on most of the PSU stocks, but Ircon International looks interesting, Mahima. It's formed a base of 4 weeks, is now recovering. Looks nice. Ideally, one would hope for a small decline, but that's wishful thinking. But Ircon looks good, and IRCTC is taking it's time to turn longer than expected, but I wouldn't want to miss out on that. So it's Ircon and IRCTC.
Okay, a couple of companies, and I wonder, Heyman, Sansera Engineering, it's gained from intraday lows. Any thoughts on this one?
Yes, Neeraj, turnaround, it's a buy, deep decline, medium to bottom form, heading towards 1350, looks good.
Similarly, DCB Bank or a TD Power?
Okay, DCB Bank would be easy because all banks are looking good. TD Power has moved too much, DCB Bank.
Okay, but DCB Bank looks okay for a trade, you're saying?
Yeah, I would prefer some of the other PSU banks, but DCB Bank doesn't look bad.
Doesn't look bad. You know, IPL, India Pesticides Limited, has fallen from the highs of the day, but still up quite steady, about 9%. So keep that stock in mind too. But a big spike there as well. In fact, 10% up now. Heyman, quick last minute buzzer. Any thoughts on this one?
Yeah, looks good. It's just that it moved from 125 to 158. Give it a couple of days, medium to bottom positive divergence, buy and decline.
Okay, Aditya, since it's a chemical name, I'm inclined to ask you, still constructive chemicals, does IPL fit the bill?
Yes, still constructive chemicals per se. Recovery in a lot of companies is coming about. Particularly, don't track IPL in depth, so not be able to comment on that.
Okay. Okay, and Aditya, what about L&T? You know, today it's received an LOI from the Qatar Energy LNG for an EPC contract. What's the outlook like, and are you positive on the counter?
So if you are positive on cap goods, you have to be positive on L&T. We are positive on L&T. The company has diversified into a lot of businesses over the last 3 to 5 years, and most of these businesses are going to bear fruits over the next 3 to 5 to 10 years. So from my perspective, that L&T has to be the number one pick for anyone wanting to invest within the cap goods space.
Okay, okay. So, Aditya, something that maybe you bought recently or invested into in this fall, wherein you are not thinking about the next 1 or 2 months or 3 months, but you're thinking about the next 3 years, and small sized or mid sized, not large cap.
Yeah. Neeraj, I don't think for the next 3 years, and I think for the next 10 to 20 years.
Okay.
So as I said before as well, a company called RSEL Geartech, it is into it's a small cap company. It is into building of gears per se for large OEMs in Europe, for BMW, for Mercedes, for now they're trying to get into a conversation with Tesla as well. Stock has fallen about 30 to 40% owing to the slowdown in Europe. The company's order books have slowed down, and the company's revenue growth has seen a slowdown in Q3 and Q4 of last year. However, the company is very hopeful that the company will recover sometime in Q1 and Q2. The promoters are really very good. They're really very honest and really straightforward. And there's no hiding from the fact that the company is experiencing a little bit of slowdown. So opening up Europe and the US market for an ancillary will mean a lot of good growth. For the last 5 to 7 years, the company has consistently delivered 15 to 20% growth per se. So this is one interesting stock that people can watch out for. As a disclosure, this is part of our portfolio.
Okay. Well, Aditya, thanks so much for joining and giving us your thoughts as well. Hemant, great having you today. Thanks for being with us.
Thank you.
And with that, Mahima, over to you. And what a good day for the markets.
Absolutely. So the markets are definitely ending on a good and high note. Let's pull up the Nifty 50 and the Bank Nifty as well, and also see how the broader markets are doing. There you go, the Nifty 50 pretty much at the levels at where they were in the start of the show, up 1.4%. The Nifty Bank has maintained the 51,700 levels, up 2.3%, and this is on the back of up moves on both the private banks as well as the PSU banks. The Sensex also closing 1.5% higher. The Nifty also retaining the 23,600 levels. Let's also see the broader markets, the mid cap 150 and the small cap 250. Both have maintained the stance where they were standing. The small cap 250 is up almost 1%, and the mid cap 150 is up over 1%. Let's also pull up the heat map of the Nifty 50 and see what are the counters that are buzzing. Kotak Mahindra, of course, on the back of the management change, up 4.7%, followed by NTPC on the back of a Macquarie note, and some other banking and financial names like SBI, Power Grid, Axis Bank, Bajaj Finserv, all buzzing in trade. Some counters again which are not doing well. Titan, one of the reasons could be what Somit said in the herd of the street segment, that the March sales not looking nice. Trent under pressure, so consumption names are seeing some pressure. Nestle and Britannia also down. Let's also put up the advanced decline ratio and see how the charts are looking like for the advanced decline ratio. The charts have narrowed a tad bit. From the 1700 levels of advances, it has come down to 1400 odd advances. So now there are approximately 2 advances for every 1 decline. But overall, the buying momentum has been maintained, and the streets are on the buyer's side definitely today. Let's also pull up the BSE 500, the NSE and BSE 500, and see what are the counters that have buzzed throughout the day. There's JBM Auto leading the pack, up 17%. Finolex up 12%. Rajesh Exports is seeing gains of over 11 odd %. Gujarat Alkalis up 10%. All Alkyl Amines also up around 9% as we speak. But some counters that are not doing well and under pressure. KC International, after seeing gains in the past 1 week, down by about 4 odd percent. GSL down by about 5 odd percent. Vodafone Idea down by about 3 odd percent. And there's Arkin Chem, Suven Pharma down by about 3 odd percent. But before we end the India Market Close show, let's also take a look at what to watch out for tomorrow. Well, eye on the globe, US flash manufacturing PMI. We'll also see US flash services data coming in. The BOE government barely speaks. The Bank of Japan monetary policy minutes will also come out. So all of these things to watch out for. Domestic and corporate actions. Well, for companies in India, Mishra Dhatu Nigam last day for dividend of 0.75 per share, and KSol's India 7.5 per share. Now shares to exit their exit in terms of their lock-in tomorrow. Transrail Writing will see an exit in terms of lock-in for 2%, and Zaggle Prepaid, big number here, 20% lock-in exit tomorrow, opens tomorrow. In terms of AGMs and EGMs, Castrol India will have it on 25th of March, and Equinox India will also have its AGM. With that, we're completely out of time on this edition of India Market Close, but stay tuned to NDTV Profit for more news and updates on the other side.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings, and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its